Now you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Happy Friday to you both.
Good morning.
Good morning.
Good morning. Good morning. Good morning. Happy Friday to everybody. A little chilly here in Chicago. I hope
got some snow coming too.
Yeah.
Yeah, but a long weekend. Yeah.
That's right. That's our own lovely John there telling us it's Bears weather. You are right, John. Bear weather indeed. 3.5-point dogs at home. Home team dog Sunday night.
I know. I like it. I like it.
If someone gave you a ticket, would you go?
No.
I've been debating this kind of all week. What the price is to go. They've come down pretty significantly. I think you can get in for a couple $100 now.
No, I'm saying if someone just straight up gave you a ticket, but knowing you're going to have to sit in negative temps.
Yeah, I'm saying I'm on the fence, even just buying it myself, let alone giving.
You're actually thinking about going. See, that's the youth of America. You see, you guys are young. You're okay with all this. But let me tell you something. If you do go, I got the gear for you.
That would help. Yeah, you need a lot of gear. I mean, I was talking about it with Clink. You kind of, in terms of seats, if you can get into like the 200/media section seats, you got the overhang, so you get covered for if it snows, and you kind of get, that little bit of a
insulation,
insulation from
There's
the wind.
no insulation except a very large man from Crystal Lake who's next to you.
Well, that's what I'm saying. You get that very large man from Crystal Lake. You get that body heat. You're packed in there. That could be the route. You go. I don't know if I could go like the 300 section where you're
obligated to take your shirt off and stay there the whole game half naked,
and you have absolutely no protection from the
elements,
the wind coming off the lake there. Yeah, I don't know if that.
No, but I've got from my hockey gear. I've got an insulated electric vest.
Oh, when you go to watch Vinnie play hockey, when you say your hockey gear, It's like, bitch, you ain't on skates.
Well, this is like the suburban dad show, the dog show, right? They go to hockey. They show off all the new gear that they bought. Like, oh, I bought this, vest, and I plug it in and it heats up. And one guy's like, oh, I got these cool gloves that have like a shooter in them. Like you could put like a fireball shot in here, or I have these new pants with this cool pocket. That's like, that's the highlight of the weekend is the new gear for the hockey dads.
I mean, my best friend Danielle on Long Island, her son Carter plays hockey. He's great. She's got the same vest, but it matches her Stanley.
You guys say all this now. You say all this now, but if you do end up going on Sunday, you'll want this vest. Okay, I'm telling you right now.
I agree. And even more, you need the full gear. You need the face mask, hats, gloves, double of everything.
I think it's too much for even the vest. I mean, real talk though, Bat.
Oh, I agree with you. You need something.
Yeah, for sure.
Definitely need something.
So what are your plans otherwise, Nikki, for the long 3-day weekend?
Well, it's our very own Mikey Butler's birthday on Monday. So Sunday we're using as both a celebration of hopefully a win, but celebration of a birthday as well. So we're going to...
Please do not damage Gus. I need him for social media content.
Oh, you don't even know. The right when we had Gus and E come on, Vanetta came over and was like, please, like, these are young kids. Don't get them involved in all the degenerate trading. Don't get them involved in all the degenerate gambling and the sports betting.
And your zins.
and all your crazy stuff. And Gus has taken, right to it. He's fully in the zone. He's doing golf DFS. He's betting on random golf tournaments.
He told me he was at Rivers Casino. I was like, Gussie, no.
Say it isn't so.
Our boy has grown up. It's amazing.
Oh, that's so good.
Yeah.
Corrupt.
But you blame me for that. It's mostly
I blame
Mike,
you 100% for that.
You can blame me for like the more normal degeneracy, the trading, the gambling. Mikey gets into the obscure, like we're down the rabbit hole stuff that that really.
There's a great badminton game on tonight.
Yeah, like Gus. I will give Gus credit. He did do daily fantasy on CDL, which is the COD league for COD, the shooting game.
Oh,
The
Call
Xbox
of
game?
Duty. I thought you meant
Yeah, Call of
COD as
Duty.
in the fish. I was like, he's betting on fishing?
No, I don't know. Fishing would probably be better than betting on video game leagues. So he did do that.
Huh.
I'm sorry, Vanessa.
I didn't know you guys got him this way.
Yeah, the influence is too strong. We put him too close to us.
We really did.
Yeah, he's right next to me, so he hears it all.
So,
Sorry.
I just want all of you boys have a wonderful time, but just be careful, okay?
Yes. Be safe. Be safe, as a mother would say.
I think it's funny because like literally on NPR they did a story. So all like I'm not going to say all young men, but like young men are really into like prediction markets and the gambling and the daily fantasy, and they're like women now are taking up grandma hobbies.
That's true.
Knitting and like sourdough bread making. And so women we're just over here chilling, and then men are just YOLOing every last cent that they have.
It's quite the disparity. It really is. I was at a coffee shop. I saw a couple ladies doing the crochet.
Oh yeah.
I guess that's the new thing. I'd rather gamble on Bears Rams, but
Oh my God. I got my Audible summary for how many audiobooks I listened to last year. 145.
how many? That's great.
Yeah.
How many actual books though? Like,
did I read last year
physical
around
back.
43? I read 43
Damn.
physical books, listened to 145 audiobooks.
That's
damn,
awesome. I think that's more
Zero
than
casinos.
$0 gambled, $0 lost.
I think that's more books than my father read when he was at Lewisburg. It's amazing. That's awesome. Good job out of you. You want to know how many books my wife has read since the beginning of, since Christmas?
Yes.
4 pages.
But that was the New Year's resolution, right?
That's a true number. That's right.
Yeah.
4 pages. Yes.
It's a marathon, not a sprint.
Yeah. No,
Yeah.
I get it. Yeah.
Yeah.
But she knows everything now because that was the 4 pages she was missing.
Yeah.
How about you, Mr. Bat? What's on tap? Long weekend. Do you have to travel for hockey, or are you shuttling the kids up to Wilmot? What's the plan?
No, we're home on Saturday, which is good, and then the Sunday Bear game. That's it. Kind of a quietish weekend. Although, Vinnie did pass his license, and thank you to
Oh, I forgot. Congratulations.
Oh my God. I texted him and I was like, congrats, big guy. Like, that's awesome. And he goes, yeah, almost failed it. I was 3 points away. And I was like, what was the problem? He's like, blind spots. And so, we know that that's been a little bit of
it's been a bone of contention for sure.
Yeah, the right of way and blind spots
Mm-hmm.
are the two problem areas for Vinny. Probably the most problematic for you as well, Dad.
Yeah. Yes.
The pedestrian right of way hopefully doesn't send you a hefty bill one day.
Yeah, no kidding. So he was ecstatic. So we got that over with. So that was.
So I have been like far removed from the process. So when I got my license, like you got like the actual card like that day, but like you don't get your like the actual license the same day?
Well, he had his permit. Then you have to have X amount of, since he did it through not through a school or, he's not of age yet. He's not 16 yet. He still has got till the 27th. So you're 11 more days or so. He has to wait. He has to have a certain amount of hours. Let's call it, 25 hours of of instructional with a professional, not just writing it down on a piece of paper. You have to have 50 hours of that. And then you have to have your permit for 273 days. So his 273 days really isn't up until February like 5th or 8th or something like that.
Oh, wow. Okay.
Yeah, so he passed, but legally he doesn't have his license until February 5th or 8th when those 273 days are
Now
over.
I understand.
Yeah.
Okay.
Yeah. For all those at home, go to the DMV right away on your kid's birthday so they can get it on their birthday if that's what you're inclined to do. Otherwise, they're just going to wait like we did.
But that's an exciting time. He's so close. Just a whole world of freedom is going to open up for him.
Yeah. Today. Last night's conversation when I took him home from hockey practice, which he drove to and from, which was quite exciting.
And you're still here. That's good.
And I'm still here. I'm still here. We did stop at a green light. That was an issue. But other than that, we're fine. He goes, "Oh, I was paying attention to somebody on the street or something like that. You told me to watch them." I'm like, "Yeah, but you got to watch the lights too." But that's another story. I know. Because all the cars behind you expect you to go if the light is green.
Yeah,
they're not. Like there's like rules. And then when we got into the parking lot, he was going straight, and there was a car going to come into his lane, and he started to slow down. And I said, "That's okay. I like your idea that you're being cautious, but if you slow down too much, they think you're going to turn or you're letting them in, and then they start going. Like everybody has to learn the rules of the road so that we don't each other." So
I was wondering too, because Gina came over for dinner last night, but we were debating we were talking about stop sign etiquette. Like if you're at a four stop sign, how it's like kind of intuitive who is there first. Yeah. That person's kind of rolling through it, so they're gonna take the way. How is Vinny at the 4 stop sign? I feel like that would be a tough one for him. Like is he like stop and go real quick, or is he patient wait?
No, he's cautious that way, believe it or not. It's the daily things, like just like making a left on a green light, through traffic. Should I go? Can I go? Kind of thing. The timing of things.
The timing, it takes practice, and the only way, is like experience. But a 4-way stop in the Midwest is notoriously bad because we're all just so dang nice. Oh yeah, no, you go.
No,
you go. No, you.
Yeah, you give them the like.
Oh yeah, hey there, let's all go.
And then you get both of you go, and then you both stop, and then you both go and stop, and you get a little laugh in there.
Yeah. He was like, "Oh, didn't see you there."
Just a wholesome thing. Then you do that like in the middle of the city, and you get a FU and a finger out the window.
Yes. Yes. Too funny.
All right. Well, that is a good time. Also, my Indiana Hoosiers play Monday night for the national championship. I'm already so nervous I could puke. But
ho, Hoosiers.
Hoosiers. But Jamal is in Miami. He's not going to the game. He's just there for shenanigans.
Yeah, I don't know. That spread at 8.5. It's telling you that market thinks this is just a smackdown, and IU looked amazing. I mean, they looked amazing. Miami's kind of hurt and didn't look all that good. But those kids are big. Like their line. Those are some like the kids like 6'9" and like 300 pounds or something. Like how? Yeah, they're big. They're big boys. Big boys.
Come from big stock.
Yeah.
I can wear children's clothing. I don't understand. But I'm just so nervous. I just hope everyone is okay.
Don't be nervous. Don't watch.
Do I have to come to work if we win, though?
Yes, you do. Yes, you do. Sadly.
I mean, how else would you celebrate?
That is true. That is true.
With friends.
That is true. There's so many Hoosiers in the office.
Do you have full IU gear that you can wear?
Yeah, I got some for Christmas from Santa.
There you go, a little hat.
I don't have a hat. I would like a hat.
Yeah, you gotta get.
I want those red and white striped pants.
Oh yeah, the what do they call those?
Candy cane or something.
Yeah.
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 Those are
striped
fun.
pants. But Anyway, hey, we got a great show for you today. A lot of really good content is headed your way. In observance of Martin Luther King Day and the markets being closed Monday, there will not be Tasty Live programming, but it's a great way to delve into some of our archives, some of our research. We actually have a YouTube playlist about the best research segments that we did in all of 2025. That's great. Or you could take the opportunity to do community service in your communities. That's what you're supposed to do on King. You're supposed to do community anyway, or you could just watch some research segments. Whatever.
I will do community service by patroning my local bar. Miller Lite.
That's not how community service works.
What? That sounds great. I actually do. I've had an itching to go to the Museum of Science and Industry / Planetarium. I haven't been in quite some time. And I feel like this is a perfect weekend for that.
That's down by me. Come on, let's go grab lunch.
Like on Monday in the middle of the day, as you know, before the Miller Lights start getting pressed.
Look at your dad's face.
You're going to a museum?
Yes.
Should lose a bet?
I'm a learned man.
Man,
are you not?
This stuff must be good, man.
Nope. What we are not going to do is we are not going to reduce women to just their body parts. That is not what we are not going to do that.
It's got you going skiing. You've never been skiing. Now you're going.
No, I think that's cool. Planets are cool, man. Space, man.
Cool. You see the submarine?
No, what's that?
The biggest gag to all of this is technically it is the Ken Griffin Museum of Science.
Oh, is it?
Amazing! I love
Nobody calls it that, but
in the summertime, Nick. Now that you're going to go, you're going to the planetarium. You said, right?
Yes.
Okay. In the summertime, you go there in late evening before the sun goes down. There's a beautiful sunset from the planetarium. It's really nice. So check that out.
Wow! Look at you.
Yeah. Bring a little blanket, a little something. When I was younger, I didn't have as much money. That was my go-to.
That's good.
Did you take a girl to just go sit in a parking lot?
Pretty much.
No. There's a big grassy.
No, I know there. I'm just teasing you.
You can hang out. Very nice. Summertime, beautiful out.
Hey, we got a great show for you today. The top of the 8 o'clock hour. Nope, sorry about that. We're gonna just do some shenanigans. But then at 8:40, we do have Fast Market as #Fan Friday. So the bats are gonna do viewer submitted trades. We are blessedly halfway through the month of January. Is today expiration?
It is.
Okay, so we're gonna get some expiration trades on.
Sorry to interrupt, but I just closed out of that silver position. $4 move we just had. Silver's down $4 and change right now. I'm gonna be so mad if this goes $4 lower, but I'm thinking it bounces a little bit and I'll have another point to get back in.
Yeah, silver. Now $4 does make it 88 and change, right? Just over 88, which is you filled it exactly 88.
At 88 and right there, yes.
88.09. Yeah, nice fill. I mean, that's about as low as it's been the last 3 or 4 days.
Yes, and this is a big move pre-market here.
Yeah, 4.5%. Yeah, huge move.
Yeah.
Mm-hmm. All right. Good job out of you.
Good job out of you, Nikki.
Thank you.
Then at 9 o'clock for market measures, we have timing 0 DTEs and tracking daily IVs.
Yeah, so this will be cool. So we're looking at 0 DT trades, and we're talking kind of about managing trades and letting the losers run, and looking at different strategies to see how that outcome is.
Very nice.
Unrelated, have you ever gotten one of those physical health IVs for fun? No, your wife had a subscription.
You mean like an IV, to get your electrolytes and everything else?
Yeah, like vitamins, B12, sure. Yeah.
I've done that. My wife does that occasionally, more than me.
How is it?
She likes it a lot. Matter of fact, if she's not feeling well and stuff like that, she'll do that. She'll get a vitamin one with, basically an IV drip or something like that. They come to your house.
Yeah.
That's just what they told your wife. I regret to inform you, sir, that is not a service that they offer.
I'm a man. I don't like needles, so I don't do that. But
I was just curious. Anyway, keeping it moving. We have live from the trade desk. I love how they branded it. Marty Supreme is all that it says.
Yeah. Marty Supreme and the gang. We'll see. Maybe we'll bring Marty or replace Marty. We'll take somebody from the trade desk. I want to get everybody in on the trade desk. It's going to be that kind of year.
Yeah, I'm a little sorry to say that I've heard rumblings that it may not be Marty Supreme.
Oh wow!
But we're hoping. We're hoping.
Can we get some Slappy or
maybe?
Marty lives just on the other side. I believe he lives just on the other side of the Illinois border. So I think he's selling parking to the IU game. I think it's easy in, easy out. So he might not be.
That's funny. Anyway, that is our run of show for you today. A lot of really good content headed your way. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across
the wire. Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a fantastic Friday. It's January the 16th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
The S&P 500's final push to 7,000 could be tougher than it looks. The large cap index has typically experienced bouts of volatility as it approaches a major round number milestone. I'm the same way with my birthday. But what do you think it's going to take? Are we going to hit 7,000 today?
Well, I mean, even the S&Ps, and I know you're talking about SPX, which is closer to 6,950 than 7,000 right now, hasn't gotten there yet. But I don't see any type of volatility. Forward/VX 1825. Now, that might sound a lot. If you've been listening last week, it was like 16 and change.
Yeah.
$2,000 when they rolled the futures. That's how much it's costing to hold volatility per month right now. Almost $2,000, like 1,800 or 1,600, something like that. But it's really on its lows. It hasn't been much lower than this. I guess it's gotten down to around 1790 or so. It's 1825. So I don't know. It doesn't seem like this seems like fear mongering is what I'm trying to say on volatility.
Yeah, it has been a magnet. I mean, 7,000, 6,950 to 7,000 on the E-minis has been kind of the spot.
Yeah.
Like when we've gone outside those ranges, that's been a tradable position. You know, selling above 7,000, buying below 6,950-ish. That's kind of been, even into the sell-off, that's kind of, and by sell-off, I mean the one-day bear market, that's kind of been the spot.
Yes.
What are you doing in the indices relative to each other? So do you have a S&P? Do you have a NASDAQ? Do you have a Russell trade?
I'm short the E-minis small. I'm short the Russell a little bit bigger. I've been scalping the NASDAQ a ton. I don't currently have a position in the NASDAQ. So those are my on the future side. So those are my two futures positions. I'm also long oil. I got long a micro crude contract and then the silver trade, which I just closed out, but I will be looking to get back into it if we get up to like.
Let's be honest. You closed that silver trade, which is near its lows for the last, 3-4 days or whatever. But you really closed that because you were tired of your account having the big swings in one product as opposed to everything else relative, right?
No, I'm a greedy SOB, so I'm just waiting for it to bounce and sell it again and take more like an absolute boss. I have been scalping it, so like
no, you haven't.
I've been trading more than one contract, and I've been scalping it and taking a point here and there. It's been a good trade overall. It
actually turned out to be a good trade.
The silver gold pair has been good. We got out of the gold at like
I got some metal. Like, get 2 seconds.
Yeah. Sorry.
No, it's okay. I know you're excited, but don't blow your wad right now. Like, just 2 seconds.
It's very hard. I'm excited.
Wow.
China is clamping down on high-speed traders, and they're removing data servers dedicated to those firms from local exchanges. Commodities futures exchanges in Shanghai and Guangzhou are among those that have ordered local brokers to shift servers for their clients. But it also impacts U.S. companies like Citadel and Jane Street and Jump Trading, because they are among foreign firms whose access to the servers is being affected. Not sure how you guys are trading China, but I thought it was an interesting story. I was like, I didn't even know China had high frequency trading, but okay.
It's the phone calls that you get on your phone. That's to try to get you to buy something. That's their high speed trading. I don't know. Bob has had a nice run. I'm just looking at some of the Chinese-ish stocks. Baidu has also had a nice run last week or so. They look like they're unchanged, down small a little bit.
What about like a FXI?
FXI, not something I trade all the time. FXI has had a decent run the last week or so too. I mean, it's well near its highs than its lows. It's only a skosh off of its highs versus its lows. So they've been doing okay as of yet. No real problem here. FXI is down about 50 cents.
Mm-hmm.
It's a $40 stock, or was a $40 stock.
Hey, foreign holdings of U.S. Treasuries have hit a record high in November, rising after 2 straight months of decline as market sentiment improved after the federal government ended the longest shutdown in history. Let's talk Treasuries to end the week.
Isn't this amazing how every headline can change in a very quick period of time? Here, nobody wants to buy U.S. debt, if you remember, and now by November you're at you're back at all-time highs. Kind of crazy. Bonds down 20 ticks, 115.22, back in that range of 115 to maybe 116 and a half. Maybe it's tested the upper end of the range the last month. So bonds have been dead. You want to talk about volatility? They should be talking about how U.S. bonds have no volatility to them. They're basically going nowhere and going nowhere fast.
Yeah, not much to trade there. The dollar has had a little bit of strength here. I'm actually looking at one of my FX positions. The first time I think I've ever profited on a Japanese yen position. I got long the US dollar against the Japanese yen, very small, but I'm also long the yen against the euro and the Aussie dollar, which is not as fruitful as this, to the tune of $28 is what I'm going to take off on this Japanese yen position to just scrape away at the piles of losses that I have on the euro Jap.
One brick at a time, son.
It literally is one brick at a time, maybe even less than a brick, like maybe just like a small amount of mortar I'm putting on the top.
As U.S. companies continue to defy investors' expectations, European corporates are expected to deliver their worst earnings growth in the past 7 quarters. Oh no. As geopolitical uncertainty mounts and the market awaits a decision about the legality of Trump's tariffs, European firms are expected to report a 4.1% drop in 2025 fourth quarter earnings on average.
What do you think about that?
I think it's actually quite funny that you have this because Gina was over yesterday for dinner, my sister.
That's your research.
And she says to me out of the blue, she's like, do you think I should like get out of some of my my position, the stocks that I put her in? Not stocks, but the ETFs. I basically have her in a basket of like just ETFs. She's like, do you think I should get out of some of them and buy some like international companies? And I was like, where the hell did you
She's the most public person you've ever met.
No. I don't even know. Like, I don't know where she would even find that information. Like, I don't even
saw a TikTok.
Something like that. But she's like, yeah, because like the U.S. economy, like it's like gonna just like go down and I'm like, what? Like, who are you listening? Where did you find this information? So it's amazing that you have this as a headline because she probably read this headline.
Yeah, for sure.
Or this is kind of contrary to her.
This is contrary. Yeah, it says that Europe is not so hot. Yeah.
But it was just kind of a surprise to me. I was like, what are you talking about? Like, I don't know. It's kind of amazing. I was like, which ones? That's what I asked her. I was like, yeah, which company you want to buy? She's like, I don't know. Just like other markets, other stock markets. Yeah, the best ones.
She fully expects whatever in the next 20 years or so, whatever you're investing for her, that will be her nest egg to retire on. And that all the money she's making now working, she's getting to spend on her own. So don't fail her.
I am so set up for failure. No matter what happens. If I don't like outperform to an exceptional degree, I will forever be the one that ruined her.
Numbers.
Yeah.
Yep.
Individual investors have been snapping up silver at such a pace that it's become the most crowded commodity trade in the market. Vanda has calculated that in the last 30 days alone, investors have snapped up $921 million of ETFs underpinned by silver, such as SLV, and that's crazy. That ETF also recorded 69 million in retail inflows on Wednesday alone, marking the largest day of retail buying, second only to 2020.
Yeah, they don't ring a bell, but these are church bells going off. I mean, it doesn't mean it's the top or the top is in, but it certainly means that you're much more close to the top than the bottom. When you start seeing these headlines, I don't actually kind of believe them. I mean, I'm sure there was an inflow and everything else like that, but it's just they're just.
Why don't you believe them? That's just like data. That's like,
I know, but they're just trying to get sound bites in here. It's irrelevant. Like, why even say it? This is like
the retail side of the equation is a much smaller size.
It's like the 6.
If retail participation goes up 100%, it might be 5% of the total flows in whatever market it's looking at.
Exactly.
So it's just a small drop in the bucket. So
silver down nicely this morning. What are you doing to capitalize on that?
Approaching the lows from yesterday, 86 and change. It's close to 88 right now. It's 87.90, down around almost 5%, 4.9%. You've got I don't mention platinum, but you got platinum down 5%, and you've got gold.
Copper getting killed too. Copper's down pretty big.
Gold down $30, which is really only half a percentage point. So,
but is it because it's expiration? Are people taking profits? Should I be buying the dip here? Because it's going to 100.
100 is a round number right there. I think, like when you're trading these metals, the volatility is so high and the skew is so extreme to the upside. And until the skew goes away, and the volatility goes away, which you'll need, some consolidation and some chop kind of sideways, you should expect, $4 swings up and down. Like that's just how this is going to trade until volatility contracts, and then it kind of consolidates in a range. I mean, that's just how these things trade.
Okay.
All right.
Hey, in other news, Goldman Sachs CEO Lloyd Blankstein. No, sorry, David Solomon. Sorry, I was thinking the other one. David Solomon. He's a DJ. That's right.
Yes.
He's looking how the bank can get involved in prediction markets. The move signals growing institutional interest in a corner of finance that has gained increased traction among traders. Solomon met with the two big prediction companies, that'd be Kalshi and Polymarket, in the last 2 weeks. What are your thoughts?
Man, banks screw up everything. I really like them to let the brokerage firms just stay in the space but
they need that sweet passive.
They need the float.
They need that float. They need that skim off the top.
Yeah, Goldman's down $2-3 this morning, but even the S&P's up 10. A little surprising, but it had a big day yesterday.
Yeah. But yeah, I mean,
a lot of bank stocks came out with their earnings last week. Bank of America kind of sold off a little bit.
JP Morgan as well.
Yeah, Citigroup sold off a little bit. JP Morgan sold a little bit, sold off. Only Goldman Sachs has been hanging in there.
Yeah.
Here's something interesting. I was like, okay, well, this is a thing that happened. Bitmine Immersion Technologies, the largest corporate holder of Ether, is investing $200 million in Beast Industries, the company behind YouTube creator Mr. Beast. What are we doing?
Yeah, this
The
is another
investment
bell. This is
gives
another bell.
Bitmine a stake in a brand with strong appeal among Gen Z and millennials, reaching 450 million subscribers across its YouTube channel. Bitmine also aligns with Bitmine's goal of acquiring 5% of all circulating ETH. So I guess they want to be the MicroStrategy, but of ETH.
I mean, it's an interesting concept. I mean, this Mr. Beast, I mean, he really went from, slinging burgers to becoming a billionaire pretty quickly, probably quicker than anybody else.
Your name is Jimmy Donaldson.
Yeah, I get it. He really did sling burgers to become a billionaire. I mean,
No, he was burgers was just like a little. That was you got caught up in that, or you're a little.
my son,
he got caught up in that, but that was just like another little.
Oh no, he's a media phenomenon.
Yeah.
I get that. I certainly get that, and I could see why they would want the eyeballs on it. I mean, they'll make it the Zins of Bitcoin or Ethereum. I mean, I don't know. It's an interesting concept. I think it's kind of jumping the shark too here, but Ethereum 33 and change, up $18.
Yeah. Why buy Mr. Beast for $200 million when you could get tastylive?
That's true.
You could get tastylive for a fraction of that.
For burrito lunch.
All you gotta do is feed us.
Yes.
I will take an Ulta gift card. Also, our teeth are less creepy than Mr. Beast's.
Yeah, we have good teeth here.
Yeah, no doubt.
What's Bitcoin doing?
Bitcoin's hanging in there, up around $200. But when I say the number, if you've been following along, it's sold off a little bit. It's 95.5. Remember, it was closer to 98 two days ago or so. So it's been going sideways. It's been staying inside its relative range. It's been relatively. It has not had the volatility of like silver or gold or anything like that. But it hasn't had the volatility of bonds, which has been anemic. It's kind of somewhere in the middle there. It's like Goldilocks.
Holding 95 though, that's nice.
Holding 95. That was where it couldn't get over just a few days ago. It was going between like 90 and 95, lower, more near 90. Now it got up to 98. It's back down to 95. We'll see how it goes.
Yeah.
From the Department of Nothing Really Matters Anymore, the U.S. and Taiwan have supposedly reached a trade agreement to build chips and chip factories on American soil, and Taiwan has supposedly said they will invest $250 billion into the endeavor, while the U.S. will limit reciprocal tariffs on Taiwan to 15%. But I looked up the GDP of Taiwan as a whole is only like $880 billion. So I don't know how they have $250 billion to just give us, but like the math isn't mathing, but I'm supposed to just be like, hooray.
Yeah, it's okay. Don't question, just TSM had earnings the other day. It did rally up and did sell off, not quite like it had in past earnings plays, and now it's catching a little bit of a bid, 344, up about $3 this morning. So TSM trading at all-time highs, doing well.
Yeah.
And to clarify, Bat, this is Taiwan, not Thailand.
It's confusing, okay, Vanetta? You can't blame him. It is confusing.
Well, this is Taiwan Semiconductors, not Taiwan Semiconductor. Yes.
Oh, that is a zoom. What is happening? What are you guys doing? Okay. Good times there. Hey, in other news, the Australia, as you can recall, they banned social media accounts for anyone under the age of 16, and that ban is now in full effect, and it has hit 4.7 million teen accounts in the first month. Social media companies have collectively deactivated 5 million accounts after the world's first ban on under 16s took effect. The e-safety commissioner said platforms had removed the accounts. The law went live on December 10th. Meta, of course, was vociferously against this rule going into effect. So let's look at Meta's stock. I think this is a great idea. I think kids should go outside.
Sure.
But I'm also not a parent, so it's also very easy for me to say things like this.
No, it's easy for a parent to say go outside too. I mean, I have not been opposed to locking the doors at times.
Yeah. The problem is it's not the traditional outside as you would expect, Vanetta, where you go outside, you like go on a swing or you play with friends. You take your $2,000 camping gear that you just ordered offline on a Tuesday afternoon, and then you just like mess around with whatever toys that you got that day.
Or your $5,000 pair of skis.
Yeah, it's that too. It's not like grab a ball and go to the park. It's
sounds like there's some deep-seated anger
Sorry,
there.
Dad.
Meta 622 up about $1 this morning, but Meta has not participated in this rally. One of the Mag 7 with a decent correlation. I used to have at least a decent correlation. Now it's 0.30 in Meta. So Meta up $1, but well off of its highs. A couple $100 off of its highs.
The rule also applies to Google's YouTube, TikTok, Snapchat, and Reddit. So
Google is up about $1.50, but Google's the opposite story of Meta. Google's or around near time highs. And Reddit, we haven't talked to a little bit, kind of fell off our radar. Had a bad day yesterday. Was down maybe 10 handles or so, 10 points. Looks like it's up $1 this morning, maybe a little less.
What's the IV in there?
37 in Reddit. Not bad.
I might have did something.
You might have did something. Earnings coming. Looks like was it February 5th.
Okay. Amazon's is launching a new cloud service located entirely in Europe, the company announced on Thursday, addressing user concerns about the data security delivered by the mainly US-based providers. What are we doing in Amazon?
We've been nibbling a little bit long there, right?
Yeah, we've traded it to the long side. We currently have just a delta neutral strangle. So you got IV rank at 38, relatively high. It does have, along with everything else, has earnings coming up in the next, month here or so. But it's an interesting one. I mean, it's been pretty choppy. It has really not participated in blast off new highs like you've seen Google or even a Microsoft and Apple that, are off the highs, but kind of got that move. You really haven't had that in Amazon. So it's an interesting trade, I think, to be short vol / lean long. I think that's kind of the play here.
Okay, good. Netflix has inked a global deal to stream Sony Pictures films after their theatrical window. That would bring films such as Spider-Man Beyond the Spider-Verse to the streaming giant's customers worldwide after they play in cinemas. What are you doing in Netflix?
Netflix hanging out at 88 handle. It is up about 40 cents this morning, but it needs to have itself an uptick. It hasn't had an uptick. I mean, really since, if you're a bull, it hasn't had an uptick since December, early December, like the 1st of December. If you're a realist, it hasn't had an uptick since July when it made its highs of $130-ish dollars. It's trading at 88.
Yeah, that was essentially right when they did the split.
It was a split under.
Yeah, Netflix has been a sick puppy, but it's an interesting one. I'm long. I have in the money short puts. I have call ratio spreads.
Why would you sell in the money short puts?
Oh, well, I didn't sell them in the money. The stock just goes down every single day, and now they are in the money. So it's been a grind. I mean, it's been a grind.
It's been a grind.
But if you're selling both sides, you're taking in some cash from the call side. Right. So I'm okay leaning long here. You're certainly not, buying highs.
Spotify is hiking U.S. premium subscription price again. Spotify, what the hell are you doing? They're raising the price by another $1 per month. Will now go from $11.99 to $12.99. They raised the price to $11.99 in June of 2024. The stock is up on that news.
This is the Christmas present that keeps on giving. I think it was closer to 2017 or something like that. Your sister Gina gave me Spotify for Christmas.
Nice.
Yeah, she paid for like the first 3 months or something like that, and then recurring billing for me for the rest of perpetuity. So I'll be paying another $1 there. Anyway, spot up about $1, maybe a little bit more, maybe $1.50. But man, really off of lows. Had a bad day yesterday trying to recoup there. $508 stock though. So
yeah, the markets are like $1 wide right now, but I feel like they're not usually like that. Once the market opens, they get a little bit wide. Like it's not one that it's one that I would think would be a lot more liquid than it actually is.
Same. Hey, Verizon, man, what a crappy week for Verizon after they just turfed their network with just the inability to function. They get on social media yesterday and they're like, hey, here's what we're going to do. We're going to give everybody $20, but you have to opt in, and you can only get it after we send you a text message. So I'm like, okay, cool. I never got a text message. I went into the app. I didn't see it. People are like, you blew up my whole life yesterday, and you want to give me $20, GFY. And then Verizon's like, again, we thank you all for your patience during this trying time. Here's your $20. You're welcome.
Google did this too. I mean, remember the Google for that
YouTube
stuff, the YouTube, where like you had to jump through like 15 hoops to get the $20 when they could just like put it on your, just cut it off your bill.
Right.
I think that's the most concerning part of this whole thing.
I hate when companies do this. So,
yeah.
But VZ, what is Verizon stock doing?
Yeah, but I get it because you basically sign away all rights when you take that $20. You can't sue them. You can't talk about it. You can't ever, there's never going to be any more that comes your way. That's why they do it.
Yeah, totally agree.
It's all in the fine print.
Anytime you see, like, if this was me doing it, my son would be yelling at me right now, Dad, be careful. This is probably fake news. And even if it's not fake news, you gave away everything. You probably signed up for a phone or something like that. So be careful, Vanetta, is all I'm going to say. Verizon sideways. Are they in some sort of deal or something like that? Is there some sort of...
No, they have a new CEO and they're laying off tens of thousands of people. And someone was like, maybe y'all should hire those people that know what they're doing.
No, the stock's been the same price for like 35 years.
Yeah, that's why I asked if they're in some sort of deal thing or something.
I mean, it's one of those it's in the AT&T range. I mean, AT&T is kind of near the higher end of where it's been trading, but these stocks, they're like dividend paying stocks. They, are just kind of, it's not like you have like explosive growth in these.
Hey, this is really cool. Some cool stuff is coming out of the Detroit Auto Show. It's the biggest auto show, and it's, of course, where all of the cars are made in America. But if you come to Chicago in February, you should go to the Chicago Auto Show. But this is really cool. Honda is unveiling, this is just a prototype, but it's a travel trailer that could be pulled by a crossover car. So you wouldn't need a big SUV or pickup truck. It is the Honda base station prototype, and I just wanted to share it with you because I think it looks like it's so cute. Like, it's so little.
It is cute.
This is perfect for you for your road trips.
Ooh, it's so little though. I put it in my pocket.
You could probably pull that with your motorcycle.
That's not recommended, but
and not all cars are made in Detroit. I mean, they're made otherwhere in the U.S.
I said most cars.
They said all cars. Sorry. You just sold some NASDAQ futures too.
I did.
Yeah.
At the highs. I don't know. You've had a chop fest here in the E-minis, like right at 7,000. I feel like that's kind of our ceiling today. I'm sure there's a ton of people playing for that number, so I feel like you can't really go to that number. And then you got volatility.
You're really overthinking this.
And then volatility kind of not moving here. I feel like you're going to have some two-sided action. So I'm thinking the NASDAQ being up the most today, maybe you get 20, 30 handles here.
Speaking of action, and you mentioned General Motors, Vanetta, it's on its high. So GM, $80 stock. I mean, to me, GM is like a $40 stock for most of my lifetime. So good on GM. Even after they got out of all their EV stuff, right? Or at least cutting back their EV stock.
I think so, yeah. Here's a news story from the Department of Stuff nobody asked for. Progresso is back at it again with their soup drops. That's right, it's soup you can suck on. It sold out in under an hour when it got released last year with the iconic chicken noodle, but they're going to drop 2 new flavors. Progresso is going to launch tomato basil soup drops and beef pot roast soup drops. Chicken noodle will also return. You can get they started available for purchase on Walmart's website yesterday. Gross.
So is the thing that you like? Is it just that you microwave this and it has?
No,
like,
you put it in your mouth like a Werther's. It's a hard candy.
Oh.
But it tastes like soup.
Who
and
wants
you suck
that?
on it. That's why it's soup you can suck on.
That is so dystopian. It's like you can't afford the whole can of soup, so here's a candy to suck on that.
Yeah, well, the government said you just need a piece of chicken, a piece of broccoli, and a tortilla, and one other thing, and maybe you get a soup drop.
Oh my God!
Got it.
We're gonna be eating bugs soon. What the hell is this?
Yeah, our grandparents had
soup.
bread lines. We get soup drops.
I love soup.
Yeah,
not this though.
Hey, I am excited about this, though. Fans are rejoicing. Cheez-Its is now releasing gluten-free original crackers. If you, everyone knows someone that is gluten-free, whether by choice or for health reasons. What?
Or pretends to be. We know somebody.
No, it's a serious issue. A lot of people are affected.
Yes. There's a very serious issue, and those who are gluten intolerant. I'm not saying that. I'm just saying there are those who kind of decide that they're gluten-free too that need this, which is good.
Oh.
Okay, that's Bat at tastylive.
Yeah, you get. Yeah, I was waiting for when some group of people were going to get thrown under the bus today. We got the gluten people. Sorry about that, guys.
The brand announced the release of the gluten-free original baked snacked crackers. After years of demand, they're releasing them. They took time to bring the salty, crunchy, cheesy flavor that you love in a gluten-free version. So good job for everybody. Hey, I'm so excited today. I already have my plans. Dunkin' Donuts, I love Dunkin'. They're giving away cups inspired by their partnership with Meg the Stallion, and it's a sunset hued cup, and it just says "Hot girls run on Dunkin'." But I know, no cap, Tom would have wanted one of these.
Yeah, is it reusable? It looks like
it's reusable.
Okay. But is it like the cheapy plastic, or is it like a reusable one that you could put in the dishwasher? And
I don't have my hot little hands on it yet, but I will let you know. But you get it to any customer today, starting at 10 a.m. local time. So any customer that orders the new Dunkin' Protein Refresher. So
okay.
So hotties run on Dunkin'.
I expect to see that in the office at some point.
What is Dunkin'? Is it Dunk? I don't remember.
DNKN, maybe?
I don't know.
Or did it get taken private? I don't remember.
I don't know.
Yeah.
I'm sorry. I don't know where Dunkin's trading. I can't find it. I don't even know if it is trading.
Was it part of the Green Mountain coffee roaster thing? Remember there was that?
It was acquired by Inspire Brands in 2020, so it's no longer independently traded.
That's what it is. That's what it is. Yeah, I knew I couldn't. I knew there was something there.
We were all right, but because you're thinking of D Nut.
Yeah, D Nut. That's Krispy Kreme.
That's Krispy Kreme.
It used to be DNKN. If you remember back in the day.
Yes, I do remember because I love Dunkin'. Hey, this is bonkers. The billionaire owner of the Rams, Stan Kroenke, is America's largest private landowner. He owns 2.7 million acres of land. He just bought another million acres in New Mexico ranch land in December. So he now owns 2.7 million acres. His private land holdings are larger than Yellowstone National Park. Talk about land, man. What? Why? What?
They're not making any more land, Vanetta.
No, I know. How do you cut all of that grass?
You don't, obviously. But that's quite impressive.
He's probably gonna grow peonies on there or something like that. I hear that's a big market.
Yeah.
Well, I hope we send him crying back to his land on Sunday.
Yeah, that's right.
Kidding. Yeah, you're right about that. You're right.
Finally, today for my viral video of the day, every Friday I like to show food to traders for a little thing I like to call Trader Taste Test. And in honor of my Indiana Hoosiers taking on the Miami Hurricanes in Miami, I have a Miami food guide. What to eat when you're in Miami.
Ooh.
All right, I'm interested in.
Check this out.
Yeah.
You're coming to Miami for the College Football Playoff National Championship game. Here are 5 spots you need to go to.
If you want incredible pizza, Miami Slice is always the move. There is truly nothing else like this in the city, and believe the hype. It's literally a pizza slice bar. You can see them preparing everything right in front of you, and the move is to get la salsera, leeks on bacon, and the pepperoni proper with all the kicks. The slices are huge, the crust is incredible, and the pro move here is to get their vodka or 3 cheese sauce so you could dip your pizza in or your crust at the end. A true South Florida staple is Flanagan's. They're a family-owned spot that have been around since 1959, and there's a reason everyone in Miami loves them. The garlic rolls are pillowy soft with the perfect amount of garlic. The full rack of ribs with curly fries is an essential move here, and so are their iconic rib rolls with the jalapeno ranch and some wings for a good measure. It's essentially sports bar food, so it is an elite spot for fans to watch the game on ESPN. If someone asks me where to get a good Cuban sandwich, I always send them to Sandwich. And even though they've become super popular and touristy over the years, they are still consistent and still making the best Cuban sandwich in Miami, in my opinion. The bread is perfectly buttered and toasted, and they make everything in-house. And while you're here, get yourself a nice croquetica, coladita, and enjoy. Miami has become a big burger city in recent times, and I'm gonna give you 2 of my favorite burger spots. My favorite smash burgers come from Cowie. They started out as a super small pop-up back in 2022, and since then have won Burger Bash, have their own brick and mortar, and are killing it. My go-to burgers here are the Cowie or the Oklahoma. They're so fire, and they're open until 3 a.m. on the weekends, by the way. And my other favorite burger spot in Miami is Coney Burger, making the juiciest burgers in the city. The vibes and playlists here are immaculate, and ever since they opened last year, me and the rest of Miami have been going nuts for these burgers. They're not only insanely delicious, but I love a spot where you can actually see the owner making your food right in front of you.
Slow it down. It's going good. Going good. You're on a roll.
I think it all looked quite good. The ribs, though, I will push back. They looked a little dry. There wasn't enough sauce there. I like a little crisp on the top, like where you get like a little char from the barbecue sauce and the sugar that chars there. Didn't see much of that there. So I don't know if that one might have been a paid.
Looked more like a Leon's rib, which are good.
Yeah.
Yes. Yeah. You're right about that. And a fun fact, my wife worked at Miami Slice. Not that one, I don't think, but in Miami when she was down there for a couple of years, she worked down there. Don't ask me what she was doing down there. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, son?
We got confirm and send some viewer questions.
That's right. On this January 16, 2026, we'll take a quick 90-second break. And we're going to take a look at the market, too, right after this.
Yes.
Thank you, Vanetta.
Hoosiers!
Woo-hoo! Bears.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son. And you know what that means. Time for a little bit more Tasty Live with, confirm and send. But before we do, let's take a quick look at the market. Friday, usually don't have too much two-sided action after we've made a little bit of a run in the market here. Would you consider yourself having a run in the market here if the even the S&Ps have basically been between 6950 and 7,000 and we're sitting right at 6990?
I mean, do we consider that a bull flag? Is that a bear steepener? I don't know. It looks like something. It looks like something's happening there. But yeah, I mean, I think it's been a run. I mean, we're at 7,000. It's been a decent
I would
run.
say it's I would
call it a decent run. Yeah.
Yeah, I'm gonna go straight to volatility before I get to the rest of the markets here. Volatility down only 1 cent, trading 1827. I guess for this week it's in the middle of its range, but it feels like every uptick has been met with an equal or even larger downtick in the market as the market caught a little bit of a bid. You remember in the middle of the week, which was only Wednesday, only 2 days ago, we were down at around on the even the S&Ps near their lows at 6930-ish or so.
Yeah.
What do you think about volatility as a whole? I'll give you one more. I'll give you one more hint here. SPY IV rank is 16. It's been about 18 on the highs. It's 16 right now.
Yeah, I think vol is cheap here. I mean, today is going to be an interesting day just because it's probably going to be the most volume that we've seen all year. You have a very big expiration January. You know, you get all the leap options. You get kind of a rebalancing and positioning for the rest of the year into next year too. So it'll be an interesting day today. That's why I'm leaning into some of the scalps here, you know, getting started with a NASDAQ position here. I think you're going to have some two-sided action today in both directions.
Yes. Totally Totally agree. Let's get back to the market. NASDAQ up 125 handles up. That's about your leader in the clubhouse, up about half a percentage point or so. Russell up $3.30. Small move there. Small move on the E-mini S&Ps up 10. E-mini S&Ps expected move for the day is around $26. Been hanging out around 24 and change. So maybe even a little bit elevated in that small little time frame that we're looking at. Russell basically unchanged, like I said, up 3 and change. Dow up 7. That's a minuscule move of the Dow, which is flirting with all-time highs. Bonds are down 18 ticks. That's a decent-sized move back into the middle of the range after making kind of new recent highs, almost 16 and a half there. Bitcoin up $285, hanging in there just over 95. If you look here and you're one of those chartists, you would say that this was a breakout over 95 because we were hanging out around 90 to 95 and then we broke out. We'll see if we can hang in there in a very light fundamental way of looking at it. Ethereum up $24. That's a bigger percentage move than Bitcoin, which is up $285. You got a 0.75% move in Ethereum. It too is trying to hold on to that new levels that it's trying to establish. Oil up 73 cents or so. Traded over 60 just a moment ago. It traded under 59. So you've had decent sized volatility, as you can see here on the right side of the screen in oil. And it's been going higher until just the last 48 hours where it's been selling off. And that's why the IV rank is high in oil, 35. You have oil positions?
I do. I'm short oil volatility via CL. So I have an iron condor there. We had a call spread that we put on with Craig. I took that off yesterday, which worked. You had a 1 day $3 move. That's about as good as it gets. I also got into a micro crude contract yesterday around, I want to say like 59. Let me see. 59.05, and I have a working order at 60.05 to take like $100 out of that. That was actually just around the high of the overnight session. So it's a small contract. 100 is the multiplier, so $1 would be $100 move per contract. Relatively low buying power requirement, about $1,000-1,500. So that's what I would like to see. And then I'd still be short the volatility there via CL.
Let's move on from the rest of these futures. Gold down $14 and change. You would say that was a decent sized move if you weren't trying to measure it with other moves in the market. Gold IV rank of 49 is quite good. Metals are all about silver these days. 88.60 after trading down to 87.30. Almost a 5% move, now a 4% move to the downside. I know you covered yours, which you've been holding for quite some time. I love the trade. I think that if you're going to look back to trading silver futures again, you might behoove yourself to get into the options. 99 IV rank in silver.
You're talking SLV options.
I am talking
silver
options. Not
SI options are huge, and the bid-ask spreads get super, super wide. You got to be careful with those.
Yeah.
SLV is.
No, I'm talking SLV. You can get a lot smaller when you look at these February options here. You've got a $15 expected move. So let's just bring that up to around 100 or so. And you go all the way up to the 160 options here in February. Plenty of call skew there too. In all of the options that you have there. You'll notice that some of the options don't have a price to them, and that is because those are new options after the expiration here. Those will populate as soon as silver opens. Usually after expiration, a lot of stocks, whether it be equity stocks, or even something like a ETF like silver, they get those in-between strikes. If it used to be 90.95, they'll get the 91s, the 92s, the 93s. If it's been a dollar-wide markets, when they usually have half-dollar wide markets, you'll get those half-dollar wide markets at expiration. Today being expiration, that's why you're seeing that. A lot of stocks will happen on Monday too. So always people ask me that all the time, like when do they get the new series? It's after expiration. You also get the new month typically after expiration. So January expiration comes off. If you have February, April in the option series, you'll get March. So you'll have February, March, and April pop up there for your trading pleasure. We talked about gold and silver. Let's work our way down to nat gas. Nat gas has been flirting with me, trying to sell puts in there. I haven't done it yet. I hate trading nat gas and commodities in general, so I've abstained. But good IV rank of 77.
Yeah,
it's flirting with going under $3. It's 311 or so. Got a little bit lower than that early today. Let's get to confirm and send. You ready?
Yeah, let's do it. Maybe we buy some UNG. We did that in the Johnny Trader account. I'm also looking at our wheat position. We sold a put spread there. The markets are very, very wide, but wheat looks to be rallying a little bit this morning once we open.
You bring up a good point. I should have mentioned it. I don't usually mention the commodity softs, corn, and soybeans. They have relatively low implied volatility, but you did trade them yesterday, and you picked the right one. Wheat is up 1.33%. Corn is only up around 0.5%, and soybeans are actually down. So if you were going to do a bullish trade in something yesterday and you had a crystal ball, you definitely want to do it in wheat.
I take no credit. It was coming from the What's Your Assumption trades. I forget what the pair was, but
they wanted to do a pairs trade, and it was something that wasn't quite as, or it had.
It was wheat and live cattle.
Yeah, right.
So we just did the wheat side.
Yeah, we're going to call that the Mr. Beast trade.
Yes. The Beast Burger trade.
Yes. Yes, that's what we should do.
All right, let's do it. Confirm and send.
I'm ready.
First one. So when placing a trade, do you base your trade size on the percentage of net lick, or do you have a default contract size?
It's a great question, because as a newer trader, I would want you to be a little bit more micro focused on what the percentage of your net lick is versus the trade that you're putting on, because even an account over $25,000 in that 25,000 to 50 range, there's going to be some products that are going to use too much buying power. Even some of the futures are going to use too much buying power. I don't even know if you should be trading futures in that size account. I think it's too small, but that's my own opinion. I think you should have around 25,000 left on the side per future that you're trading.
Yeah.
So I would say it is percentage, and I would like it to be 1 to 3% of your overall account. 3 to 5% would be a very wide range. If I was going a little bit tighter on that with a lot more leeway, especially in a smaller account, you're going to use more buying power just because your account size is smaller. If you got a multi-million-dollar account, you're going to go, you're going to be nowhere near 5% when you're opening new trades. So it does go to percentage size. That's probably the paramount question, the paramount one to look at. But I do default to contract size too. So it seems like, if you're a one-lot trader, you're pretty much a one-lot trader in every product. A small product with, that's you're trading a stock that's, $25 or $30, or you're trading a stock that's $250 or $300. You're still trading one contract. So it's a little combination of both.
I think everything stays in a pretty, you have to have a range. It's not like every trade is going to be, $1,000 in buying power. You might have some that are 1,500. You might have some that, you're more bullish or bearish on, that you put, $2,000 on, and it might be a little bit bigger. They're all going to be relatively small. I think that's the key here, is that, one position isn't going to be 20% or 30%, 40% of your portfolio P&L and position sizing. It's all going to be 1, 2, 3%, and so you can kind of vary that a little bit at your own subjectivity, but again, it should all be relatively the same.
Yep.
In the same bucket. Yep. I agree with you.
Get it. Next one, please.
Oh,
I'm going to read this one. I'm going to read it
okay.
too, so pay attention.
This might take a while.
For HE, LE, and HG futures, there's no IVR displayed because there's no.
Yeah, so that's hogs, cattle, and copper.
That's correct. And I'll give you the quick answer. Let me read it.
Yeah.
My understanding is the futures IVR actually use the IVR from corresponding ETFs. SPY for SPX, Qs for NASDAQ. Pretty good. There are no optionable liquid ETFs for these futures. how do you gauge high IVR for these underlines? I could use IV percentile, but I think this is specific to the current front month contract. And because futures contracts don't become liquid until we get into their expiration cycle, those less liquid periods could skew IV, making IVP look better or worse than it should be.
Yeah, this is exactly right. I mean,
I think they hit the nail on the head. I think
you answered the question with the second part. With futures, each futures contract is technically a different product because they have different prices. It trades along a curve. So something like Apple, Apple today is the same Apple you trade a year from now, and is the same Apple you traded in the last year. It's the same product. The price changes obviously, but it is the same product. With futures, you're trading different products and different expirations, and so there's no real way to get an implied volatility when the current oil futures trade at 60 and the next future trades at 58. They're different products, and so it's very hard to get. That's why there is no IVR for it, because it doesn't fit with the current with the other products, the stocks that trade not on a curve. They trade present to future, and so that's why you don't have an IVR, and that's why you go towards those ETFs where there is it is a current price, and so those products don't have ETFs, and so there is no IVR for them. So that is the short answer of why there's no IVR. You hit the nail on the head again with liquidity. These products, another factor of implied volatility is looking at the options value. And when you have options that are really tight bid-ask spreads, it's very easy to price that volatility. When you have an option that's bid at a nickel and the ask is at $5, that value is very, very skewed. And so a lot of those products, you'll see, like the volatility will be higher, or at least appear higher, because of the skew in that value. It's just impossible to price that option because there's no liquidity. So illiquid products, you're going to see wild swings in implied volatility. So you answered the question perfectly. I think these products, you can look at a chart and figure out if it's volatile or not. Like when these things are having big moves, volatility is going to expand, and that's into both directions. So, that will give you an idea. But these products are more directional trades. They're not, you have to look at the moves that they've had, and then, you're trading them pretty directional usually.
Yeah, we answered it perfectly. They don't get a lot of volume to them also unless they're in place. So please be careful with these. These are,
this is another point there's 100 other things that you could be doing than dabbling in these.
Right.
You could trade these small, like a lot of these products like hogs and cattle. Sure, retail can trade them, but their main purpose is not for retail trading. It's for
it's hedging for
it's hedging for production and supply chain aspects. Like that's why these things are trading. Like Apple is something you can trade as a retail trader. These are more engagement trades, if anything. When we're trading these.
Yeah. Next one, please.
I've heard a couple hosts talk about how January is a big expiration because of leaps. What are the practical implications for traders of a big expiration? Does it mean we should do anything differently, or are there unique opportunities? It's a good question.
I mean, the big question here is, do you do anything differently? And the answer, quite frankly, is no. There's nothing that you need to do differently. Now, if you want to get into the weeds, you could make an argument, at least one backed by some facts, that since January has been around so long, that's what you mentioned a moment ago, there's going to be a big expiration, a lot of contracts expiring because the leap options have been here for the last year. So they've been traded for a full year. Some of those options that I showed you, like in silver, those dollar-wide options, are going to have no open interest to them because they just were created today. The leap options are going to have thousands upon thousands of open interest. So you could make the argument that makes it kind of pin to a number. Now, The other side of that is going to be like pinned to the at the money, like kind of where we are now. Not a lot of movement because the gamma, which everybody always talks about in a fear way, this time, if you're long a call and it's just under the whole number, it's 0 delta. If it goes over the whole number, it becomes 100 delta quite quickly. So you get that back and forth hedging, and we kind of stay right in the middle. Now, that's old thinking also. When we had $5 and $10 wide markets, you could look at open interest and try to say, listen, if we're 192 and there's a lot more open interest at 190 and 195 has a lot less, that maybe we're going to hang out closer to 190 than we are 195. You can lean a little bit shorter in the market, and it worked more times than it didn't. With dollar wide strikes, with monthly expirations, now weekly expirations into daily expirations, that pin risk is just bullshit. So,
and the overall liquidity too.
As an overall liquidity indicator on what future price is going to look like. So yes, it's a big expiration. Some things are good to know. Some things make you money. This is a good to know. I don't know how you can make money with it. So nothing different here. Trade as you normally would on any other day, in my opinion.
Yeah. And I think just generally you'll have more volume today.
Yeah.
And so I think you'll have two-sided action because of that. I think to your pin risk kind of discussion, you might see, random couple point moves and right back. Like that's kind of what my experience has been.
Yep. Awesome. Last one, please.
The Bears are 3.5-point underdogs Sunday night, and the over/under is 48.5. How are you betting the game?
Listen, I bet the Bears last week, first time all season. I was not the kiss of death, although I looked like the kiss of death in the first half of the game. That's for sure. Yeah. They looked like a peewee team, Pop Warner football team. For the first half, they certainly came alive in the second half, as they have all year long. Bear down, right? I'm taking the Bears and the points. I don't know about the over/under. Maybe that's something you can touch to.
It's an interesting. Thank you for the applause. It's an interesting one. I think if you're taking the underdog, you usually take the over as well because you just expect points to be had there.
What was the over/under last week? Do you remember?
It was pretty high. I don't remember the number. I didn't trade it, or bet it, I should say.
There's too much about the weather being played into this. Like everybody and their mother knows about it now. So I don't think it's going to become a factor, which I think leans better towards the Rams side, but I'm going Bears.
I'm taking Bears plus 3.5. I think the home team dog, and obviously I just can't possibly bet on the Rams. Due to the circumstances. So I like that bet. The over/under, I don't love. It's it could go either way. It could be the weather game and be a way under number, or our defense, which has looked pretty atrocious, could be pretty atrocious, and there's a lot of points scored here. So I don't like the over/under. I think
James in production has been a Bear fan all year long. Actually, counter what I've been doing all year long. So let's ask James. James, give me your bet. Bears 3.5 plus 3.5. Who do you like? And more importantly, the over/under. What do you like? You can talk.
Definitely like the Bears, and honestly, I'll probably take the under because I really think that the Bears offense is going to pound the run game. They got the number 2 run game in the entire league. They're going to chew up that clock, keep Stafford on the bench, score some points.
Yeah, baby.
And I'm taking the under on that for that reason.
All right, there you go. You heard it from our resident expert. Thank you, James. We're going to take a quick.
I love it.
90-second break. We've got more. It's going to be the highest scoring game of the year, and because everybody's playing the weather, not because of James. Because everybody's playing the weather. But anyway, Bears, go Bears! We're going to take a quick 90-second break. No Bears in the market right now. Even the S&P is trading near their highs, up 15. We'll be back in 90 seconds with Tasty Live.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell imminent here in about a minute and a half. Even the S&Ps are hanging closer to their highs than their lows, right at that 7,000 number that you talked about. Up 16 handles at 69.98 and change. NASDAQ up 169. RTY up around $2 and change. Dow up 25. We've got a bull market right now. What do you think about the overall market?
Lower. Give me lower.
That's what you need, right?
Yeah. I don't know. I'm gonna just try and scalp around it. I don't think we're having like a big day in either direction. I think it's gonna be a tradable day.
Yeah.
That's kind of how I'm positioned. I'm thinking that I'm gonna be scalping today. That's what I think is going to happen today. I'm interested to see what happens with silver. I want to see if silver rallies into the open or if this is just the end of it.
That's the big question here. I mean, silver down $3.60. Silver's had a little bit of a downside move here.
Yeah. Mm-hmm. But Yeah, we'll see. We'll see in just a moment. We got like 30 seconds here. Some of the chip names just continuing to fly higher. Those are, I think that's really what's buoying the market here. I mean, you haven't had any movement from, the Mag 7s at all, really. I mean, Nvidia had a little bit of a sympathy move, but not to the magnitude of the rest of them. So we will see here.
Yes, we will. That bell is imminent, so I don't need to talk about even the S&P. Oh, there we go. Even the S&Ps are up 13 and change. You're looking for a little bit of a down move. I get that.
Yeah, a little bit. Yeah. Bitcoin rallying a little bit. That's contrary. There we go. We got our bell.
The bell is there. Let's see what's going on across the board here. Even the S&P is up 13, Nasdaq up 149, Dow up 41. Let's go to a high option volume list and see what's moving here. Lilly down 7 on a bucker, UNH down 3, silver down 3, Goldman Sachs down 2. On the upside, ASML, haven't talked about that in a while, up 30, MU up 20 and change, SanDisk up around 19, AMAT up 7, AMD up 4. Chips are still doing good. BE up 4 and change.
Yeah, I bought in the risk on that ratio, so I'm okay there.
Okay. All right.
I think I'm going to close out of this butterfly that I have in gold. So I have another one left over. This is part of we've been doing these like ratio spreads, and then I buy in the risk and leave myself with a butterfly. So I have another one that's the 412, 420, 428. So it's basically right at the money here. It's marked at about $4 and change. I mean, that's about as good as it gets here. If we pinned 420, and I just got filled on an MES. I sold the MES right at 7,000. Why not, right?
You sold them lower. You got to love them here, right?
Yeah.
I'm just teasing, but yes, 7,000. You kind of preemptive. That'll happen with futures. Like you sold them down at what? I think you sold Nasdaq. Do you sell Nasdaq futures too? Yeah,
right here. Yeah. I'm out about 20 ticks or something.
Right. Well, once you got out of silver, I mean, your position's got a lot smaller too on the futures side, right?
Yes. All right. There's my butterfly.
In gold, that's something you've been holding for quite some time, right?
Yes.
Took that free shot at $4.40, right?
Yeah, it was a ratio spread that we bought in the risk on.
That's a home run.
Home run.
I mean, it's an $8 butterfly. You need gold at 420. You got GLD with no days to go. It's today, right? Yeah. And you got GLD at 423. I'm just going to round up. You needed this move down a little bit in gold to have it expand, and it did, which is nice.
Yeah, I mean, we've hit a couple of those. We had the AMD yesterday. We had another one in gold. So it's, I like doing that rather than just closing it and taking the 50 cents, 60 cents. I'd rather risk that value for the potential, the shot at a home run.
Right. Yeah.
I mean, it's worked more. The probabilities of them panning out are more in like the 5 to 10% range, and I'm hitting at a higher mark than that. So, it's ended up being good. But, that's just sometimes it goes your way.
Sometimes you get lucky. Sometimes it's better to be lucky than good, right? I mean,
yes,
you can't.
Yeah, like I have another one in Rocket Labs where I have the 65, 75, 85, where I thought I was a genius because we were chopping around at 75 for like 2 or 3 weeks, and now the stock is blown through it. It's at 95 and change. Right. So like that one, I lost the 50 cents I could have taken had I closed the ratio. I not lost it, but I gave that value up in exchange for that shot. So, just
yeah, you have to give up something, right? I mean, you can't just do it for nothing. I mean, it's going to cost you something.
Yes.
Yeah. What else? What else do you see moving here? I mean, on the upside, it seems like the usual suspects. The Russell's actually down $1.20. You have a little bit of short delta in the Russell, right?
I do. I'm short them all.
Right.
I'm short E-minis. I'm short NASDAQ. I'm short Russell.
Mm-hmm.
But volatility coming in here, I don't like it.
Yeah, volatility /VX in by another 16 cents here as it starts to kind of make new lows. You go across here again one more time on the Buckers. UNH down 6 and change. App Lovin down around 4. CRM down around 4 and change. Vanetta mentioned some of the Chinese stocks. You got BABA now down. It was up pre-market that I saw. DraftKings down $1 and change, Boeing down $1, OKLO down $1 or so after being higher just a moment ago. Is up by about $2, is now down $1. Let's see the upside, how it's holding up there. MU, man, up $23, big move in MU, almost 7%. AMAT up almost $8, that's a 2.5% move. TSM up $7 on top of its earnings. Nice move in TSM for sure today.
Mm-hmm.
There we go. What else do we have? AVG. Let's see what Oracle's doing. I got long Oracle. It's kind of a pig. I'm not going to lie, son.
Yeah, I was thinking we would look at CRM maybe or Adobe.
Yeah.
God, there's just no. I don't know. CRM. The 210 puts are at $2. It's just not like there's no juice to squeeze here.
Yeah, IV rank of 25 has been rallying or rising, but not really enough there. Earnings are coming end of February. Yeah. All right.
Yeah.
All right, you ready to take a quick 90-second break?
Sure. A little bit of a grind fest here. I mean, there's not a ton to.
It is a grind fest, but we got fast market, so that might allow us to, it might be good enough for us to put on some trades. Maybe we can be 10 for 10. We'll see. Even the S&P's hanging out right at 7,000. Sometimes on this expiration, I like to fade the first move here. You really kind of a muted move completely. What about a little bit of an SPX trade? We'll think about that, and maybe we'll do something in there on the 0 days. Right after this, we got fast market next. It's Tasty Live.
The good guys to business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nikki, we are back, son, and you know what that means? Time for a little bit more Tasty Live with Fast Market. Oh, I think you were a little late. I don't know.
I was a little late on that.
Yeah.
I'm getting the itch to get back into silver.
Silver's rallied $1. It's still down 3 1/3%, 89.22. Even though I don't mind it. Like, I don't mind what you're saying. How about selling a little bit of a call in SLB or something like that? Or
No.
Okay. You're not interested in money. I got it.
No, I'm gonna wait. If we get 90, I'll be interested.
Okay.
That'd be, I mean, come on, gotta live a little. We have silver. We have in the money calls, short calls in silver. So in SLV. So we got that delta. I did those put butterflies. So we got those. I did the call ratios that we got on there too. So
I've got you screwed in silver.
That's not your words, not mine. I did not say that. It's a team. This is a team game.
I own it.
Yeah, no, it's a team game. But we're all over. I mean, we have short vol net via SLV.
Yeah.
And I think the way to get it, the static delta, little big boy trade is with SIL. So I don't know. We'll see.
Me likey.
We'll see what happens here.
Get it going. Do it to it.
Trade ideas. Should we do it?
Trade ideas. Let's do it. Let's go.
Bring them on.
Let's go. I'm ready. What you waiting for?
I was off again.
Better be
more off than more on. Yeah,
it's better to be more off than a moron, son.
Yes.
That's correct.
That's right. That's right.
All right, go.
Oh, Tilray. Oh my God.
He says with a question mark.
I mean, this stock, it's trading at 9 right now, but it's had like 5 different splits here. So I don't even know what it's like, trading at relative to what I remember. But Brett is looking at a big lizard in February. I still have the what is that doing? MSOS. Okay, I'm out about like 40, 50 cents on that. Okay, Tilray.
One from the past, Tilray, right?
Yeah. Is this just like, should we buy some stock here and try and scalp this?
Yeah, I mean, you look at the stock; it's a $9.50, $9.40 stock. If you look at it as an option, it's basically a option that doesn't expire. You look at the 8 calls in February; they're no bid at $2 and change. I guess you could trade the 9.10 or the 9.11, but I would just buy stock. I would even buy less stock than 100 shares if you want to get smaller. I mean, that's how you do it.
All right, I'm gonna buy some Tilray. I'm actually gonna go and do. We talked about Natty Gas earlier this morning. I think we can grab a couple shares of UNG and try and scalp out of that.
Natty Gas down about 1.33%. UNG down around 7/8 of a percent, making flirting with new lows. Yes, you are correct. UNG, how are you looking to do something in there? Like, what, you going to go the February option?
I'm just buying stock.
All right, two stock
plays. What is this show? Look at us.
It's macro money.
Are we long-term investors now?
With the bats, yes, we're long-term investors. Yes.
I'm sorry, guys. I mean, but you get a little small nibble here. In all seriousness, it's a way smaller way to engage with a market that is very, very big. Natty Gas futures are a huge contract. The options there are pretty wide, and it's tough to trade them. And UNG.
Yep.
Small, you can get as small as you want there.
Yep.
Yeah.
Absolutely.
Cool. All right, so Brett, we're in. We're long. We bought some shares.
Awesome.
Looking to scalp it, not trying to get married to this position.
Yep. Agreed. Next one, please.
Hood. Okay.
What are we going to do in Hood?
Great spot to grab some Hood long delta, buying the March, February diagonal since IV is not super exciting here, Marcus. I like this. I did do a put ratio the other day, and then the stock proceeded to drop like $10, so I'm right at the money there. You're looking at the 110, 115, March, February.
Mm-hmm.
Okay. So the March 110 and the 115 in February, it trades at about $4 and change. I'm going to take slightly a little bit more risk here, and I'm going to move this to the 20 strike for the short. It gives you a 10-point wide for about $6. I don't mind the 5-point wide for $5 or for like $4 and change. But if you get a big move to the upside, that
you want to benefit.
Well, for the extra $1, you don't give up that sort of bounce tail. And
I agree with you.
Like if you want to be bullish, I think this is a little bit better of a way to do it. I mean, you're talking about, about 10 delta difference, 8 to 10 delta difference.
Yeah.
So it's not huge, but
no, I'm making fun of you, but I'm on the same page as you.
Yeah, it's okay. I'll remember that. 652. All right. I'm in.
Just teasing.
It's okay. Never go against the family. It's all right.
652 is correct. The 110, 120. You got it. Beautiful. Feb March.
Reddit, tight iron condor, 210, 190 to 240, 260 in February. Neil, Nashville.
Neil in Nashville.
What do you think about this?
Let's take a look. What do you think about Reddit? It's good that they mentioned this because I said it's kind of fallen off our radar. We haven't traded it that much. When you look at February options, which does have earnings coming inside this expiration, you can see why it's fallen off of our radar. Popular name, a good movement, kind of crappy markets.
Yeah. You got like 60, 70 cents on some of these. Some of these options are a little less liquid. I mean, this trade is more like a iron fly type position because you're going to be inside the expected move on both sides. So it's a roughly 50-50 shot what you're looking at here.
Yeah.
You want to try like maybe going to like the 20-ish delta on either side, maybe the 270, 290. Mm-hmm. And then the 190, 180 on the put side. Mm-hmm. It trades at about $5 and change. How do you feel about that, Dad?
I don't hate it. Try it.
Bid ask spreads are pretty wide. I'm going to start this at like 575, maybe even higher.
Okay.
Let's try this at 585.
I mean, if you're going to do anything, it would be with defined risk because these markets are so wide. That's how I would play it. So I think the strategy warrants what's going on in the stocks options bid ask, even though the Ivory rank is pretty good. Earnings are February, looks like February 5th.
Oh, you know what? I have a 10-point wide put spread. I'm going to make this 20 on each side.
Oh yeah, it was because of the strikes. You got to be careful about that. I've done that numerous times in my life.
Okay, now we're talking $7 because I was like, why is this trading so cheap? You know, like this should be around 1/3 the width of the strikes, and I was thinking it was 20 points wide, but the put spread was only 10 points wide, and it was trading.
Usually it happens the other way around for me. Like I have it where, I have it like $20 wide on one side, $10 wide on the other side. I'm like, wow, this is trading so expensive, because I have too much risk on one side. I realize it.
All right, I'm going to try 750 here.
Try as you may.
Yeah, this is going to be, you got almost $2 wide bid ask spreads. I'm going to leave this in at 740 up, or I'll get filled at 740 and we're in. So we're slightly short delta. You have a lot of call skew here.
You have a lot of call skew. You got, wide-ish markets. You're in at 740. Your puts are 190, so you're looking at about $45 lower. Your calls are 270.
$35 lower.
I'm sorry, $35 lower. Your calls are 270, and you're $45 higher.
Yeah, and I have short delta.
Right.
The call that's $45, that's $10 more out of the money is another 10 delta, 7 delta higher than the put. So
Yep.
Yeah, certainly some skew there.
Yes, big skew.
Yeah. Cool. So we're in.
Beautiful. I like it. That's Reddit. So you did Hood, Reddit, UNG, TLR. Beautiful. Gold.
I think I'm going to scalp out of one of these ES contracts too.
Yeah, we've had very small movement most of the day that we've been on the show.
Yeah. The NASDAQ, it's only, the NASDAQ I'm holding because it's the one that is up, it's outperforming. So I figure if you're going to lean short one of the two, you probably take the one that's doing a little bit better today, but just lightening up on some of the minis there. Maybe I'll sell.
There's no statistical evidence to it, but yeah, I agree with you. 6 of one, half dozen of another. But I agree.
Yeah.
Mm-hmm. Got to have a feeling.
All right, SPX. Friday, nothing major dropping. Classic 0 DT, 20 delta, $20 wide. What say you, Pops?
I don't hate it. Let's take a look at it though. I like the concept of it. Let's see what's going on. SPX Ivy rank down to under 15 now. Take a look at the expected move. I like to go to /ES to find that. Just makes it a little bit easier for me. You're looking at about a $20, just under $20, $19 expected move. It's come in already quite nicely. We may have missed it, but you can put it on. Put on a tighter one.
I think I'm going to pass. I actually have. So when I was with Jamal earlier this week on Monday, I did an end of the week butterfly in SPX wrapped around the 7,000 mark. So I'm long the 69.75, short the 70.10s, and then long, a wing. I'm actually going to just close out of this and just have the call left over and do this for like 40 cents. I'll just close out of the shorts because the long is zero bid. But basically just playing for that like round number into expiration. And I did this for a couple $100, so it is kind of a shot trade here, but I'm going to leave that on and leave that as my 0-day lottery ticket. We'll see if we can pull off some hero stuff here.
Some hero crap.
Yeah, some hero crap. Yeah. Do I take my NASDAQ now? No.
It's a high-class problem.
I know. We're gonna hold it. We're gonna see what happens here. You got vol sticky.
Vol basically unchanged at 1825. It's had a very tight range of 1830 to 1810. This is about as tight a range as we've had in volatility all week.
Yes.
Going to that kind of expiration synopsis that we were making about it being a tight move relative.
I think it'll be interesting to close today because we have a long weekend. Monday is a market holiday. You have all sorts of stuff happening geopolitically and just politically with Trump throwing all his grenades. You have the Iran situation. Venezuela is still like in the news cycle. So it'll be interesting to see into the close today. I think that'll kind of tell you whether the market is thinking something can happen over the weekend or not. If you have like a bid in volatility into the close today, I think that would be interesting for next week's market because you would expect on a long weekend to get that vol crush. You know, you get that extra kind of.
You're not going to get it today. You're not going to.
You don't think so? I don't think so either. That's what I'm saying. It's like I think you're gonna. I think it's going to be a little bit of a weekday.
You're not going to get paid for short volatility. I don't think today. It's collapsed too much all week long, and for a lot of the things that you just said a moment ago.
I just scalped out of my NASDAQ.
Ah, beautiful. Good scalp. Look at you, scalpy. Finish strong.
Yeah. I could probably should I take one of my E-minis off too? I think you're going to have a chance to sell them again.
I agree with you. I think you can have a little bit of two-sided action in a tight range.
So I got a runner left in E-minis. I'm out of NASDAQ. I still have the Russell short, which boggles my mind that this continues to go higher. I might even add to it because I'm
not a fan of the Russell. Russell up a quarter percentage point while everything else is basically unchanged. You actually got the Dow down 80 right now.
Next one, please.
CRCL.
Ooh, I haven't traded this in a while. This was one where, if you remember, like
the Circle Cruise Line, right?
No, this is the
Circle Internet Group.
Yeah, that's the stable coin. But if you remember, I think we sold the 80 strike puts into earnings. The stock was trading at like 120. And we were like, these $20, one standard deviation puts are, a 50% down move. Like, this is free money. And then the stock basically opened unchanged or maybe down small and then proceeded to sell off like $25 throughout the day. And we were at the money within like the next couple sessions.
Right.
All right. So
you're there still now, 76 and change, basically unchanged. Ivy Wright's team.
Sean in Hong Kong going to stay. So Circle is going to stay around this level. Sold the February at the money Iron Fly. Okay, I have not done an Iron Fly in quite some time.
No, not in some time.
Yeah, you want to do? I don't mind this.
The move is $11. So they're doing
it leans slightly bullish.
Yeah, I was going to say that. Yep.
What do you think about? So you have this equal width. What about just doing like a big lizard type thing where we sell the 80 straddle and then you buy the 90 call, like a jade lizard, but with the straddle? Isn't that a big lizard?
So you get a little bit more delta. You get more like 30, 35 deltas than 15 or 20 deltas.
Yeah, and you look at this as like kind of like almost like a covered call type with an added premium to it.
Right.
Because you're selling the straddle and your downside risk is like below 70 or even further, like 65.
Sure. I would. Well, you're doing the 80 straddle, so that's leaning you a little bit long to begin with. If you did the 75 straddle and the 75-85 call spread, you would have a break even under 7. But you're only going to get about $9.60. So you're giving up, maybe 40 cents to the upside.
If you do it $10 wide.
If you do it $10 wide, which I think you probably should.
Yeah.
So it's either the 75 straddle and the 85 call, or the 80 straddle and the 90 call?
I think we lean slightly bullish.
Okie dokie.
You do the 80.
That'll bring your break even down to around 69 or so, with the stock at 76 and an $11 expected move. Does have earnings coming inside your expiration too.
All right, I'm in. Big lizard.
Even the S&Ps just turned red. They're down a Q.
Yeah. Should I take my last one?
Entirely up to you. It's a high class problem.
It's $1 million question. You got vol getting bid here a little bit.
Volatility is up 8 cents. You are correct. Bonds are down 13. On the silver watch, it's still trading at 89 or so. 89 on the number.
Yeah, that'll be interesting. Long weekend. If that vol starts to come in, that could be a big mover.
Mm-hmm. Mm-hmm. All right, next one, please. Amazon. Bullish iron condor.
Okay. Before earnings, wider put spread at the 230, 210. So you're kind of close to at the money there for more positive delta. Then the 260, 275 calls with less negative delta. And that's out neutral, just slightly bullish overall, Jack and Philly. We're kind of in a similar position. I've just got the strangle here.
Mm-hmm.
Maybe adding, the stock, it had a nice rally and it's kind of come back down. Maybe putting a little bit of delta on here, do a diagonal spread.
Yeah, I like that better than the delta of an iron condor. And I'll explain why. That delta is never really going to expand for you.
Yeah.
Right? Like, so.
It's not really bullish. You're saying it's not really bullish.
Right.
Yeah.
It's you could say it's neutral to bullish, but it's really kind of a neutral strategy. You especially on a $10 wide one, on a $200 stock, maybe when $20 or $30 wide, you can say it's more bullish than neutral. But on $10 on a $200+ stock, it's really a neutral trade, no matter what the delta is on the position. What'd you do here in Amazon? You did the Feb.
I did a diagonal spread.
Yeah, you bought March, sold Feb, 240, 255, and you did it for around $8.26. That's definitely a delta trade, and you just bought in your MES.
MES, yeah. So I have short delta in the Russell. I'm out of MES and Nasdaq. Good little scalpy, scoopy scoop.
Yeah, good little scalpy, scoopy is right. And you got a new trade in Amazon. Good job out of you.
Yes.
Even the S&P is down $6. Nasdaq down.
I'll put go on. Sorry.
It's okay. Russell unchanged and the Dow down 140 and change. They're all basically unchanged. The Dow is the weakest of the group, down 0.25 percentage point. Volatility up 9 cents. Just made a new high at 1840, but it's like stair stepping. It doesn't seem like there's a lot of velocity to this move.
Yeah.
Your silver is trading just at 89. It hasn't moved.
Yeah, I want 90.
Yeah.
I'm being a good boy, okay?
I agree with you. You are.
I'm waiting for 90. We scalped it good. I don't want to give up the bag.
I hear you. I agree with you.
All right, next one here.
Next one, please.
Meta, lagging the peers, bounce incoming, trying a $30 wide put spread, sell the 600, buy the 570 for a $9 credit. I am with you. I like that idea. We have currently the 575 short put. It's just a naked put. We did that at like $7 or $6.75. It's marked at like $9 right now, so we're out a couple bucks on there. I also did a call diagonal spread, so I have long delta here. I think Meta is an interesting one. Lots of bad news. It's stocks on its butt. You got to think that if the AI trade continues, Meta has at least a higher potential upside than some of the others. But
Meta up $6, Chad in Miami. I hope you put this trade on yesterday, or at least I hope you did, so you get a better price than you get today with the stock up $6, being a little bit of a bucker.
for sure.
Nasdaq just turned green, up 35. Russell's up 3, and even the S&Ps are unchanged. Volatility unchanged also.
Yes.
Next one, please.
So we're going to pass on Meta, but really we're in it with you.
Working it.
All right, Intel. It isn't NVIDIA. That's correct. It is not. I don't trust this rally. Selling the 45.54 strangle in the January 23rd weeklies might bail before earnings. All right, so you're looking at a short-term trade.
Yeah, because earnings are the January 22nd, right? I mean, there are no options to trade before expiration, before earnings, because expiration on the 7-day options are January 23rd. So you can't do this, Derek.
Yeah.
Stock does have good IV rank of 50. It's gone sideways the last 2 days, but it's been on a run to the upside in America.
Yeah, I have I did a 1/3 ratio spread that's come in a little bit. So I have I have risk on the upside via that, but no risk on the downside. I could go and sell some puts here and just kind of flatten it out a little bit. You have a 50 IV rank. I'm in the February monthly expiration. I disagree. I think that this has been blessed and put into the government portfolio. So I think you got kind of a built-in floor there.
Still has a little bit of room to it. Yeah.
Yeah. I mean, I can see it going sideways, which, makes sense to sell puts into that. So I think I'm going to add the 42 strike puts. They traded about $1. They're a 20-ish delta. Maybe you get $1.18, 19 here.
All right.
I mean, you're doing it into a little bit of a down move. I guess it just rallied 10 cents while I said that.
Yeah.
I'm just moving markets here. They're scared.
You are. They're so scared of you because nobody else is trading.
Yes. So I'm wrapped around. So I sold the puts at $1.13, and I have that 1/3 ratio on the call side. So my position is synthetically like the 42.55 strangle. That's like kind of where my risk starts. Overall, my break evens are probably more towards like 40 and 60-ish.
Yeah.
So I like it. I'm short some vol here. I like it. I think it's a good spot.
All right. I like it too. Good job out of you.
Yeah.
Beautiful. Next one, please. XLE. I haven't traded this in a long time.
Yeah, me either.
IV rank of 31. Let's take a look at XLE flirting with
this had a split. Didn't they do like a lot of these stocks, I think, split recently?
Let's see.
Not stock, ETF.
Yeah. Let's take a look. Yes, 2 for 1 on December 5th of last year.
There you go.
Yep, December 5th.
Ooh, silver rallying. We might get it. I might get the gravitational pull. Might
89.60 on silver, down almost 3%. Just rallied $600.
All right, so IVR climbing right along with XLE's price, selling the 20 delta strangle both sides at the 36-day. So we're looking at February. Ooh, there is not much vol here.
IV rank of 31. February options are good too, but yes, monthly implied volatility 24 does not give you a lot. It's really, regardless of the IV rank, I think it's really a directional trade.
Yeah, this is a good comparison. Like when we just looked at Intel, and Intel is basically the same price. I sold the 42 strike puts at $1.13. The 42 strike puts on XLE are 10 cents. And so, this is a good example of just how implied volatility reflects in prices of options. Intel, 67% implied volatility, XLE, 24% implied volatility. The options, are multiple juicier. In Intel, same price underlying, obviously different risk, perspectives there. But, it's hard to look at an XLE and sell the 45 strike puts at 50 cents or 40 cents when you can go and sell the Intel puts at a dollar,
Right.
$4 more out of the money. It kind of goes to what we looked at yesterday on the market measure too, about implied volatility and just, how the relative risk is so much further out of the money when volatility is high. So long-winded answer, but I don't love it. So I'm going to pass.
All right. Long-winded answer for saying no bueno.
Yeah, but low volatility. So if you were bullish, you could do a zebra here, or synthetic stock, like buy in the money calls as just a way to get like kind of a leverage on a stock position if you're a cash or IRA account. Like that's the sort of thing that would interest me there.
Very good. Volatility in by 10 cents. Even the S&P's up 5 so far. It looks like a very dull-ish day. $9, 9:09 in the morning, about 40 minutes into the trading day.
I thought we had him back. Thought it was day one.
You know how many times I've been told that or said it to myself? Too many to count. Count. Next slide, please. Oracle. Stay away from this. This is a pig. I have an Oracle position I just put on Thursday. I wish it yesterday. I wish I never took a look at this. I don't know who told me about this, but I should really have a conversation.
What'd you do? You did the 165 puts. What'd you sell them at? Where are we at? They can't move that much. You're out. You did them at 217. No big deal.
Yeah.
You're out 50 cents. I'll buy you lunch. It's okay.
I'm not usually out money on trades I make.
Oh, yes.
I'm not used to fighting from behind. I usually go out to a big lead and just manage.
Yes. All right, so they're looking
Oracle down a $1.66, can't find itself an uptick. Ivy rank good of 48. It's had a 4 or 5 day slide here. Ivy rank is good at 48. It does have earnings March 9th, which is after February expiration. So I'd probably stay in February. What about you?
We've got the position on. What do you think about going to like? I don't want to do this. I don't want to do the March. I think we're good. We got this. We're with you. We sold the 165 puts, so we're there.
All right. So you're going to abstain.
Yeah, I was going to look at the 150 puts in March and do it as kind of like a laddered put position. But I think we got it. We're in.
Beautiful. All right. Well, let's see. How many did we get done here, John? Look at my man, John. Spot on, even at his accelerated age. Look at this. SPX, Meta, and XLE are the that we didn't do. 7 out of 10. That's a good one.
And Meta, we have it. So, we're with you.
We're with you. We're definitely with you. Even the S&P's up 5. It looks like should you go home? Should have probably done the SPX trade. Looks like volatility is just.
Yeah, the SPX trade would have worked.
Yeah.
Can't catch them all. Look at the Russell.
Russell's the strongest of the group, up $11 to put it in perspective, up a little over a third of a percentage point, where everything else is basically unchanged.
I hit it again. I hit it again. I said, give me more. I'll take some more of that. Right, it's right there. It's 2,700. Come on, give me some of that.
I know. I have the least feel for the Russell out of all products that the equity products that I trade. Like I feel like I can get in the zone, and even the S&P, the Nasdaq, the Russell, and then the Dow. I don't feel like I can get in a zone, or I don't get in a zone with them. So you're on your own here. So
I totally agree, and I think that's not only a function that it's just not the main one we trade. I mean, we trade. E-minis and NASDAQ, and the corresponding stocks are the ones that we're always trading. We're always trading the Apples, Amazons, NVIDIAs. So like you get a better market awareness. The Russell's probably rallying today with like small cap banks and biotech stocks that we just like, that is not our realm of trading. And so I think a lot of our problems with trading the Russell is that we're just not in that realm of stocks. It's just not our basket. But it's okay to lose some money on a face ripper to the upside. Why not?
It's kind of a slow-ish day, and we've got a little bit of time. We've got market manager and then Glenn coming in here yet. I got an email about 0 days since we're talking about this. I think we can answer it pretty quickly and just because I get more emails about 0 days than I do mostly anything else. And that's just because the strategy's been working. You know, I remember in years past, I used to get a lot of emails about iron condors when we were going sideways and the market was accommodating. And it was the greatest thing in the entire world. Right now, 0 day iron condor is the greatest thing in the entire world because we haven't gone anywhere intraday. We make a move and then we kind of go sideways for the rest of the day. And if you're managing your winners, it works out great. So I've got a couple of newer trader here that has some questions, okay?
Okay.
So I'm trying to master the SPX 0 day iron condors. What conditions do you look for when placing an IC, iron condor? So,
yeah, go on.
No, go ahead. You answer it.
No, I was just going to say, you know, you have to be pretty mechanical with these. I mean, it's a daily trade. So
that is the exact answer. Like we try to pick and choose as we're doing the show, and we kind of pick and choose more of like what's going on in our own personal space. You know what I mean? Like the market, existing positions that we have and everything else like that. If you're going to do the 0 day from our research, it's just something that you mechanically put on every day. So let's dive into that for just a moment. How wide are your wings?
It depends on your risk tolerance. I mean, I'm typically $10 or $15 wide. I mean, that's just generally what I'm doing. But it's, again, you know, like I think there's a big difference between the person that is doing this daily and like this is a big core strategy for them, and then us where, you know, I'm doing 30 or 40 trades a day and this is just like kind of an engagement. Like I'm just trying
doing the show. You're not sitting at home making your own
the adjustments. I'm not watching it. I put a GTC in. If I lose the whole thing, it's whatever. It stinks. But you know, like it's just not my like core trade. So I think that's like,
if it works for a $10 wide, it's going to work for a $15 wide even better. It's going to work for a $20 wide even better. All our research is pretty much based on a $20 wide. So $20 wide, and then you want to take less risk, you go tighter, correct?
Correct. Yes.
All right. When do you buy one and when do you sell one? Meaning, do you ever buy the 0 day or are you always just selling the 0 day?
I mean, I like to dabble in butterflies, like buying a out of the money butterfly wherever, if you want to take that sort of shot. I mean,
when do you do it?
It's a good question. I think there's so much subjectivity to it. I mean, when we're talking about like on the show, it's not really something I do in my own like messing around. At the end of the day, if you want to like buy a butterfly, a cheapy butterfly as a shot trade, I enjoy vaporizing $50 in the last 10 minutes. I mean, that's like, you know, something.
It's your scratch off, right? Like
yes, exactly.
Like you went to the grocery store and then you couldn't pass by that machine and you threw $10 in there.
Instead of having steak tonight, I'll have ramen. Like that's the sort of trade it is.
Or hamburger.
Or hamburger. Yeah. Or you eat leftovers. That's
so on a whole, you're not buying 0 day iron condors.
No.
So when do you sell them? You're really just looking to do it basically just about every day. I mean, that's if you were going to be doing this at home, that would be the parameter that I would give you.
Yes.
Tasty platform iron condors, if you go to like the curve mode or something like that and you load up an iron condor, it puts the wings together, meaning the buy, sell. And you guys seem to skip a strike on the wings. Instead of it being, you know, $5 or $10, we make it, you know, $20 or $15 wide. Why do you do this?
It's just, you know, it's sizing. It's, you know, the wider you go, the faster the position's going to move. You get more exposure to the Greeks. You get more vol exposure, more theta decay, delta. If you're doing one side, you know, you can get more delta. So it all comes down to risk tolerance, how much capital you have available, you know, how directional you want to be or non-directional you want to be. Those are all questions that you got to kind of figure out on your own, but you know, you got to be comfortable with size. And so that's really what it is.
Yes, 100% agree with you. But it really comes down to your risk tolerance again. And we're managing these trades, which they didn't ask the question of. When are we taking these off? Now, a lot of our research shows closing them before noon Central Standard Time. But you certainly could leave them on if you wanted to. We like managing them around 25% of the pop, meaning 25% of what we sold it for. So if we sold it for $4, you're looking for $1. If you get real tight, it doesn't move that much. It's going to take most of the day to move 25 or 50%. And that's why we like to go a little bit wider, manage our words. A lot of times we'll put them on, 8:30 to 9 o'clock and take them off by 8:45 to 10 o'clock, right? So we're not in them all day long. Are there any tasty videos on 0-day SPX iron condors?
We got a million of them.
Every Thursday we do something, in fact, on SPX 0-day iron condors. So go into our archives on Thursdays and check it out, correct?
Yeah, we've moved to Monday, though.
I'm sorry. Yes, we did move to Monday. I apologize.
Yeah.
I'm still.
And we have some really cool stuff that Kai's been doing with new visuals, and it's really good stuff.
I'm sorry. It was stuck in the cloud. I didn't have that answer. We're going to take a quick.
E-mini's down 4 now. NASDAQ in the red.
NASDAQ down 30. Dow down 80 and change. The Russell still the bucker, up 6.
Yeah, the Russell's going to turn. I'm gonna get my money from the Russell. I'm gonna get it.
Yeah, but you see, like when you're scalping, it wasn't the two-sided product. You know what I mean?
No.
Like you were profitably EMI S&Ps and the NASDAQ. You'll hit the home run in the Russell if the market turns, because Russell will go down with the rest of the market. You would think, at least that's 85% of the time it does. But if you're looking to scalp intraday, you got to go to the ones that's moving back and forth. That's in my opinion.
Yeah, the Russell is very much. It seems like it's a kind of a trend trade. It doesn't have the same rhyme or reason as the rest of the market.
Awesome. All right, my friend. Let's take a quick 90-second break. We'll come back with a market measure. Then we got my man Glenn coming in from the Tasty Trade desk. We'll be back in 90 seconds. Tasty Live.
Cool.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son, and I just learned something from my Taiwanese sources who are not in Taiwan.
Okay.
It's my very own producer, John. John's birthday, and that's why they've been playing all those John clips. John, come on and say thank you, Bat, for saying happy birthday.
Thank you.
John, stay calm. Stay calm, John. Stay calm. Relax. Happy birthday, John, and many more. There you go. There he is.
Oh, John.
Right.
Love you, John.
Right. And that goofball single, ladies. If you're looking for anybody in the Chicagoland area, that's right there. One of the, honest to God, one of the nicest gentlemen that I know. Very kind and sincere.
For sure. Love it.
Not so calm, but kind and sincere. Good luck, John. All right, let's get to this market measure.
I also wanted to, I just closed out of, so I had a leftover call. We did like a poor man's cover call in SMCI. The stock is up like $3 today. I closed out the leftover call for, I net out like $100 loser on the trade, but I am happy to be gone out of that stock. That is a pig of a stock. I do not like it. Take the money and run. I also did a ratio spread in MU because of the gravitational pull it too has on me. I did it for $1. It's a big wide ratio on the upside. I also have a butterfly up there because I've done this a couple times. So we're just, we're trading it. We're trading it a little bit.
We're working it. it. Very good. I think I'm going to have that same conversation with myself in Oracle one day. So we'll see.
Yeah.
Yep. Awesome. All right, my friend, let's get to this market measure.
Cool.
Sponsored by our friends at the SIBO. Timing 0 days. Wow. Look here.
Yes.
And others who are looking for 0-day content, you get some more.
Of course.
Daily IVs.
Yeah, so it's cool. We're going to talk about just implied volatility of the options themselves, and we're going to kind of parlay that into the VIX 1 day, which is another interesting product that we've talked about before, but we're going to shed some light on that as well.
Cool.
Let's do it. So the 0-day option market offers a real-time window into sentiment where implied volatility reflects the market's pricing of uncertainty over the remaining hours until expiration. I can't wait till they have minutes and hourly expirations. I feel like that'll come at some point in the future. That'll be a crazy time. Unlike the longer dated options, though, 0-day options contracts experience compressed volatility dynamics as every price fluctuation carries outsized significance. This is really just a statement of gamma risk. So, your volatility on these options, it's harder to really trade the volatility. You're trading the price, the non-movement of price there, or the movement of price if you're long that option. So, this creates distinct intraday patterns where implied volatility must reconcile expected movements against rapidly diminishing time. So, things move very, very fast when you're trading on a 0-day time frame. And so the question is, how does 0-day implied volatility actually behave as the trading day unfolds? So we're going to kind of quantify volatility as the day goes on, as you get to those smaller and smaller time frames here as we move forward here.
Very good.
So the next slide here, what we're going to be looking at, the study, is looking at 3 days of data on 0DT SPX options. We're collecting that every 10 minutes. At every data snapshot, observed, we're going to observe the zero DT implied volatility in three ways. So we're looking at the IV of the out of the money options at the closest to at the money strike. So this is just the first out of the money option. We're going to look at the IVX at 60, 30, and 10 day and 10 weighted averages of the near at the money IVs. So you're looking at implied volatility across the curve further out in time. And then we're going to look at the VIX 1 day, which is the CBOE volatility index for the 0 day and 1 day options. The way it works is that it looks at 0 day and the next corresponding day volatility. So you have kind of a basket of volatility. It's not just 0 day volatility, but you'll see that there's a way that that this metric changes that's intuitive, but not a lot of people kind of understand it. So we're going to talk a little bit about that. And then we're going to take the results to find a mean behavior over the course of the day, as well as a one standard deviation dispersion. So we're going to try and just quantify volatility for you here on a very short duration.
Good. Let's do it.
So at the money IV showed consistent decline throughout the trading day. This shouldn't be a shock to you, as nothing happens, so to speak. Volatility contracts. So you're typically going to have high volatility right at the start of the session, and that's where you see this kind of wide volatility. And as the day moves on, that volatility tends to contract. The first 15 to 30 minutes of the day had much wider ranges of implied volatility. This is exactly what you would think. Kind of once the market opens, that news is so quickly digested, and the market is kind of digested there. That volatility remains high, and then after that first 30-ish minutes, you get that contraction in volatility. That's why we kind of look for those. And a lot of times, when we do these kind of trade segments like fast market and what's your assumption, we'll look at the options and be like, oh, I think we missed it.
Right.
Well, we didn't really miss it, but we did miss the volatility. We didn't miss the move, so to speak, but we missed the volatility, because the volatility is really centered around that the highest amount of duration, which on a 0 day is right at the open. You only have 8 hours. And so this should be, this is what you should expect with 0 day option implied volatility.
Very nice. Very nice. So what do you think about just so far? Like, is there anything on the 0 day IV that is jumping out on you
today?
No, just through this research so far. Like, I mean, to me, it seems like it's behaving like you would expect it to behave on this long time frame.
Yeah, I mean, this makes perfect sense to me. You gotta like, you can't wait for the 0 day. We talk about like, this being, if this is your core strategy, you got to be consistent with it, every day, and kind of do it as your trade. To that point, you have to consistently do it in the morning. Like, you can't wait. You can't be like, oh, it's a little volatile this morning, I'm going to wait.
Right.
That is the trade. The trade is the volatility in that first 30 minutes. That's what you're trading. You're not really trading the rest of the day. I mean, that's what this is kind of telling you. It's true. You're trading that IV right at the beginning of the day. Silver down 560. Damn it. So at the money IV showed consistent decline throughout the trading day. We went through that. Let's get to the next slide here. So broader strike inclusion doesn't change the fundamental dynamic here. This favors early day entry of the 0 day option. So across the board, the earlier you get in this trade, the more consistent the trade is going to be. You're going to get the most exposure to volatility, which is what you're trying to target here on this trade. You're trying to target the high IV, which is present in that first 30 minutes, and then you go into the time decay aspect, which is the remaining day. You get that vol crush, and then it's about that time decay. And this is also another good visual to explain why we manage these trades so early, is because they're probably going to work right when you get this kind of contraction in vol. Like, it's that first hour or so where you get a little bit of time decay and that vol contraction, it all kind of comes together in that, for that position.
Correct. Good way of saying it.
Yes. So while there are some wild days, the most common behavior was a slow decline, tracing slightly below the mean. And so what you're looking at here is that, most days are like this. You have those outlier risks, though, which goes to the fact that a lot of these trades are going to be, like the losers are going to be full losses. And so again, this is another reason why we're managing these trades very quickly. Implied volatility contracts. You have that 20 to 50% max profit. You take the money and run, and you don't really think too much about it.
That's correct. That's correct. Next slide, please.
So as the day progresses, VIX one-day weighting shifts more from the 0-day to the one-day options. If you've ever looked at a VIX one-day chart, the way the VIX one-day looks is that it looks like there's like higher vol at the end of the day. It's really not the case. I mean, the volatility is technically higher, but it's technically higher because you're now looking towards the one-day options. Those 0-day options, the volatility contracts and gets to essentially zero because the options expire, and the volatility is now weighted towards the next day, which might be, you might go from a basically zero volatility in the 0-day to a 10 volatility or a 15% implied volatility. And so that's why you see that kind of spike at the end of the day in implied volatility. So as a result, the VIX one-day did not show the same intraday decay pattern as you did with the actual options, and that's just because of how it's structured. There's nothing, the VIX one-day in all of its glory is somewhat misleading in that fact that you're always going to see it increase into the close. It's always going to be that way.
You are, and I have to stop you here for a moment, just because your silver has gone in the opposite direction. It's down $5.50 to 87. I know you don't have a position; it doesn't matter. Gold is sold off $76. That's a 1.5% move. GLD is down $5.40. So the metals are moving here. Even the S&P has just reached.
I wonder where my GLD butterfly is now, because it's probably a little bit better, but. Or maybe even the same here. Yeah, it's about the same.
I don't think it moved much, because now it's on the other side of. Yeah. Now the put spread's doing better than before the call spread was doing better. That. Even the S&P's down 13 near their lows. NASDAQ down 58, also near their lows, just making new lows. Russell down 5. The Dow down 174. Volatility up 9 cents to 1837.
Or should I take one of my Russells off? I'm a scoopy one of these.
Russell is now equally down as much as everything else. You sold it when it was basically higher than everything else. So you certainly would be closing the Russell near the lows of the day, not near the highs. If you were to be so lucky to do that.
Yeah, and it's bouncing away from me. Oh, there we go.
Beautiful.
All right. So I still have some Russell left over. The hindsight trade of keeping my silver and my E-minis and my NASDAQ on, I'll never forgive myself.
Forgive yourself, son. If that's the best thing you can do, is forgive yourself.
Okay, you live to fight another day.
There's always going to be a market someplace.
If silver was 5% the other direction, I'd be bitching about not closing it.
That's correct.
Oh, it's all right. That's how it happens.
It is how it happens, and it happens quickly too.
Yes, it does. Mm-hmm. Couple takeaways here. Let's do it. So, the implied volatility of 0-day options consistently fell as expiration approaches. It shouldn't shock you. The early part of the session is going to be the most volatile part. The remaining SPX expected moves tended to shrink faster than the Brownian statistics would suggest. I wouldn't have told you that. That is something that Jacob wrote. Okay, I do not. The Brownian motion is something I know I don't really know how the sausage is made, so to speak.
If you know how to say it.
Yes. I know it is a thing. This pattern is not visible in VIX one day in terms of the vol crush throughout the day, which increasingly weights one-day expirations as options get closer to, as the 0 day progresses, masking the unique dynamics of expiring contracts. So what we're saying here is that 0 day vol tends to contract throughout the day. 1 day vol stays where it is. It might expand or contract in itself, but the VIX 1 day is not representing what is happening with the 0 day options. It's really representing the change in time going from 0 day to 1 day. That's really what it's looking at. And ultimately, timing matters. So early day option selling can profit from this volatility contraction, though you may want to skip the chaos of the first few minutes. But you're really looking to enter these trades in that first 30 minutes, 45 minutes. That's kind of your spot to get into your 0 day trades if you so choose.
This is true. Bitcoin just under 95,000, 94.8 and change. Oil still up 60 some odd cents. Gold down 66. Silver down almost $5 to 87 and change. It was 86.50 when I mentioned to you just a moment ago. Corn, wheat, and soybeans, mixed bag of tricks, but your wheat is still up. They close early. Don't forget if you're doing anything in there. I don't know if you closed your wheat.
I just left it on. It's kind of a marginal. Hasn't really moved all that much.
ETHA, you just closed.
I'm just scalping out of some of the calls. I've been selling calls into the up move. I sold some in IBIT as well, but those have not, I kind of sold them when Bitcoin was probably right around here. At that 95 mark, I was kind of playing for that to kind of be the spot. So those are kind of a scratch. The ETH ones, I took like 25 cents out of each of those. It's small, but we've been chipping away at this,
right?
At doing this, like selling these calls for, in IBIT and ETH at, 75 cents, $1, $1.10, and taking 25, 30, 40 cents. It does not mask the long delta P&L, but, doing this week to week has been, it's a nice little consolation prize. Couple of dollars in your pocket. It's all you can do if you want to sit there leaning long, which I want to have the upside vol, which I think will come at some point, but it gives you something to do. Reduces basis.
Very nice, my friend. Let's reduce a little bit more basis. We'll take a quick 90-second break and come back. We got more Tasty Live with my man Glenn coming in the house. We'll be back in 90 seconds. Tasty Live.
Beautiful.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Just as Bob Fillin sparked a musical revolution, Tasty Trade has sparked a revolution in trading and investing. Isn't that right, Christy Ross? You stay forever young with this great compilation reel. Oops.
This isn't real. It's not every song that can give me goosebumps.
I think I meant my. Damn it.
It's not every song that can give me goosebumps.
Oh, I think I left the stage door open. And what about this classic?
I was gonna push you.
I'm gonna push him too. Don't worry, Christy.
Bob Fillin's fiery Main Street anti-mainstream. Bob Fillin's fiery anti-mainstream financial media songs. God. Bob Fillin's fiery anti-mainstream financial media songs galvanize a generation to become self. Oh, you mother.
And action.
I just looked at you.
I know you did. You're not supposed to do that.
Deep breath.
Release.
All right, I'm getting it all out.
Bob Fillin's fiery anti-mainstream financial media songs galvanize a generation to become self. Stop making me laugh. Is it me?
Oh, maybe.
You're making it worse.
Is it me? I did put it on deodorant.
Oh, John, that one really takes me back.
Well, don't slip a disc. And there's more.
Okay, that was terrifying.
This doesn't look natural to me. How does this look?
It looks really good.
Does it? Seriously?
Yeah, John, we'll be the judge. And when you're ready.
Little Diddy is what we first called you when you first interned here. Then we first did something else first.
Where the hills are alive with the sound of music.
What?
My contact just fell. Come on, Christy, hold yourself together. You don't have any important meetings today, do you?
Oh my God.
Yeah, that's actually right there. Great.
Like crying.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son. And if you've been watching that commercial, that was our very own John birthday boy today with those outtakes. He sure was good at those outtakes, wasn't he?
Amazing. Some of the truly incredible. I mean, that's one. It probably takes about an hour to get the final clip there.
Yeah, somebody had the brilliant idea of putting John in front of the camera. Oof, that was a mistake. But you know what? Somebody who's not a mistake in front of the camera, this guy. Best available Glenn. How are you, my friend?
This is true. Really tapping into the bullpen today. But for our friend John, of course, had to
Absolutely.
come on
Anything for John. Anything for John.
But before you go after Glenn a little bit, I will say Glenn is in my good graces. I just took off the U.S. dollar South African rand position, about a small little $25 out of that. I owe Glenn lunch money.
Scoopy. Nice. Good work.
Scooby. Glenn, is that a butterfly? What did it say?
From Chicago with love.
Chicago with love.
Look at this guy. Is this like a sugar baby audition? Are you trying to do you have an OnlyFans to sell or something? What is this?
It's, I'm not going to say I do, but if you were to reach out.
But you're not going to deny it
either. I would respond.
No,
this is my,
this
is this office. We get majority of people in here 3 days a week. I'm here all the time. And so Fridays I lean towards
Was that throwing some shade?
No. You just, because I'm in at 9 a.m. every day, apparently.
Yeah.
Which, by the way, did you notice the lunchroom? A lot of people waiting for coffee today, Glenn. A lot of people waiting for coffee.
And I delivered, made the Ethiopian batch today. And I haven't gone in the kitchen since, but I don't think I spilled anything. I didn't.
Glenn, I'm getting a lot of feedback on your sweatshirt, by the way. Mostly positive. Most of them are saying that only a handsome young man like that could wear his sister's sweatshirt and look good in it. That's what most of the feedback has been. So good job out of you. You can carry it.
Thank you. But yeah, on Fridays, we're a fintech company, so Fridays I like to lean into the tech side. Rock some hoodies, some sweatshirts, and I'm getting a haircut today at the trendy blind barber. So I've got to lean into my edge. I don't have a lot of edge, but try. Every once in a while I try.
Since you're wearing a woman's sweatshirt, they'll charge you more for a haircut. I don't know why women's haircuts are not more than men's haircuts.
Oh no, this place knows how to squeeze it out of a buzz.
Oh yeah,
sure.
But blind barber's not a cheap haircut. No, the barber doesn't. That acronym in that name, it's
misleading.
It's bougie. It's bougie.
Yeah,
he's a young guy, needs his bougie haircut.
That still water runs real deep. I like it, Glenn. Good job out of you. But what are you presenting us today, since I've been abusing you, and I apologize.
That's all right.
You really are.
And it's all in love, Glenn.
You
know this.
Oh, absolutely.
Glenn, if I didn't like you, I wouldn't say anything.
That's true, and that would hurt real bad. I'd be scared, just terrified.
No, I would.
If you were biting your tongue,
which is what most people want me to do, is leave them alone. so eventually we won't be friends. Don't worry, it's only a matter of time.
No, as a super sub here, happy to talk about anything. But if we're starting with FX, I thought it wouldn't be interesting, but it turns out, look no further than the euro dollar. Pull up that 1 hour chart, because just right now we're getting a little bit of action here on a Friday. If you want to zoom into the hourly chart, if you would be so kind, because this appeared to be, we've got a slight little dollar turnaround with this this market sell off a little bit here, but it's starting to get interesting.
That corresponded. I'm sorry to interrupt you, Glenn, but that corresponded with gold moved down, silver moved down. Somebody said something, I'm sure. Now, nobody knows what's going to happen to those moves, but it's what you do with those moves.
Exactly. And so, while I was waiting in the wings here, we got this pretty stark, quick move down to 116 in the spot market here. And it looked like that would hold a little bit not quite worth it, but if you were to go to like a 5-minute chart, we hovered around 116. And just before I got on here, started to trade through it. The only thing coming across my desk here is Trump talking about Hassett and his potential future staying at the NEC. I don't know. I'll leave it to Ilya and Chris to debunk that and take that apart. But for now, the move coming in 2-year Treasuries and the U.S. dollar, particularly this euro dollar market. And so it sets up, if we do get a little bit of a bounce here, at least that's a flash to a new price point if you're trading the range. Otherwise, with London leaving in a couple hours here, we could see a drift lower, a continuation for this U.S. dollar, which before the U.S. session was a little bit softer and now getting a little more power. This sets up, if you're looking across the major pairs here, we're at near the top of the recent range in U.S. dollar, Canadian dollar. I know you'd like to see a breakthrough to the upside there, Nick, but if you are trading a pretty tight range here, you're at the top there. Similarly for this Australian dollar, US dollar, back under 67 cents. That's near the bottom of its recent range. So some opportunities if you are long US dollar, perhaps the chart for euro dollar and euro Swiss franc present some more momentum. Whereas if you are calling for some dollar chop and some weakness back into those markets,
Euro Swiss franc. Okay, that's an interesting one. I don't think I've traded that. See, I took this opportunity on this move in the euro, as well as the move in the Japanese yen, which has been slightly tiny. I have let that bag fly free. I have realized my substantial loss of $180 on that pair. That one is gone and off the books. I still have the Aussie Japanese yen pair trade, but what are you thinking in the euro?
I was Sorry, maybe I spoke too fast, but was talking about the dollar against the euro and the Swiss franc. Some opportunity here as well. But those charts perhaps setting some more momentum for long U.S. dollar, whereas against the commodity currencies, as we're seeing a little sell-off in the commodities right now, if you're calling for some dollar weakness, you could see some life back into that Australian dollar or that Canadian dollar. And then dollar yen, like you called out, that one really moving on its own right now, but with some risk off. Maybe that could, if it's the right kind of fear, could send some strength back into the yen. But it's been very rare. We're on pace for a third consecutive down day in that dollar yen, and we've only seen, I think, 3 consecutive down days since the fall. And so if you're bold enough to try and go long near the top, at least you're getting a slightly cheaper price here. But also that intervention risk on the docket. Otherwise,
as soon as that intervention comes and the Japanese yen rallies, I'm going to short the living hell out of that.
There you go. Giddy up.
I mean, I've watched that thing go down every single day for 4 months, and if that ever goes up, I'm laying into it.
I'll hit your line if I see anything funky and fresh there. But across other markets, I mean, I was just talking to Crypto Ryan. He was really emphasizing Bitcoin holding that 95,000 level. Now we're getting a little chop below that. So
94.5. I still consider that a hold, but I agree with you. We talked about that this morning too. That 95 level, the old high, recent old highs. You'd like to see it stay against that, just stay above that, just because I have a feeling it's going to close right there. Not make it easy on anybody.
Yep, we've got some. Other than that, we've got some X outages right now.
Oh no!
It seems to be not as widespread, few and far between, but some users in Australia, India, UK, looking global. Trump praising Eli Lilly.
Oh God.
That.
Is Eli Lilly going? Yeah,
that's an expensive one to put in the portfolio. $1,000.
Yeah, that's a tough one to trade.
And the options don't trade well in there at all. And Lilly's always one of the leaders, like up and down, not on a percentage basis, but just a dollar number. Like $10, $50, $20. It always moves around. Lilly. It has no rhyme or reason near its highs, but it sold off the last 5 or 6 days. It is up $7 today. All right, my friend. You did good, Glenn.
Thank you.
Really did.
Good.
Hey,
Thank you for the South African Rand trade. My first entry with the South African Rand was a positive experience. So I thank you for that.
Good job.
A+.
Thank you, guys. And have a great long weekend.
You too. Glenn, go Bears.
Go Bears. Bear down. I'm cheering for Jamal. Let's go throw up the U there.
Oh.
But should be a
fun
fun
weekend.
weekend.
We got a lot of IU people in the office. You got to be careful. Don't say
no. That's okay. I've been just casually letting loose the who, and then they go Hoosiers, and it makes their day, and it's funny to me. So I keep doing it. FX not taking a holiday on Monday. That'll be tradable, slightly liquid, but standard hours.
Perfect. We'll see you in the office, right? You'll be in the office for that.
Yeah, and I just got the note that the heat will not be on, so Frank told me to bring a coat.
Okay, perfect.
But I'm excited.
Well, let's leave on that note, because nothing could be better than that. Good job out of you. Even the S&P is down 9. We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace, guys. Thanks, Glenn.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello, everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Dierking. That beautiful brunette is Jenny Andrews, and we made it to Friday. And you're leaving on a jet plane, young lady.
I know, and look how I'm dressed. This is me. This is me going to Florida. Because this is me leaving for Florida. I think it's 50 something degrees, and everyone I see posting from there says it's cold, it's cold, it's cold. We're going to see my in-laws, and my mother-in-law texted and said, pack warm clothes. It's cold.
It's so funny because the locals, and I'm not saying she's a local, but she's acclimated to the weather because she's been down there for that long, right? At this juncture.
Oh, my mother-in-law? Yeah, I mean, they've been going down there every winter for 15 years. So.
Yeah, but it takes like a couple weeks before you get acclimated. Like you'll go down there and you'll be like, oh, it still feels nice because it's ridiculous outside right now. But when my dad lived down there and I would go down there from college, you'd see people with like scarves and hats and gloves in the 60s. And you're just like, what is happening?
I know. So yeah, 58, it's better than 12. But I'm still packing sweaters and warm clothes.
Way to rub it in. It's better than 12.
But you know what? It's going to be nice because we get to like my husband and his father will get to watch the Bears game together. So that's what's
sweet.
Yeah.
That's sweet.
Yeah, we've got a Bears party going on. I'm already nervous for the game.
Don't be nervous. There's nothing you can do.
I know.
Just sit back, relax, have a glass of wine, and enjoy the game. Because the Bears always pull it out in the end, right? They have so far. Okay, but Jenny, it is a Friday. Let's jump in the platform if we can too, because sports have been all over the place. We opened up. I'm actually going to pull this up. There we go. We opened up, and subsequently went down. It doesn't look like it's a big move, but we're kind of unchanged right now.
So right now, I put on we were talking about this. We both did our SPX put spreads right around, I did mine around like 9:10, and I haven't gotten out of mine yet because I think when I put it on, SPOOs were up 1 and then went, down down 10, down 8, something like that. So we haven't had a wild range, but we were up earlier and we've been red since about 9:15.
Yeah. So, I mean, we'll see how this day goes. What I found surprising about how the market turned around was the VIX. Take a look at this. So the VIX, the VIX is higher than it was. So it opened at 1544.
It's crazy that it's back in the 15 handle.
Yeah, real quick. Very quick.
Right. Yeah, so honestly, is part of that because Monday's already taken out of the options? Like if Monday weren't a holiday, would VIX be higher than 15? Because you know how like sometimes, and you remember on the trading floor, and like what time are we going to tie, when are we taking the weekend out of these, or when do they start?
And no one can time it. I would just like to state for the record, no one can time this. No one. People have tried for centuries.
No, but if we weren't, I don't know. I don't know. I just feel like there's a lot sucked out of these options because we've got people are kind of already checked out today, and Monday's a holiday, and we won't be back till Tuesday.
Yeah. Okay, so you could be right. You might be wrong. You may be right.
But I am crazy.
But you are crazy. We were watching the Billy Joel documentary. Is awesome. Download it for the plane.
Oh, I've seen it. We've seen it. It's good. Yeah.
Okay, good. Okay, so let's we are taking tweets. Put the hashtag LAZJNY. We are also going over the the week recap of all the market measures that Kai lovingly puts together for us. And it's slowly becoming one of my favorite segments because Jenny and I walk fast, I talk fast, I do everything fast. I just want to know the end game. I don't want to know how the sausage is made. I want the results of all the market measures for the week. We asked, and Kai is graciously complying for that.
And honestly, people are busy. We know there are plenty of people who are watching Tasty who work full-time jobs. So you may have missed a market measure during the week. You may not have gone back and watched them all. So the good thing about our Friday market measure recap is we show you the important takeaways from every market measure without having to go back and re-watch every market measure. Sure. So it's nice. It's nice. Everyone during COVID used to be home. Now people are back at work. And the recap is a nice thing to have on Fridays.
Yeah, so let's go into that first, if that's okay. No, I didn't see it. Usually I review it before. I did not look at it today. So here's the weekly summary of this week's market measures, sponsored by SIBO, where our location is, if you're wondering where our location is. We're at the SIBO right now. Okay, so what is the best day for, what is the best DTE for a poor man's covered call play? I'm going to let you guess.
Oh, okay. Best DTE for a poor
I really don't know. So there's no right or wrong answer here.
And I feel like if you search this, you'll find like 80 days. You'll find longer term, 3 months, going more towards 3 months. But I think
that's also for I agree with you, but I think that's for people that are set it and forget it people more so than.
But I'm going to go with 45. I'm going to go with 45. I'm going to go with our tried and true research. I'm going to go with 45. But when they say poor man covered call, where are they placing their long?
That's what I'm asking is where they're placing their long. You said 8. You said you'd probably search it to 80. I mean, in my mind, I'd rather go 20-40. Like sell the 20 DTE because you get a lot of theta and buy the 40 DTE.
But I am thinking, maybe place the long around 90 days out and the short monthly, like 45. Well,
take a look.
I don't know. We'll see.
Since selling puts, spreads, and jade lizards becomes less attractive in an uptrend market like now, an alternative strategy for bullish play is the poor man's covered call, aka the bullish diagonal.
I mean, I love how they say we're in a bullish market now, which I know we've been making like all-time highs. But to me, I still don't feel like we could say like we're currently in a bullish market.
I kind of disagree with you when you look at this.
I mean, it doesn't.
We are in a bullish market.
No. Like last year, yeah. But if your start of January, go to like January 1st and now just the start. Yeah, we've had this run up, but I hesitate to just like label it like we're in a bull market now.
No, I think we've been in a bull market since here.
Yeah, last year.
So we're still in a bull market. We haven't gotten out of the bull market.
I'm still like a little bit cautious.
For me, we're in a bull market. I don't know if it's going to continue, but we have been in a bull market. So I don't know what's going to happen from here going forward, but we're currently in a bull market.
It's just interesting to say, like, okay, now maybe I won't be doing Jade Lizards and put spreads. Instead, I'll be putting on poor man covered calls.
I won't be doing that, but I don't disagree. I won't be doing that at all, but I don't disagree that this is a bull market.
Yeah, we're in. But all right. So how should traders choose the duration of their long call in a poor man's covered call, considering the expiration selection could be up to 3 years?
Wow.
They're going 3. I said 3 months. They're saying 3 years.
All right, let's take a look. Clearly, the longer we hold the poor man's covered, the more profit we can make. But this also means higher buying power requirements. You look at, yes, they have the long at 127 and 92 days.
Yeah, right. Okay. And that's, I would have gone right around that 92 day.
Okay.
So 3,900 for the option, then 92 day or 5,200. The further out you go, there's forever give me there's a gotcha. The further out you go, you're going to pay more, but the further out you go, your theta is less. So, pick your poison. Do you want to have more at risk and less decay, or less at risk and more decay?
There you go. That should be on a t-shirt. Okay, here we go. We also found that the success rate only slightly increases with longer duration poor man's covered calls. Okay, there you go. This implies that choosing longer options does not significantly create a better chance to win.
And that makes sense. It makes sense. So either way, if you're going deep enough in the money with your option 80 delta or something, that's not there's not going to be that much of a difference in performance.
No, and it's interesting because you say poor man's covered call, and we know it's buying a longer dated option that's a little bit in the money and selling something that's out of the money. We understand all of this. As an active trader, I think you can do it shorter term as long as you are actively managing it, meaning when the short's about to roll or there's nothing left in the short, you're taking it and doing something with it. It's kind of like those diagonals that you just keep reestablishing. It's almost like a ratchet. You can take it up with you as you go.
And we could, after this segment, we could go into the platform and find something we want to be bullish in and look at some poor man's covered calls and compare the shorter duration versus the longer and what we would look for when choosing where we're going to put our long.
Let's go to the takeaways. And before we go to the second study, let's do that. So, because I like on our show, we show this and then we're going to jump into the platform. So let's go to the takeaways.
Okay.
Go ahead.
Okay, finally, the return on capital reaches its maximum between 90 to 150 DTE. This range represents a sweet spot considering the high success rates and reasonable buying power, or BPR. So between 90 and 150 days for your long call, and that would be your synthetic stock.
Okay. And then the takeaways. The poor man's covered call is compelling and profitable alternative to the traditional covered call strategy, especially when IVR is low.
Choosing significantly longer options does not significantly increase our chance to win and increase our buying power, and increases our buying power. Going with our conventional wisdom, 60 to 90 days is still a good play for smaller accounts. And we'll get emails of people wanting to use the leaps. And it used to be like, hey, I'm going to do a poor man's covered call. And the thought was just use the leaps. But I don't think that holds true anymore. And here our research has proven it.
I don't think it holds true anymore either. So let's jump in the platform and kind of talk about what we're talking about. What would you like to put a poor man's covered call in?
What? Is there anything out there that you want to be long? What? Okay. I know in IBIT, we just have been doing Jade Lizard.
That's not a bad poor man's covered call situation. Good job.
It's not, right? It's not. And I don't mind doing our, weekly Jade Lizard.
With a poor man's covered call.
Yeah.
Okay, so let's go through this whole process. Here we go. So if you were going to buy the stock and sell a call against it, I'm just going to go to the 35. Yeah, you're buying stock, you're selling a call. I'm going to go to the expected move. We'll stick with the 30 delta-ish, okay? Mm-hmm. So you're putting up $2,580 for this poor man's covered call. You've got a profit potential of $538 for the next 35 days. Not bad. It's not bad.
The reason we put our short call shorter term is that we hope IBIT runs up, but we want it shorter term, so we don't want it to run through it, so that when we get to that 35 day, that 58 is still out of the money or very close to at the money, and then we could roll it out to the next cycle and take in more credit and move it higher and give ourselves more profit potential. And the best case scenario is to keep moving that call out and up and collecting a credit.
In collecting a credit. Okay, so we're going to start. That's a very good example. So we're going to start with this right now. I'm going to keep our short call here. So this is a regular covered call. Now I'm just going to keep this short call here, and then buy something that's further out in time. I'm just going to go to the 63. Keep in mind.
The research showed between 90 and 100.
Well, I'm just gonna ladder it out and keep going, if that's okay, if you don't mind. So then I'm gonna go to 63, and I'm gonna say we got $1 for this. I want to set them up Liz and Jenny style, okay? So I'm not looking at a certain delta. It winds up being an 80 delta.
It ends up being the same. Yeah, 80 delta is like the traditional, and that ends up somehow the deltas always seem to work out.
They do. They do. Okay, so take a look at this. Now we're outlaying only $799, but we have to do some math on what our profit potential is, right? So because it doesn't give you your profit potential, that's the one caveat. So we know that if our short is the 58 and it's trading 53.65 right now, we can make about $450.
And you could see our spread. So we've got a spread, the 46.58. So we have a $12 wide spread. We're paying $800 for. So we've got $400 in profit potential in that spread. And the goal would be, so we watched extrinsic value the first time around. The goal would be next month, collect more and start reducing our basis, start reducing the debit that we're paying on this.
And the reason we want to wash extrinsic value is this becomes a true covered call then scenario where there's no extrinsic value to toy with, meaning you haven't purchased. If you want to pay less for this, I'm just gonna show this example. If you wanted to pay less for this is more of a traditional diagonal. You can bring it up, you can make more money, you can make money because you've got a $5 wide that you're paying $3 for, but you're paying $3 in extrinsic value and only collecting $1. This can go up too far too fast and you can actually lose money.
Well, no, because you've got a $5 wide and you're paying $3 for it. So it could be worth $5.
Okay, it could be worth $5. So you can still make a little bit of money, but just keep an eye on that.
But here's a situation where this one can make $200 and you're only putting up $300, where the other one you're putting up $800 and it can make $400. But then that's the diagonal. And that's why a lot of people in the low IV, they'll go to diagonals, especially, I know we say we're giving up a little extrinsic value, but if the IV is really low, it's not that bad.
So let me ask you this, and I think this is a good discussion because both are diagonals and both are poor man's covered calls. All covered calls are diagonals. Not all diagonals are poor man's covered calls, right?
Correct.
In my opinion.
Correct. That's a good point. And this is why we name strategies and strategies are named so you know what strike. Because if I said to Liz, put on a diagonal, and
this would be my diagonal.
That would be her diagonal, even though a poor man's covered call is also technically a diagonal.
But you say poor man's covered call, I know we're washing extrinsic value. That's just one thing that I know that you and I typically will do. If you're doing a poor man's covered call, we're willing to outlay more capital. We want more profit potential, but we don't want extrinsic value to be a problem.
Now, if we go further out in time, like our research showed, and you go from March out to April, we're probably not washing. Oh, we have to go to May because there's no April yet. We're probably not washing extrinsic value the first time around.
You can. You're just outlaying more capital.
Yeah, you are. And
keep in mind, this is still more capital effective than buying the stock and selling the call against it. We still are only putting up about half, and we're washing extrinsic value.
And you know what's interesting here, Liz? It's the same profit potential as the first one, where that was $400. This is $400. Here we have an $18 wide, and we're paying $14. Profit potential, $400. And so you and I have leaned more towards the shorter term to have less capital in the trade in case the stock goes the opposite direction, in case we're wrong on direction. And we tend to lean towards this because same profit potential, we're washing extrinsic value, and we've got at least one roll built in, but we have less money at risk if the wheels fall off.
Yeah, for sure. Can I ship this?
Well, let's do one comparison and go like further out in time to show what people used to look at, and they used to lean more towards the leaps. They would say, "Okay, I'm going to go to January," and we get a lot of emails on this saying like, "I bought the leap, like I bought this 80 delta leap call."
I don't think you can wash extrinsic value here.
No, you can't.
Without it being the exact same price as.
No, you can't. But you wouldn't expect to because you're not getting decay out of these leaps. Like these leaps are not decaying. Yeah,
but I want to just show the process. It's the same thing, and honestly, it's the same thing as if you bought the stock. I just wanted to show that.
But if you're doing like a leap, you're sticking with around the 80 delta. And so the 80 delta is not going to be quite as expensive, but it's more. It's more than the shorter term. But then some people don't want to worry about it, and they think, well, now I have my stock, for a year, my synthetic stock, and I'm just going to hold on to it. And this is kind of like an old school thinking of poor man covered call.
And so correct, this is the traditional. How about that? It's the traditional. This is what money managers have created for years and years and years. You're using a lot of capital. In my opinion, I would rather just have the stock and sell calls against it.
Oh, instead of the poor man's covered call.
In this situation.
Where if the stock's the same price, if if you're paying $1,800 for this or $2,000,
it was more, but I would rather. It's sometimes it's cleaner to just have the stock if you're paying that much money.
And sometimes when you're going so far out in time within the money options, those markets get wide. The markets get wide, and there's like give up when you're getting in and out. But sometimes I will put things out in time so I know I wanted it that long. Like I have one position that I put on 2 months ago, and I put it in March. And every time I see it, I say to myself, "Don't close it." I put it on March, because I wanted to keep it that long. Like
it's there for a reason, right? I get what you're saying. It's there for a reason. I'm shipping this though. We're gonna pay $8. We've got $400 profit potential. It is bullish. We've got some rolls built in, and we're gonna manage this.
And I hope we see IBIT back up to 60.
Yeah,
IBIT.
Okay, so that's it.
And so we're not, and here's something, we're not chipping away at our basis currently with that. We watched extrinsic value. We gave up $1, we got $1. It's just going to move up with the stock, but we're selling our weekly jade lizards around it, and that is like a weekly theta intake. The other one is just a bullish position. The other one's the weekly theta intake, and I kind of like that. I like having long positions and weekly theta overlaying them.
Yeah, agreed. This is very similar to, hold on, Jenny, I just want to show you something. So if you wanted to be bullish, we know that it's cheaper to, do the zebra than it is, somebody else, than it is to be long Bitcoin in and of itself. We talked about that when we were on the trading floor last Monday. Look at this. The diagonal and the 63-day,
lizard.
And the diagonal is the same price as the zebra.
I kind of prefer the zebra.
I kind of do too.
Because then,
hold on, I'm going to cancel this. Because then, watch this. So we've got the zebra.
And then we have unlimited profit potential, and you have the ability to ratchet it.
Well, yes, or you could take, and you've washed extrinsic value already. So you want to talk about chipping away. You're chipping away by $1 by doing this.
Yeah.
I kind of like this better.
But,
So that being said, Jenny, the poor man's covered call, in my opinion, has been the poor man's covered call using the 80 delta. Makes sense. It's fine. I like it. It's traditional, everything like that. But if you understand the zebra where you're washing extrinsic value to begin with, so that was the 63-day zebra that I did that in. And then we're selling the 35. So this is a synthetic straight up stock position where we actually have a theta component.
I get it. When I do a zebra, I don't like to sell a call against it. I don't like.
But if you look at it like a straight up stock position, this is exactly what it is.
Right. I hear you. I just if I'm going to do the poor man's covered call where I've got $800 and $400 potential, fine. If I'm going to do the zebra where I want unlimited profit potential, I don't want to sell that call against it.
It's the same cost. They're wrapped around the at the monies, and we are filled. So we've got it is a poor man's covered call using with extrinsic value in here, and we have to look at it like that. If it goes up, we're going to close it.
I will say we're probably out of we sold SPX put spreads at 9-10. We're probably out of them now with this 5-point rally. When I put mine on, spooks were like right around unchanged.
Ooh, there's a real possibility. I don't know. I'm actually still in mine.
Mine was just like tight wrapped around it at the money.
I am still currently in.
Oh yeah, I'm still working mine.
Yeah. Okay, so Jenny, here we have to make a pact. You and I right now. What I don't think you do with a zebra, with a poor man's covered call zebra, you do not ratchet.
No, when you're going to sell something against it.
You do not ratchet. This is our stock position. It's a straight up stock position. We wouldn't be moving that stock up as it goes. We do not ratchet this one. Deal?
But if the stock drops down to our long,
we reestablish.
We have to sell it out and get that extrinsic value. We sell it out, we buy back our short, and then the whole thing gets reestablished.
Yeah, deal.
Because you can't let that go. We don't like to let zebras go till the end because you could lose more. And we have the situation right now in a zebra that we have this situation right now. We have it on. Go to the top. Let's see. Where is it? We have a zebra.
Oh, CMG.
Yes. So that CMG put zebra. You see that 39.2, 37.8. So this is how a zebra can lose more than the stock if you don't manage it early enough. So we put that on when the stock was trading 37.80. A bearish position, stock was trading 37.80. And now it's trading 40.40. So we're looking at 250.
We lost 280.
Yeah, so we lost more than if we just sold the stock because...
I'm not going to lie to you. I thought it would be more than that.
I thought it would be more than that too. I don't know exactly where the stock was because these were wonky strikes in CMG.
But I did, that 37.8. I did think it would be more than that. That's. I mean, don't take this the wrong way. That's not a good example because I do think it should be more than that.
Well, yeah, we lost $300 on it.
No, we lost 280. The stock was down.
No, look.
Yeah, take a look here. Hold on. Let me show you the price we paid for it. 289.
Oh, yeah. So that's it.
Yeah, that's why I thought I agree with you. I think it should have been more, but it's not.
Now, but we always say, don't let zebras get less than 10 DTE.
Yeah, take a look at this. Yeah, 286, and we lost exactly what we did. Okay, let's go back to Kai's study because I want to get to the next one. There's another one. Okay. Measuring risk the trader's way. I have no idea where they're going to go with this one. Do you?
No, measuring risk the trader's way. No, I don't know. I didn't see this one.
I'm going to guess CVAR.
Oh, maybe. Okay, let's see.
Okay.
BPR may be one of the reliable metrics when establishing. I think there should be an S on metrics, right? One of the reliable metrics when establishing expectations regarding outlier risk, particularly because modeling outlier events using historical probabilities can be challenging.
Okay. Although buying power doesn't indicate the probability of incurring a loss of a certain magnitude, it does give an accurate representation of the amount of total capital at risk for the current trade and market conditions. That's fair.
Yeah. So how can buying power reduction be used to analyze how well it encompasses risk on a trade-by-trade basis and how tail risk changes for IV for different types of contracts?
So do you know, if you look at the middle column says where it does give an accurate representation of the amount of total capital at risk for the current trade and current market conditions, because you'll notice some buying power is larger than others, and that was happening in silver. Oh, by the way, silver's down today, like huge. Yeah. But you'll notice they were taking and making it more buying power when there was like crazy conditions in the market.
Every day, like margins increasing and silver margin.
Yes.
Because when the market conditions change, the buying power changes.
Yeah, for sure.
And you'll see that on a huge down move. Let's say the market has a huge down move. Well, you may have sold puts, and you might sell puts that one uses $800, one uses $600, one uses $700, and you've got $10,000 tied up in short puts, and then you have a huge down move, and all of a sudden your buying power goes from 10,000 to 15,000, and you're thinking like, what the heck? That's why I always say when you sell naked puts, make sure you can afford that notionally. In my mind, I always say, I want to have at least 50% of that underlying price available for each of these if I have to take the stock, because if you take the stock, it's about 50% of the price.
Right, for buying power, if you have to take the stock, that's correct.
Yeah.
IBIT's a little bit more, but some of them are a little bit more. Okay, so defining outlier risk by the total amount of capital that may be lost at any given time, rather than by the likelihood of such an event happening, emphasizes why it's essential to always maintain responsible portfolio exposure. What?
Defining outlier risk by the total amount of capital that may be lost at any given time, rather than by the likelihood of an event happening. Emphasize why it's essential to always maintain. This is what I'm saying: responsible portfolio exposure. So again, you go sell something. You've got $100 product, and you sell a put, and it's using $1,500. Well, I know if I had to take that stock, it would be using $5,000. So when I'm writing down, and I'll do this sometimes, I've got all these positions. Sometimes I will write down, like, worst case scenario, how much buying power would be allocated if I had to take every one of those underlyings, if I essentially got long every one of those underlyings.
But what is this saying? If you have the 30 delta call, you can lose 92% of it? 30 delta put, 30 delta whatever. If you have the 30 delta, you can lose 92% of your buying power.
Even in extreme volatility, no trade exceeded 100% loss of
the buying power. So this is what I think it's saying, and tell me if I'm wrong. I'm going to go to SPY just because it's easier. So SPY, Mac Daddy of liquidity. I'm going to go to 32 days. I'm going to go to a 30 delta. I'm going to go to this delta right here. So I'm selling this. The buying power of that is 12,000. I think what they're saying is it never exceeded.
Yeah, they never lost more than 92%.
92% of the 12,000. That's I think what they're saying here, right?
I mean,
so on and so forth. So if you've got the 20 delta, because you're farther down, it's only 84% of your buying power. 16 delta, only 78, and so on and so forth, because they're less aggressive. Correct?
But I can't believe that never has that happened. So, like, how far out in time did they go to, like, get these numbers?
Well, it's 45 days till expiration is my guess. I'm at 35.
No, I'm just saying, to say, like, never have you hit 92% of your buying power on a 30 delta.
So if you are going to lose more than your buying power, if you're going to lose more than your buying power, that would mean it's got to be $12 underneath it, right? Which that is
$120 underneath it.
Oh, then that's why it's never happened.
Yeah, $120.
Oh, okay. Then that's why it's never happened. Okay. I mean, that's a pretty good study, but sometimes I need to go in and look at the numbers when they give me these.
Well, this is one where I almost feel like we need a little clarification, because I'm sure it has happened sometimes. I'm sure during COVID it has happened. I'm sure there are times when it has happened.
You lose more than your buying power.
Yeah. Yeah.
Okay, so
I mean, I've had hi, my name is Jenny Andrews, and I've had positions that have lost more than my original buying power.
With the loss. So I agree with you there. So
but I mean, that's just, I don't think that's saying this has never happened. That's why I'm curious, like, what were the parameters of giving those numbers?
Yeah, we do have to see those parameters, because what happens, it's almost like a 1-2 punch. So say it's down 100 points, and then you still have the buying power, that it's still holding up more buying power, and you have the loss on top of the buying power increasing. Do you know what I mean? That whole thing. I agree with you. We'll look at that, but I think it's very rare. COVID was one of those.
Yeah, it's rare. It's rare. Okay. But I have had positions where, sold puts in DocuSign, maybe they were $800, and then that turned into
a $5,000 loss.
Yeah, exactly. Like, exactly.
I know what you're saying. Okay, as IV rises, buying power, BPR generally demonstrates a tendency to decrease, and the approximately the worst case loss as well. Okay.
Right, for all contracts, the BPR almost doubles when the IV is 20 compared to when it's over 40.
Okay. And buying power decreases as the IV increases. Really?
Buying power decreases, the IV increases.
So if you've got your buying, okay, so look at this. Your 16 delta, just go to the 30 delta, go all the way to the right. Yeah. The 30 delta, when you've got an IV of 30 to 40, your 30 delta, because it's so much farther down,
so much further away.
I just want to put my, wrap my brain
around. It's not like the 100 strike when
it's a 100 strike, correct.
If it's a 100 strike when vol is 0 to 20, you're probably at the 80 strike when vol is 30 to 40. It's not the same strike. So it might be the same delta, it's not the same strike.
Correct. And that makes sense. When it's not the same delta, it might be the same strike. Okay. So here's the takeaway. 0 trades exceeded buying power across all trades per strategy. And they've got after.
Yeah, 2020-26 proving BPR reliably captures outlier risk even during the COVID crash when probability models fail.
Okay. Buying power drops 35 to 40% from from low to high IV, giving traders lower capital requirements exactly when premium selling opportunities are best.
The worst loss hit 92.42% of buying power in February to March of 2020. So like what we looked at now was, $12,000 for that 30 delta put in SPY, which means SPY would have to go down to that strike plus another 120 points, to hit that buying, to hit that $12,000 buying power. So
and this has to be 45 days till expiration.
Yeah.
Right? Because otherwise it would be something else. Okay. So very good. We did it, Jenny. We got through it.
We got through the takeaways. The last study, great, fine. We like always getting a trade from, we'd like to walk away with a trade. I like that covered call study. I like saying it's okay to go shorter term with the poor man's covered call. You don't need to go to the leaps. You don't need to go so far out. You don't have to overthink it. Go shorter term. And it should say, go shorter term, watch extrinsic value in your first run.
Yeah. Yeah. It did. And I do like coming up with that. I wanted to show you our SI trade. So everybody everywhere is saying that these are illiquid markets. Frank keeps telling me that all silver, we were looking at the markets the other day. We received text from Frank saying it's always very thinly traded and these are very challenging markets in and out. Big animal, wide markets. Okay. So we have, we're going in the right direction today. Look at the brown bar. They're very small. It's pretty far down, but we're pretty far down too. But silver's down 4% today
There it is. The 73 and a quarter.
I mean, we're still at maximum. We're pretty much max loss.
Yeah, 0.25 is our max loss.
It's
right around $800. At least it's marking normal today.
Yeah, it is marking normal.
Can you go to SLV? I'm just curious how much SLV is down today.
3%.
286.
Yeah. So SLV, it was down more earlier. The low was 78.
Yeah, I don't know. How sometimes you can get a lot of leverage using zebras, just like how we showed it in IBIT the other day, how you can control half a Bitcoin for $5,000 in IBIT zebras. I was saying to myself yesterday, I want to allocate X amount of dollars to SLV put zebras. And I'm curious how much they are. If you go to the trade page, and go to Feb, how much is a put zebra?
So put zebra is selling the 50 delta, buying the 70 delta, drive the delta up there. Yes. Hold on. They're pretty far because there's so much volatility.
Yeah, they're expensive. So it's expensive.
It's still cheaper than buying. It's still cheaper than selling stock. Okay, so you've got $2,700 for one put zebra versus. I'm just gonna sell. Wow.
4,000 for selling 100.
Yeah. Yeah.
And honestly, but the put zebra is expensive. It is expensive.
Yeah. Yeah. They're expensive. So in this, put zebras become all zebras become more expensive when the implied volatility or the IV rank is high, because there's so much more juice in those options. And very similar to what we were just talking about, saying that your 70 delta is all the way up here.
Because the vol is so high.
Yeah, because the vol is so high.
Yeah.
So that's very similar to what we were just talking about. Okay, do you want to go to Twitter real quick?
Sure.
Let's do that, just to make sure we get to everybody.
I'm up almost 8.
I know, I'm out of my SPX. I just got hit.
And this is, so if you're on the YouTube chat, Frank is on there. He's great, and he will share questions. So someone from YouTube asks, what is the ratchet? Because we mentioned that, having a zebra and you can do the ratchet.
Okay, so I'm just going to do this very quickly so everybody can see it. We're not going to go through the ratchet. We've done it 1,000,001 times, but go to Tasty Live. Here you go. Go to shows. Go all the way to Liz and Jenny strategy series. It is right here. So you can go, and the ratchet is the first one right here. It goes with the zero extrinsic back ratio with the zebra. If a zebra is going your way, you can close one and open it and take risk off the table. It's right here. That's the ratchet.
And then also I saw on Twitter, someone asked if we could do a poor man's covered call in oil. So sure, we could. That came from Greg. Liz and Jenny do a poor man covered call in oil.
Yes, but we can't skip Dave. We'll do that too. Covered zebras. If you're still bullish, you can roll the short call up and out and ratchet for a credit. You can, for sure.
Yeah,
100%.
You can.
100%. Okay, so let's do a poor man's covered call on oil.
And then we'll get to Blue Wackadoo when we come back to Twitter.
So oil, do you want to do XOM?
Yeah, or even look at USO. I don't know if there's anything in USO.
Oh my God, do you know how long it's been since you've said USO? You got a 30 rank, it's $70. That's pretty good.
We'll see if there's anything in these options. Maybe.
Okay, so 37 rank is not bad. So if we're going to do a poor man's covered call in oil, let's go and...
yeah. There's actually... So look, we can go the 30 delta and get $1.65.
That's not bad at all.
No, not bad at all.
Okay, then we're going to go to, we're going to kind of go through the exact example as we did before. The traditional, we're going to go to the 63 day because we like to keep it a little bit shorter and go to about the 80 delta, which is, we're getting a little of extrinsic value.
Yeah, we're getting some extrinsic value. This is not bad. $6.95 for a poor man's covered call in USO.
Yeah, and it's $12. Am I reading that right? It's $65.78. It's $12 $13 wide.
$13 wide.
And we're paying $6.90 for it. That's not bad at all.
No, now take off the margin and go one more out just to like stick with the research mechanics of like sweet spots around 90 to 130 days. And here we've got 80 delta. We're still getting extrinsic value. We're giving up $1, about $1.30 something, and we were getting $1.75. So here you've got a $9 wide spread,
it's
or
the same
$9.63, and you've got $15 wide spread. That's not bad.
Neither of these are bad.
But we always err on the side of like, let's commit less capital to the trade.
Yeah, I kind of agree. Now, can we, I'm going to delete this leg. I want to stick with the regular traditional poor man's covered call, but I wanted to show this as well. So if you're going to go 50 delta, 70 delta, you are washing extrinsic value. Oh, I can actually pull this up. You're washing extrinsic value right off the bat and you're paying $7.35 for it.
I know. So I do prefer the zebra. I do. I prefer the zebra over the poor man's covered call.
I do too. Only because we know you're getting so much extrinsic value for this. It changes it to a positive theta position.
Right. You're not giving up, and you're not just like washing extrinsic value first month and then hope to like second month get some, third month get some. I like that we're washing it off the bat.
Yeah. And look at this.
I think the takeaway of these is that the poor man's covered call uses zebra.
But think of it. Don't think. So when I have a stock and I'm not selling anything against it, that's when I want unlimited profit potential. Here we're locking it in. And I mean, to be honest with you, you can roll it into the same cycle. So there's one more roll if necessary, but we do have to take action instead of ownership. Because to your point, I don't want to lose double.
No, yeah. So if it drops down to 68, you've got to sell it out and use that extrinsic value. And honestly, if it drops down to 68, and this is often what I do. Like, let's say I start with a zebra and it drops down to my long, I'll sell that zebra out, take that extrinsic value, and completely change my trade to like at the money puts, because then the vol's up and there's more juice in the options and there's other strategies. The vol's not so, and 36 rank is not a low vol now, but you can change the strategy if this goes wrong.
And I do agree. I do 100% agree with you. And I will switch my strategies when this goes wrong. Oil, the pendulum swings both ways with sometimes when it comes down, the vol comes down, which is very bizarre. But let's stick with this. Let's do this. We're going to outlay $735. Deal?
Yes.
So this is our theme for the day. We've got our stock replacement strategy, covered call. So it's a poor man's covered call, Liz and Jenny style.
Now
it becomes a positive theta trade.
I'm going to just make sure everything's getting pushed out.
I like that.
Today we did the IBIT poor man's covered call with the zebra, and we did the USO poor man's covered call with the zebra.
Correct. So I liked going through all those. Happy Friday, we made it. Why did this week feel so damn long? After this big down move in Hood, I put on an options barbecue special. What is RSB Leap? Hold on, let's look at this. So they have,
What? Did you just pull up Hood?
No, I pulled up his example right here.
Wait, Happy Friday.
This is an options barbecue special. So let's take a look at what they have. So this is Blue Wackadoo. It's in Hood. He said after this big down move in Hood.
All right, click on it again. So he's got He's 427 days.
Yeah,
and
you pull this up and I want to put it into our platform.
Wait. He's got a long call spread and selling 2 puts to pay for it. He's basically putting this on for even. So he has a very wide call spread and selling 2 puts to pay for it. And I do kind of like this. And if this is an option barbecue style, you're so far out.
So wait.
If you're so far down with your short put, I mean, that's the cool thing about going far out in time. So go out. He's far out in time, 427 days.
I just wanted to pull it up so I had the exact strikes. I'm pulling it up on my computer.
I've got the strikes. I have the strikes.
I pulled it up on my other computer too. Okay, so it's 427 days, and he is long the 105.
He's long.
Yeah, I'm gonna switch it. It's just so weird for me to do that. Long the 105, 140, and he sold 260
puts. And I mean, that's crazy to think like, okay, the 60 puts when Hood's trading 109. So his risk is at 60, but come 427 days from now, if Hood's above 140, this trade makes, he's got
$3,500.
Yeah.
That's not bad.
No, I kind of like it. I kind of like it. I mean, this is a long.
So I like this. I like it. Let's put a pin in this. Can I take it a little earlier? Let's see what happens a little earlier. Okay.
What's going to happen a little sooner is your put's going to go from 60 to 80. Your put.
I just want to be like a year. I'm going to go regular.
Yeah, go to December. Go to the end of the year.
Yeah. Okay. So let's go to the end of the year. Okay. Just because, right? I'm in December 2026. Okay. So I'm going to do 105, 140, and I'm going to flip it because we're buying it. Okay. So I'm buying this. It's almost the same price, obviously. And then I'm going to go to, you can almost do it here. You're at the 65.
Yeah, it's not bad. Instead of the 60, you're at the 65. Yeah. I mean, a very small debit, whatever.
Here, if you wanted to be a credit, you can go to 70. I mean, at this point, it's a moot point.
Or you could do 170, 165. Yeah, and get a credit.
That's not bad.
No, it's not bad. It's not bad. Now, if Hood falls down to 65 or 70, this isn't going to come off. Like, you're going to be stuck in this. It'll be a loss just going to sit there. It's got to be one of those that you think, like, you're putting this on. It's a long-term trade. You just leave it. If Hood rallies, if Hood rallies in either scenario, you don't have to wait 427 days to get out of it. If Hood rallies, you'll take that off for a win.
You'll take it off for a win. It'll never be max profit until the end. Yeah. But take a look at this. This is at expiration, but your max loss.
No, we've got other positions on.
Oh, I was like, what is happening here? Thank you. Thank you, Jenny. Because I was looking at that saying, this is insane. Okay, so I'm going to take these off. There we go. Right?
Yeah, right. Yeah. So you're taking in credit. You don't lose to the downside until you hit that 70 put. And then you're essentially long 200 shares of Hood around 69.
Yeah, and we'd know what we would do about it.
Yeah, that's crazy.
I like it.
I do like these. I mean, you know me. I used to love leap puts or long-term puts because you could get so far.
You can get far, but I actually like the call spread kicker. Good job, Options Barbecue, and good job, Blue Wackadoo. Now, I will tell you, I don't know that you and I are going to put this on because for this show purposes account, 2,400 is a lot to hold up for the whole year.
Yeah, but if you're Barbecue Master, he doesn't care.
I mean, and I'm going to put this into my account, Barbecue Master. We're going to be doing it together.
Right.
That's kind of fun, and I like that.
Huh. Clever.
You know we're both putting it in as soon as we get off the show.
Oh, so, USO might have different tax ramifications than if you're trading like CL or something. Sure.
Yeah, that's true. I agree with that. So thank you. Frank is a wealth of information.
Yeah, he is.
But I don't, and shame on me, I will say this, shame on me. I never really think about tax ramifications when I'm trading.
So I know SPX has got the 60-40 rule.
Yeah.
And that's great. But for me still, I'm not a trader that makes all my money from SPX. So I'm doing what I can in SPX, but I have many other positions too that I don't want to get rid of. So it's not like, oh, I'm only going to trade options with the 60-40 rule because it's better for me tax purposes. I have too many other things I like to trade.
Yeah, I agree. So I understand. I don't trade that way. Do you know what I mean?
But I mean, if you're like USO or CL, I don't really even know for CL. Is CL like SPX where it's 60-40? I don't trade it enough. I don't, and again, I don't do my taxes. I give it to somebody.
I know. I have no idea. No idea. But it's pretty interesting. So I do like that. I'm going to take a look at that. I want to look at another one. Let's pick another beaten down stock.
Okay. Or just something like go to Tesla. Just, Tesla's one where you could always get really far on those longer term puts.
But Tesla, so I will tell you, I like what they did with Hood because it's so far down, right? So Tesla is pretty high right now, in my opinion. But I guess Hood's the same thing.
Yeah.
Okay, so let's take a look at Tesla.
Well, I just was curious how far you can get, because sometimes you can get, but the rank is so low. You can go into the trade page and go out to December and look in December, like where can I, where are puts $5 or where are puts $10? Like you just.
Well, yeah. So let's see.
So if you sell, two, that's what I was thinking. You get to around the 200 level. You're on the 200 level, sell 200 puts. You've got $12 to buy a call spread.
I'm gonna change that to 1 though.
And then it's the 480. I think 430, 480. No. Move the 430 up to 440 because that's at the money. Yeah. So you've got $30 wide. Same thing. You make $3,000. Make $3,000 if it goes up, and your short puts are $240 down.
All right, give me something that's cheaper. Let's do this in. What's cheaper than 430 that we would want to be long? DraftKings.
Do you think this would be something good?
DraftKings is down today. I just want to see what it would look like in a cheap stock. This is a $33 stock, okay? So I'm going to buy this. Whoops, sorry. I always put it backwards. I'm going to buy this, sell this. So I've got $391. So you could make $1,000. You're putting up $800 to do it, and you'd own DraftKings at $25. It's not bad.
I was going to say, do you think these are good little trades for like our kids who our kids aren't in their accounts that often? These would just be on for the year.
Yeah, look at this. At the end of the year, Jenny, the kids would have. JC would be jumping for joy in a year if he put up $1,000 to make $1,100.
See, I'm too active of a trader to just throw these in.
Oh, I'm too active of a trader to throw these in, but it's not bad for a child.
Yeah, for the kids.
Now, I like it. Bob, you get a gold star. You are a certified badass options trader. He's the one who gives us all of our earnings dates on there, and I do like this. We tweaked it and made it a little bit ours. I don't like the 427. I don't like going out to March. I kind of like December 18th. Do you know what I mean? Where it's the end of the year. Then this is over and done with no matter what happens, right? By the end of the year. And this is a great return on capital. You could make $1,100 by putting up 851.
This is a lot better than people just going out and buying stock.
Yeah, for sure.
Yeah. Go to the analysis page on this and then take off the other things we have in DraftKings, because I know we have
analysis. Yeah. Hold on. I'll go to analysis. I'm gonna pop out here. All we have is a put.
Okay. I just wanted to see this.
What?
We got 2 short puts. Move it.
Oh, there we go.
Yeah.
Okay, I was like, why is it saying only $150? Okay, so here this is where it's trading right now. So anywhere to the upside, because we've got $150 credit. This is where it was. I was in here saying, why are we only making $150? So anywhere to the upside, you keep making money, keep making money, capped out at 43. This is actually really good.
I do. It's funny. I mean, thanks, Blue Wackadoo. And maybe Bob on Fire has been posting these on his Twitter account.
Yeah. Huh.
This is the cool thing about being in a community of option traders. We get ideas from each other. So we've got our show, we've got the research team, we've got the way we trade, but we love getting trade ideas from other people. And that's what we want. What do people want who are watching this? Trade ideas. And we get them from each other.
And this is honestly, Jenny, and you can tell both of us are. I mean, we're so active of traders that, and I'm actually getting more and more aggressive to the weeklies. This is something that I don't know if I'm going to do it in DraftKings. I'll probably do it in DraftKings. I probably do it in Hood. I might even do it in Tesla. But I'm not going to I'm not going to take my entire account and put it in this. Like, these are trades that I want to have in conjunction with other trades.
Yeah, I like the concept of this, especially for someone who isn't quite as active, or an account like, okay, so I've got, we've got so many accounts that we're dealing with, right?
Yeah.
And so if there's accounts that I don't want to be in that often, like, my parents or my in-laws, if accounts like that, then this is something to throw into those accounts that I don't want to be micromanaging. And I don't want to be in all the time. I barely want to look at them. So these are good trades for that.
Yeah, that's not bad. That's not bad at all. Okay, I want to make sure we got to everybody and see if there's anything we need to wait, $850? Can we put this one in DraftKings and take away our long put? I know what you're saying, and I know it's going to sit there for a long time, but it's not bad to have.
I mean, just leave the short put as well, right?
As well, in addition.
Well, we already have it. We have the short put. I mean... All right, I'll get that pushed out to the follow page too.
Good. I'm glad. Breaking all the rules today. So we've got that in. It's a capital. If we need capital, we will close that. Fair enough.
I don't think we'll be okay without the $800.
I know. Okay. We've had worse in there. So this is Friday. I want to make sure there's no in the money signs. I just glanced. We have been keeping an eye on this. We've been cleaning up this account for a while. It is not in bad shape. We're all good. And Jenny, we are done for the day because you got to get on a plane to Florida.
Oh my gosh, we are out of time. I was going to say though, I know what it is. Apple, where we're down $713. That was a long call, part of a diagonal.
Yes.
And it's so far now, $20. Apple has really been
it's part of a diagonal. It's 63 days. It is still right there. We can address this on Monday and decide if we want to kind of change it.
I know. It's interesting when we talk about like bull market. It's like, yes, certain stocks.
Certain stocks.
Because like certain stocks have not participated.
Correct. All right, Jenny, you have a wonderful weekend. Everybody out there have a wonderful weekend. Thank you, everybody on Twitter. Thank you, everybody on YouTube. And thank you to Tasty Nation. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. And happy birthday to John if you're out there listening.
Happy birthday, John. All right, goodbye.
Bye, everybody.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Qué bueno, ay. Ave María Morena, Ave María Morena, Ave María Morena, caballero eres morena, Ave María Morena, le digo rumba buena, Ave María Morena, morena pero que me muero, Ave María Morena, 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 Ave María Morena, y tú son los ratos buenos, Ave María Morena, morena pero mira morena, Ave María Morena, oye que bien ya suena, Ave María Morena, oye digo que morena, morena morena, ven morena morena, oye morena, morena, mira que bien morena, estas son las rumbas morena, es rumba la morena, estas son los buenos buenos morena, estas son las rumbas buenas morena, estos son los ratos buenos morena, oye mamá morena, cántalo hasta mañana morena, oye pero ven morena morena, oye morena buena morena, que bien ya te suena morena, oye pero me vi morena, estos son los ratos buenos morena, morena morena, ah, na, 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 ah, na, na, ah, na, 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 ah, na, na, qué bueno, ay. Qué bueno, ay. Agua. Ay.
What's up, JC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike, and I'm here by myself as Jamal is likely headed to Miami to go watch his Canes take on Indiana on Monday night. We got the Bears playing on Sunday. Cannot wait for that game. Yes. It's going to be glorious. It's going to be frigid. I'll be indoors, slinging some beers, praying to the football gods. It's going to be a wild game. That's going to be the game of the weekend for sure. These other two games, not too sure about San Francisco, Seattle, but our Buffalo boys in the office, rooting for Buffalo as well. I think they can take on Denver. Denver defense hasn't been that great, and Bo Nix has his issues. So we'll see what happens there. But imagine a world where we get a Buffalo-Chicago Super Bowl where every Tasty employee wins. Or it might just create chaos in the office, one or the other. But going to be exciting. Can't wait for it. We've got not much going on in the markets today. E-minis are flat, only up 4. NASDAQ up 7. Dow and the Russell kind of flat as well. Bitcoin, Ethereum flat. Like everything is just chilling. And we kind of hinted that this could be a possibility yesterday. We looked at the expected move for today on last call yesterday, and it was only like 30 points. So we're seeing that well within the implied or realized move now, with the markets basically flat for the whole day. Only 13 points for the rest of the day. And then Monday, we don't have trading. We have the MLK holiday. So keep that in mind. But Tuesday, only 40 points of an implied move and only 70 points for next week. So we're getting back into low VIX territory here. VIX is at 15. Anytime it's under 20, we're going to be in that grind mode. Vol futures also flat. Looking at a decent contango here between the G, H, J, and K contracts. Contango all the way throughout to the M contract. So kind of a crazy day. Crazy non-move day where literally nothing is moving except for silver moving to the downside. Not too surprising after yesterday's move. We kind of saw that rally sputter out. And we've been expecting some kind of pullback in silver because it's just been such a rocket ship to the upside. It makes sense that you'll have some kind of pullback at least once or twice. But natty gas selling off closer to 3. Gold following suit with silver. And then as you can see on this screen, literally everything else kind of within 1% except for crude oil moving up 1%, corn up 1.5%, and wheat up 2%. So we did put on this corn position, a short put spread, the 415, 405 after our discussion with Thomas on Tuesday. That's up $50. We've got the year-long strategy in the micro E-minis. That's working out nicely. And I feel really, really good about this trade, given the fact that we've had this choppy start to the year and we have a plan for downside movement. We have a plan for upside movement. We're really just going to focus on the premium offered throughout the year, and we'll see where we're at the end of the year. But crude oil, seeing a nice move today to the upside. Saw a big sell-off yesterday, but we've got this range covered here between 55 and 65 with 1 point wide wings, and CL picked up $400, risking about $600. That's coming in nicely. So just playing for some neutral chop. And then once we get the earnings announcements, so one thing to note, Netflix has earnings on Tuesday. They're trying to sneak it in here without anyone knowing. But Netflix post-split, the world is our oyster now. We can do whatever we want strategically now that we have an $87 price point. So definitely going to trade that on Tuesday, January 20th after the close. The nice thing is it's not before the open. If you see any earnings announcements that are before the open on January 20th, I'm not sure that they would even do that, but let's just double check here. I guess they would. DHI, FITB, you got some fringe products reporting before the open. So just keep in mind that if you are trading those earnings or you're trying to hedge, if you have stock positions, you got to do it today. because Monday will be a closed market day. But yeah, Netflix, super interested in that. E is going to write an earnings preview for that one, so keep your eyes peeled on the News and Insights tab on Tasty Live. We'll have earnings previews for all of the big tech stocks and the big name stocks for this earnings season. So if you like more in-depth write-ups from the people that are broadcasting on air, definitely check the News and Insights tab out for that. But yeah, not much else moving. Let's just quickly look through some of the sectors. Let's take a look at the S&P 100 to the upside and downside, see if we see any themes. Nothing too crazy. Biggest move to the downside in the S&P 100 is only 2%. That is Intel. And to the upside, we're looking at a handful of names, 2.5%. So nothing too crazy for the S&P. How about the NASDAQ? To the downside, Team, APP, 4%, 9% for CEG, Constellation, Energy. And to the upside, Micron. Okay. So yeah, some things are moving in this portfolio, but we've got a lot of nothing in terms of things we need to do today to manage the position. But speaking of management, on last call, I joined Nick yesterday, and we walked through this IBIT year-long trade, and we were fortunate enough to have him make a nice visual for us, and I wanted to spend some time in this monologue Friday going over the IBIT position, and then we'll also talk about the micro E-mini position. Jamal is in a micro NASDAQ position, same thing, year-long strangle. We're going to manipulate it as we see fit, but ultimately, if we can pop over to the slides real quick, we can look at the IBIT position. I'll show you the order chains. It's a great position. I'm not going to take it off this year either. So this is going to be really a 2-year long position. But I'm excited for what we can do with the micro E-minis, because I've said many, many times, if I had $1 million or a couple $1 million, I would look no further than just deploying core strategies in SPX. I've always said short put. But this IBIT position has really opened my eyes to the ability to have short call premium on as well, ultimately doubling or having a much larger premium collected over time. And to offset upside risk, you can just shift the whole thing up. So I'll walk through a couple of examples of that exactly with IBIT, and I'll show you what that looks like with the micro E-minis and really any product. But I think one thing that we may not talk about enough is just the fact that, like, yes, if you have a strangle on and you get an upside move, you're going to have short delta. If you want to have short delta, or if you want to under hedge it, you can roll the put side up. But at the end of the day, like, if you don't want to have short delta or short call risk, you can just move the whole thing. Nothing wrong with it. And I'll show you exactly what that looks like. And that's my plan for the micro E-minis. I don't want to have short delta in a 15 VIX big contango in the VIX futures market. I assume we'll probably get another upside. If nothing crazy happens and the volatility stays where we're at, we will likely have another gain on the S&P 500 this year. And if that is the case, I want to make sure that I'm collecting premium around those moves day to day, week to week. But ultimately, I want to offset a lot of that upside risk by just shifting the whole thing higher if we end up getting to that point. So let's pop over to the first slide, and we can take a look at the IBIT position. So IBIT is the Bitcoin ETF. It's super liquid. We trade it all the time. 23 million shares traded today. When you compare that to SPY, 38 million shares traded today. QQQ, 34 million shares traded today. There's been plenty of times too where IBIT, you look in the morning and IBIT shares are light years ahead of trading volume relative to SPY and the Qs. But really, at the end of the day, when we're looking at IBIT specifically, this was a perfect example of implied volatility being greater than realized volatility. IBIT opened the year at like 55, closed the year at 50. Basically a non-move, and I was collecting premium on both sides the entire way. So started with a position that was $500. It was a strangle, and it was a 50-70 strangle, I believe. Maybe it was a 50-65. Let me pull this up real quick. Yeah, 50-65 strangle. Started at the end of December, picked up $565. I rolled that 13 or 14 times, and I ended up with a credit of $3,120. And that was really the difference between being profitable and not profitable, because my ending position was a 65 straddle that I turned into a 60-65 inversion. So let's just call it a 62.5 straddle or a 65 straddle. But IBIT closed at 50. So my strangle, my strategy was 15 points in the money. And you might think, well, you must have had a losing trade. That wasn't the case, because I had collected way more extrinsic value than that 15 point in the money option at the end of the year was worth. So it was like a $1,500 winner at the end of the day. And IBIT positions right now, if you just think about like how much capital you're using for that kind of position, right now, one strangle in IBIT is about $1,700. So ultimately doubled the buying power at that was used in that position. Of course, there's more notional value with a $50 product as it stands. You have $5,000 and change to the downside of risk. But in 1 year, making 30% of notional risk in IBIT, that's pretty darn good. So again, fortunate that we had an inside move relative to realized volatility or implied volatility, given that IBIT started at 55, ended the year right around 50. But now we're in a really good spot. If we consider the fact that I still have over $3,000 in credit, it's currently a $1,900 winner with the nice rally we're seeing in IBIT. But going forward, like my break evens are down at 30 and they're up at 100. So IBIT can trade anywhere in this range and I'll be good with this position. And every single time I've rolled this position, I've been collecting $1.50, $2, sometimes more. And that just speaks to the heightened implied volatility in IBIT specifically. So IBIT's IV rank has been fluctuating. You've seen it drop to the 20s. You've seen it go up as IBIT moves around, but the raw implied volatility, and when I say raw implied volatility, I'm talking about the IVX that you see on the right side of the trading platform for Tasty Trade. That's always been, even right now, it's still 50%. So I say this all the time. If I'm selling undefined risk premium, I want to be in that 50% or higher range. Between 50 and 100% is kind of that sweet spot. Under 50%, if you get closer to 30 or 20, like you're selling premium that doesn't reflect the notional risk, and it becomes a lot harder to collect premium over time, but also it's harder to offset those moves against you if they happen. And when you're selling premium, like gold's a great example, GLD is only 22% implied volatility, but we're seeing this thing fly around like crazy. So GLD is an example of where, I've been more on the debit side versus the undefined risk collect premium for a whole year side. So IBIT, again, final position, 15 points in the money, still a nice profit because that extrinsic value premium collected offset all of that intrinsic value risk. Even though it's 15 points in the money, it still is 10 points in the money. We're still looking very good with that position just because we got paid to take that risk, and that risk really never came into play. And I didn't have to make too many crazy adjustments on this one. It was a pretty easy trade to manage, even though we had IBIT as low as the 40s and as high as the 70s. Still lots of movement. April low after the tariff stuff, right around 42. And then 2 months later, it was at 70. So plenty of volatility, but we were able to move those strikes around and offset a lot of that risk. But really the mechanics for this trade, the IBIT year-long strategy, are the exact same mechanics I'm going to deploy and have already deployed in the micro E-mini futures position. Ultimately, if I'm tested to the upside, I'm going to move the whole thing up and turn that short delta from being tested on the call side to long delta by being tested on the put side. And it's not for everyone to kind of follow the trend or follow the momentum, but there is something to be said about trading a sector ETF like IBIT or SPY or the Qs. I'm using the micro E-minis because it's a great use of buying power relative to notional risk, but still just one contract. And I'm using like $1,400 in buying power to control a 30K notional product in terms of risk on both sides. But micro minis are going to move much less than an equity. So micro minis, IBIT is still very volatile, but when you consider an equity and how they can announce earnings and that thing can drop 30% or rally 30%, it just becomes a lot harder to manage the risk, manage the emotions when you have a trade like that in equities. And we saw that with DraftKings. We had a DraftKings year-long trade, and we had one that was a nice one that wasn't a nice one. I ended up taking shares of stock because, DraftKings went from like 70 to the teens, which is crazy. And yes, that can happen in IBIT. That probably won't happen in the E-minis, the S&P 500, but again, it's just a lot easier to manage positions when your most volatile days to the upside or downside are 2, 3, 4%. And if they're more, again, they're still so manageable. You can manipulate. There's not as much gap risk, I think, is what I'm trying to convey here. When you're selling undefined risk in an S&P 500 product or an S&P 500 sector product like SPX, SPY, XSP, micro minis, futures. So that's what we're doing this year. But let's pop over to the second slide, and we can look at the visuals here for IBIT. So IBIT had quite the run, and we ultimately were flat on the year. Again, went down to 40s, went up to 70s, and we ended right around 50, which is right in the middle of that range. But I was in the money, as you can see. So real quick recap. Anytime we show this anatomy of a trade visual, I want you to focus on the green dotted lines. The green dotted lines are representative of the break even on the put side to the downside, the break even on the call side to the upside, and that is where we ended up at the end of the year. And this is the whole concept. If you're in a trade long enough and you're collecting credits along the way, you will eventually have this kind of stair-step premium received, offsetting break evens beyond your strikes. And eventually it can become a big number like we have in IBIT now. And as you can see represented here by this visual, my break evens to the downside are at 30. My break evens to the upside are at 100. So IBIT can go nuts. And this position net will still be a profitable trade. And I have so much flexibility to maneuver these strikes now with so much credit received that it's going to be really, really tough for this trade to become a loser. If I do nothing, like IBIT literally has to go to 30 or below 30 or above 100. And I have plans for both scenarios happening. So started out the year with a 50-65 strangle. You can see the red solid line is my short put. The red dotted line is my short call. Started out with that strangle and then got some chop between 55 and 60 in IBIT. Time passed, my expiration was nearing, and I ended up rolling out to the 55-70 strangle. So again, I wanted to make sure that I wasn't getting too close to where the stock price was relative to my short call strike. And you can see here, I really was never breached on the upside, which was kind of crazy considering the big rally we saw in IBIT and Bitcoin in general. But yeah, never really tested on the upside. But as time passed, I rolled into that 55-70 strangle. And then I rolled down my 70 strangle into a 55 straddle once Bitcoin dropped to like 45. So I was like, okay, this isn't going to hurt me if I turn this into a straddle and just pick up some more premium to bring in more premium because I have a plan. If Bitcoin gets back up to 55, I'm going to roll out in time and I'm going to move that call strike back up. So you can see that here where my red dotted line meets my red solid line and all you see is the red solid line. Throughout the next couple of months, I was really just stair-stepping this position higher. There was a period of time where I had the 50-60 strangle and then I moved it up to a 60-65 strangle. And then again, I did the same thing. You can see I keep rolling my call higher. You're seeing that stair step higher with my short call strike. And that's really improving my break even to the upside with that green dotted line stair step right in the middle of that chart there. And then eventually, Bitcoin has a nice rally. IBIT goes from 57-ish all the way up to 65. And into that rally, I moved not only my put up, but also my call up. So again, shifting both positions higher to make sure that if I'm tested on the call side, I'm just replacing that short call being tested with my short put being tested. So instead of under hedging where you're keeping your short call the same, I'm literally just moving the whole thing up. And again, there's nothing wrong with that. If you want to make sure that you have bullish delta in the market, whatever market you're trading, you can do that because you can manipulate those strikes for a scratch or a small credit. And again, anytime you roll into a new position, you're still left with all the credit you received from the previous rolls. So after that, though, like IBIT really just chopped around. I mean, the blue line doesn't tell the whole story because the blue line range after I made that last move up with the red solid line there, we were still chopping around, between 55 and 65, we'll call it. So still volatile in IBIT, but at that point, as you can see by my green dotted lines, I had collected so much premium that I was like, we're basically good now. Like I have a lot of premium, and even if one of these strikes were to be breached, I could have gone to a straddle, I could have gone inverted, I could have just kept moving those strikes up. So once we arrived there and I had a ton of premium collected, I knew we would be okay with this position, assuming that Bitcoin didn't have a huge crash or a huge rip higher that I wasn't able to keep up with. But again, that's a nice thing about trading these products that don't necessarily have binary events. It's a lot easier to keep up with the moves that are happening and manage and offset as they happen. Where in an equity, if you're in a product that has a 40% sell-off or a 40% rally after the market closes because of X, Y, and Z being released with an earnings report, that's a lot harder to manipulate. And moving out of the money options out to the next month and up or down is so much easier if you're just dealing with extrinsic value versus trying to replace intrinsic value with extrinsic value with an in the money option. So again, at the end of the day, it was a nice trade. I'm still in this trade, and we're still at that 3120 collection. And I've got the 60-65 inversion. My next step here will probably just be to remove that inversion, go to a straddle, either at 60 or 65, rolling from Feb to March, pick up some more premium and keep the ball rolling. But yeah, it was a great trade. And again, I'm doing the same exact thing with the micro E-mini position. I've collected $700 so far. The micro E-minis, if we can pop back to the platform really quick, micro E-minis is going to be a little bit more tricky because it's a futures product. But through the rolls that I've made, I've made one roll already. I've picked up 140 points. So there's a couple of different ways to look at this. But ultimately, I'm just really trying to call out the fact that the average trade price is going to be the points that I've collected. So started with 93 points, 47 points. I have 140 points beyond my strikes to offset my risk. But based on the contract size, 140 points is really $700. So your position is going to show you the dollar value. But if you're trying to find your break evens, you would want to ultimately look at the analysis here and look at it from a point standpoint. So another way we could do that is just throw on a new position. If we go to the table and just load this up, you can see it's currently trading for 73.50, but I've collected 140 points. So just looking at this at expiration, what does that look like with this strangle? Really, we're looking like this. So if I have 140 points, I've got these strikes. My break even is already all the way up at 73.50-ish and 6,500-ish. So again, we're going to have plenty of opportunity to manipulate this thing. But sometimes these trades can be kind of boring. Like you just said it. It trades in this range, and I'd rather take more of an offhand approach than a hands-on approach. But again, I've got a decent credit collected already with this micro E-mini position. If I get tested to the downside, I can buy back this put. I can roll it out to March, and I can offset this debit cost. So this is how the easiest way you can do this is just look at your debit cost if you're buying back an option, and where can you move this and replace this debit cost. So 6,500. I'd pick up 51 points. I'm paying 45 points. That's a 750 credit, and I'm moving this put down and out 150 points. I'm going from the 6,650 to the 6,500 and rolling it out to March and still picking up a credit. So if that is the case and I do make that adjustment, I'm also going to move the call. And if we assume that the market's selling off, we're getting closer to 6,650 to the downside, I might move that call down to 7,100. It's currently at 7,200. So we have that flexibility to move down and keep that premium coming in with that short call, because I know that if we do get that rally and now all of a sudden we're tested to the upside, I'm just going to move that whole thing up. So let's say I arrive at a March 6,500, 7,200, pick up another 60 points. Now we're at 200 points beyond the strikes. If we do get a rally right back to 7,200, what am I going to do? I'm going to buy back the 6,500, 7,200, and I'm going to literally roll it up to a 7,200, 7,500, something like that. And just make sure that whatever the market's doing, I'm ensuring that if my short call is tested, I'm moving the whole thing up and shifting my short call risk to short put risk. And if I keep collecting credits, which I will in that process, now all of a sudden I have 200 points, 250, 300 points beyond my strike. And that brings my break even down to 6,900 from 72, et cetera, et cetera, et cetera. So that's the plan. I assume it's going to probably be a similar position. I've got IBIT with 14 rolls, and looking at IBIT specifically on the order chains here, we can see plenty of rolls here. Started with 565, made a bunch of rolls, and again, collected $2, paid 30 cents for a butterfly there, made an adjustment here for 40 cents. So this is what I was talking about. I bought back the 55 put and rolled out to a new position. But yeah, picked up $2. Like it's like clockwork. You just keep rolling, you keep managing, and eventually you end up with a big credit that offsets a lot of that risk. So we'll see what happens with the micro minis, but I imagine I'll end up with 13, 14 rolls, somewhere around there by the end of the year. And it will probably look pretty similar. I'll probably have around 2,500, 3,000 in credit. Now, the reason why I'm expecting to get a similar amount of credit is just because the micro e-minis position is a much lower implied volatility product, but it's a much higher notional product. So IBIT is a $5,000 notional product. If you look at selling a put in IBIT right at the money, max loss is $5,000. So if you're ever trading a futures product and you want to know what the notional is, just go right at the money and look at the max loss. So micro e-minis, just throwing up the expiration I'm in, $34,000 max loss. And that tells you that the notional is about half of what this price point is. So 34K notional, and we're ultimately dealing with more notional risk, but lower implied volatility, but a similar buying power requirement because it's a futures product. So getting a lot of leverage by way of lower buying power required, but again, it's the E-mini futures, and we will have plenty of opportunity to manipulate this. Let's say there's a big washout to the downside. We're at 6,650. We just walked through the example of buying back that option, going to the 6,500 in March. And then let's say over a day or two, we go down from 6,650 down to 6,500. Well, I'm going to buy back March and I'm going to go to April. And that's probably the end. And I'll just stay there, because once you get to this 100-day option range, it becomes a much longer term option. There's less implied volatility crush that helps you out. It becomes much more of a delta option because there's so much premium relative to risk, and there's so much time relative to implied volatility value. So let's say this is trading for $5,200. I buy this back Let's go down to like the 6,300, sell that sucker, pick up 2 points or $200 in credit, $13 in credit, I should say. But that's probably it. Now I'm at 6,300 down from the current market price, ultimately 10% lower. And that's probably where I'd want to live anyways for starting to take on intrinsic value risk at that point. I can still roll that short put forward. I can sell a near-term call against it to the upside. I could roll that strangle to this cycle with the intention, again, of if I've ever tested to the upside, I'm just going to shift the whole thing up anyways. So that's the plan. It'll be a good one, and we'll see where we're at. But when you think of the questions, can I trade this through any sort of volatility? With one contract to the micro E-minis, the answer is yes. Are there binary events that can create huge volatility pockets that I can't control? Not really for the micro E-minis. We have circuit breakers in place in the S&P 500. Do I have a plan for upside movements if my call is tested? Yes, I'm going to shift the whole thing up, shift my short delta into long delta because I want to play for the market continuing to the upside given the low IV environment we're in. And last but not least, do I have a plan if there's a big washout liquidation sale event in the S&P 500? Yes, I'm going to roll that short put out and down once for a small credit. If I get tested again, I'll do it again for a small credit. And the nice thing that we're talking about here is if we do get that move, the current rolls that I'm showing you is based on a 16% implied volatility. It's based on an IV rank of 15. If we actually do sell off from 69.85 down to 66.50, down to 6,500, guess what's going to happen to implied volatility? It's going to explode. And that's going to give me an opportunity to go even lower. So that $6,500 or the 6,500 strike roll that I ended up with in this simulated example is based on very low implied volatility. So there's a strong possibility that I could get to 6,400, 6,300, 6,200 with that same sort of scratch roll. And obviously, that's a much better spot to be in than the buy and hold alternative, which is just buying SPY and doing nothing. Because now you're taking losses to the downside, where this sort of position, you can offset your risk in a pretty dramatic way and move your downside risk 10% lower from where the current market price is. And when you ask yourself, like, what is the alternative? Buying and holding SPY. In what situation do I not outperform buying and holding SPY with a strategy like this? The answer is really if you just continue to get 25, 30, 35% upside moves year to year, every year in the S&P 500, because that's really the only scenario where you're not going to be better off from a cost basis perspective to the downside. And if we chop in a neutral way, of course, you're going to make more with selling premium on both sides than you would buying and holding, which would be kind of a neutral P&L at the end of the year. So all that to say, I'm excited for this position. And my goal is to do this for a year, prove that this works with these simple mechanics in place, regardless of where the market is, and continue on for years to go, and really just kind of put a trade behind that phrase that I've said many times of like, if I had $1 million, I'd just sell it, put in SPX. Let's do it in real time, and let's show how you can do it and how it works, because it can be a great core position. And if you expect to get revenue from this kind of position over time, and then of course, whether you're profitable or not depends on where the market is. But to the downside, if the market's down 20, 30%, you're going to be at a better cost basis price point than the buy and hold strategy for sure. So that was a lot. I'm going to kick over to the YouTube chat now, see if we've got any questions about the markets, about whatever. But yeah, join us on the YouTube channel, tastylive, streaming live there. You'll see this video front and center. And you can throw in your trade ideas questions along the right-hand side chat. I've got the referral program linked to the chat. If you're out with your friends watching the Bears game or any of the games this weekend, if you have a friend join Tasty Trade and they deposit $2K or more, you both get $100. So check that out. You can find your referral code in the Manage tab on Tasty Trade, and as well as the mobile app. You can share that directly to them, and it gives them a nice landing page with everything. Okay. If IBIT IV rank, oh, we have the big deal too. How could I forget about the big deal? 4% cash match, 30-day commission-free trading. Scan that QR code for more info. But yeah, match up to 10K. If you got a larger account, you can swing on over and follow along with everything we're doing and join us here. All right, Jackie, if IBIT IVR were to go to 0 or negative, would you exit the trade? No, I would not, simply because, let's take a look here. So IBIT.IVR, you can see the chart here. So we've had some wild swings in IV rank and IBIT, but all through this swing, like even right now with an IV rank, we're on the lower end of the range. What is IBIT's actual implied volatility? 44%. So let's do this exercise too. So IBIT's trading at 53. The 50 strike put is trading for $1 in Feb. The 53 strike put, which is right at the money, is trading for $2, 44% IV. So let's go to the NASDAQ. Let's sort by price, and let's find another price, another product that's right around 53 with lower implied volatility. BKR, 36% IV. That's not different enough to get this point across. S&P. BAC, Bank of America, 53.15, 23% implied volatility. So going to the same option expiration, the 50 strike is trading for 40 cents. So that is less than half of the put that we're selling in IBIT. And the 52.5, let's call it the 52.5, 53, is trading for $1. So the premium in Bank of America, to take the same notional risk as IBIT, you are collecting at least less than half, or I should say at least half of the premium. And in the case of out of the money options, you're collecting less than half of the premium offered in IBIT. So all that to say, if I were to sell a year-long strangle in Bank of America, I would arrive at a premium collected that is about half of what I've collected in IBIT, $1,500, let's say. So the $1,500 being half of $3,000 just tells you that you don't have nearly as much wiggle room to offset risk. And Bank of America, as you can see by these charts, like they have earnings every quarter. Like you can have these big gap downs and gap ups because of the earnings announcements. So there's another layer of binary risk in something like Bank of America that is offering way less implied volatility to take that risk. And I'd just rather be in a product that is around the same price point. And although it does use more buying power, IBIT does rather than Bank of America, but you're dealing with a much higher implied volatility environment. So yes, IV rank is a good indicator, but IV rank for a year-long trade, I'm less worried about because I know that in the course of a year, IBIT and any products, IV rank and implied volatility is going to swing higher, it's going to swing lower, it's going to chop in the middle. So from an entry standpoint, yes, I'd love to enter into a strangle or a short premium trade when both implied volatility is high and IV rank is high. But because I know I'm going to be in this trade for a year, I'm less focused on IV rank because I'm going to be in the trade the whole year. I'm less focused on the day-to-day movements of the product. I am very focused on when I start to get closer to my strikes because, like I said earlier, if you're trying to manipulate strikes when you're rolling out a month or if you're doing it in the same cycle, much easier to manipulate when you don't have in-the-money options. So let's take a look here. Like let's see in IBIT. If I had a short put in IBIT at 53 and I wanted to roll out to March, I would be buying this back and I could roll down to the 50, let's say for a scratch. I can roll out and down to March, reduce 3 points of intrinsic value risk going from the 53 to the 50, and do it for a scratch. Let's call a 15-cent debit a scratch. Now, the difference is, what if I had an in-the-money option at 58 or 57? Let's do 58 because it's $5. If I buy this back for $5 and I'm trying to move it out of the money, can I do that in March? No. I'd only collect $3 to roll out and down to the 53. How about May? No. May, picking up $3. How about June? June, yes. So June, if I had an in-the-money option in Feb, I'd have to roll out to June and down to an at-the-money option to get that same premium. So as you can see, much easier to manipulate strikes, or where you start to take on intrinsic value risk if you're dealing with out-of-the-money options versus in-the-money options. So going to stay in IBIT for the whole year, but day-to-day, not too worried about what happens until we start to get closer to my strikes, and then I'm going to start to focus on making an adjustment. How do you trade MES with high commissions? Commissions to credit ratios 40%. Well, that also plays into what I was saying before of more of a hands-off approach. So like, I'm not adjusting this every day. I will probably adjust this 12, 13 times throughout the year. And yeah, it's a higher commission product than something like SPY or SPX, but it does give me a lot more leverage relative to notional. So if you had a larger account and you were doing, let's say, 2 contracts in the MES, maybe it makes sense to go to something like XSP or SPY directly to reduce some of that commission load. But I'm not too worried about it. I mean, I've made one adjustment and I've picked up $700. So I'm not too worried about it. Can you talk about worst case scenario? Would you ever have to add a second lot? So in the IBIT position, technically I could, because it's a 5K notional product. So like, let's say IBIT crashes and goes from 53 to 25. Well, at that point, there is a certain point where your option position can get so far in the money. Like I'm already with an in the money option. So let's say IBIT goes from 53 down to 25. I probably want to get some more delta there to really chunk away at my dollar cost average, because if I have short put risk at 60, actually 65, technically, I have short put risk at 65. We're trading at 53. I've picked up $3,000 in premium. My risk is all the way below this chart because I have $3,000 in extrinsic value. However, if we go down in IBIT and it gets really ugly, at a certain point, this current options position isn't going to help me anymore if I'm just rolling this forward, because I'm going to be rolling such far in the money options out in time, I might only collect 20, 30 cents. At that point, it might make sense to throw on another short put contract at a lower price point, or just buy 100 shares of stock. Let my in the money short put turn into 100 shares up here, pick up another 100 shares at 25, and then all of a sudden, my break even immediately adjusts to about 45. If I have shares at 60 and I pick up another at 30, immediately my break even on both of those is 45. So this also plays into the power of trading really small. You have the ability to layer into tranches, and that's what I've been doing with the Tasty FX trades too. I'm trading these really small positions, and I'm trading in such a small way to where it doesn't matter what happens day to day. This dollar franc pair, I initially entered November 5th, bought a 5 micro lot position. November 26th, did another layer. 12/17, did another layer. And as you can see, if I didn't do that third layer, I'd still be in the hole like $70, where right now I'm almost at a scratch because of that third tranche. And I'm aggressively reducing my basis on the way down by adding more. So IBIT, yes. MES, I will not do that, because MES is already a 30K notional product, which is a really expensive product from a notional standpoint relative to account size. So I'm going to stick with that, sticking with one contract, moving it as low as I can. And let's say things get really crazy. Let's say E-minis are down 30, 40%. This is still an undefined risk position with $1,800 in buying power. $1,200 in buying power where I'm at right now. So technically, if I really need to, and let's say I'm at in like March or April, and I'm down at like 6,200, whatever, and the markets are crashing, I still have the ability to buy an out of the money option. So if I'm down at 6,200 with a notional risk of 30K and a buying power of whatever, if it's creeping up in a really aggressive way, I can go way out down here and just buy one of these tail options. I could buy a 3,000 strike and reduce my notional risk in half. This immediately cut my risk in half. I could do a 4,000 or whatever. I could give up some of that premium that I've collected to the day, to that date or that period of time, buy a put, and just immediately eliminate a lot of that buying power requirement and a lot of that risk. So that's really the worst case scenario. Is you do a couple rolls, you're rolling out and down, the markets are still crashing, we're down 30%, 35%, 40% in the E-minis. There might be a point in time where I just buy that protection because I would assume if I'm in a long-term position and that put is purchased, maybe you get something like this where markets are crashing and then you get a swift reversal. But even if it doesn't happen that way, I can buy that put. Let's say that put goes in the money and now we're really crashing. I could roll this thing forward for a debit. I could roll the put forward and move this put down and out. Like there's a lot of different things we can do if we stick with one contract here and roll a couple times. If I need to buy protection, I can do that. And I can still manipulate that trade as things are happening. But of course, we don't want that to happen. But that's really the importance of trading small. Trading small allows you to absorb a ton of variance. And if you're trading at a size where you can only absorb a 5% sell-off in the market, a 10% sell-off in the market, eventually you're going to get clipped because the markets will sell off 5%. The markets will sell off 10% eventually. We can't see why or when or how, but it's going to happen again. So that's why we always say like trading small is your best defensive mechanic because you don't know what's going to happen, when it's going to happen. But if you account for it happening up front, when it does happen, you're not scrambling with margin calls and X, Y, and Z. So for year-long core positions, trading small makes a lot of sense for that reason, but it also makes a lot of sense because you know you're going to be in the trade for an entire year. You're going to pile up credits along the way, and it makes for a much easier feeling trade than if I'm like levering up to the gills here, and then all of a sudden something happens and I have to scramble to mitigate the risk. What else we got? Wondering if we get a weak close today, risk off for long weekend. Totally, it could happen. You could see a little selling. You could see maybe a little VIX pop for some hedges coming into play. But yeah, we will see. Why are the deltas and SLV so different for at the money puts? I mean, it's likely due to it's obviously definitely due to the recent rally we've seen in silver and SLV. The difference in price point for these contracts is interesting, but when you have super high implied volatility for a product itself, you tend to see deltas can get out of whack. Like you can see this at the money delta is actually higher than the spot price, but SLV is at 80 and the silver futures are at 88. So definitely something there, but it really has to do with the divergence between the spot and the futures price and where the deltas are. Like if you look at the VIX is a good example of this too. Like depending on what expiration you're looking at, if we go out to March, you'll see the same thing. At the money deltas, or where the premium is similar, is really like around the 19 handle, but the VIX is at 15. The at the money premium, where both of these are trading for 250, is at 19. So silver having a crazy range, crazy moves the last couple of weeks, you're seeing sort of a similar divergence between spot and future price, and that's why the deltas can look a little wonky. Am I still bearish banks? Feels like I should be. Ooh, Goldman Sachs coming into play. Okay. Yeah, we had this 900 strike calendar. This would be crazy if this actually ends up being a scratch, but we had the Wells Fargo trade. So that was the bearish bank trade that I had. That was a nice winner. And then I was like, hey, let's continue on with Goldman Sachs. And then Goldman Sachs ripped 50 points to the upside. But this one, because it's such a high price point, we went with a really near-term calendar spread to keep that risk small, $350. Wells Fargo was like a $160 winner here, just another small diagonal spread, 5 points wide. But yeah, I think the banks have been moving to the downside recently. If you want to continue to be bearish banks, that's up to you. But yeah, they've been weak. They were the strongest sector to start the year, and then they were the weakest from earnings. So kind of crazy. Sounds like a perfect plan. I'm currently waiting for the fall in S&P for this year's tasty trade. Yeah, again, there is absolutely risk with this trade. Don't get me wrong. But when you compare it to buying and holding, I think there's a lot of ways where you can have a strategy like that outperform a buy and hold. At least if you're doing it from 1 year's time frame. If you're buying and holding for 10 years, 20 years, getting into that long-term tax bracket, getting the dividends, totally get it. But if you're trying to use options to mitigate delta risk as the markets move and pick up premium and really position yourself for a nice year if the markets don't move anywhere, and a nice year if the markets are down 5% or down 10%. Like there's a very strong chance that markets could be down 5% this year, but this micro mini position is profitable. And that's just because we have the ability to move this whole thing down, move the put out and down, and keep piling up credits, not paying debits to do that, but keep piling up credits. And that's really the difference. Would you expect the same results with a year-long SPX Iron Condor? Great question. So Iron Condor, in terms of the same results, definitely not. And that's just because you can have a really nice year. Like if the markets are flat or the markets chop and you're doing like weekly Iron Condors or monthly Iron Condors, you can have nice results. But what are the differences? You don't have the flexibility that I just talked through. You can't roll a put spread out and down dramatically for a scratch. If a spread goes in the money, to roll that out in time or to move it, you're going to pay a debit. So that goes against that number one rule here of this position, where we're just piling on credits or we're making adjustments for scratches. Spreads are going to eat up a lot of that capital. So the premium I've collected so far, if I had done this with an Iron Condor instead, you can chop off a lot of that premium I've collected because I'm defining the risk. So there's a give and take. And of course, if you're doing near-term Iron Condors, you're going to have more legs associated with the trades, and that can add up too. So really, I think the biggest difference is the lack of flexibility for defined risk versus undefined risk. But I totally get it if your account's not there yet, or if you still want to keep your trades defined risk. You could do something like that and follow similar mechanics. It would just be like setting it for 30 days and having a couple of things you can do, like rolling a spread out in time if it gets tested. But it's really more of like put it on every 30 days or 45 days, put it in a GTC order to close it at 50% profit. And if it hits, then you redeploy. Can you do just this strategy? Just place 5 to 10 strangles and 5 to 10 different symbols in the beginning of the year and just manage them that way. Seems like a good way to trade. You totally could. Totally could. Again, I think just emphasizing, like, if you're doing that in equities, it is a different beast than something like if you had a strangle on in, let's say, IBIT, GLD, QQQ, IWM, SPY. Like if you're covering different sectors, they're related, of course, have a positive correlation. But yeah, you could do Dow, Russell, NASDAQ, E-minis, and crypto or gold or silver or something like that. And that gives you the ability to have exposure to a ton of different products, kind of get out of the earnings realm, and just have core positions throughout. But yeah. Also, if you're weary, just watch this position. I'll have this on. You can see how it's going, how it's doing. And the nice thing is all of this is tracked on the follow page as well. So if you want to have a more in-depth review, you can click on my name on the follow page, type in IBIT, and you can see all of these positions. So this was the opening trade, 1223, picked up 565, and then all of these adjustments up here were trades I made last year. And every single one of them, I have a comment here. So you can click through these and see exactly my thought process at the time. I certainly do not remember what I wrote down every single one of these, but yeah, I always try and keep up with my net credit received, so you can see how that compiles throughout the year. And yeah, check that out if you want even more detail. Wow, I'm way over. 11:58. I got to get out of here. Thanks for tuning in. If you have any further questions, let me know. You can find me on Twitter. I'm at Trader Mikey B there. Before I go, though, I would like to send off our very own John McGloin. Retiring. Must be nice, buddy. It's time for you to get a little Instagram account, maybe a TikTok. Show us what you're doing as you travel the globe. But it's been a pleasure working with you, seeing the office every day. I'll see you a little bit later today. But good luck to you. I'm jealous. I'm happy for you. And Godspeed. But stay tuned. We got plenty more content on Tasty Live on the YouTube channel as well as tastylive.com. Go Bears. And I'll see you same time, same place, 11 a.m. Central on Tuesday. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
I got 'em all shook up for me. 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 I'm taking it over. Just take a look at me. I'm breaking laws, got it under control. Got 'em all shook up for me. I'm breaking laws, got it under control. Got 'em all shook up for me. 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 Got 'em all shook up for me.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good.
What is going on, everybody? Welcome back to Risk Reward. Today's Friday. We had another week in the market. Things got a little bit aggressive in the morning to the downside, but we're cooling off a little bit here. But we'll get into all that. I hope everybody's doing well. My brother Gus, how we doing today?
Doing good. We had another week in the market, indeed.
Had another week.
One of the weeks of all time that we've experienced here. I'm doing good, hanging in. Got a haircut scheduled for later today. Finally gonna clean up this mop a little bit. It's been far too long. So looking forward to that.
No, that sounds fire. I need one of those too. I need to book something here soon too. Sometimes it's getting a little crazy. It's getting a little frizzy. So I feel you on that. The locks are looking good though, bro. It's looked like you got it down pat still. So don't do nothing too crazy on us.
Yeah, no, just taking some length off. I like to keep it just above the eyes. We've gotten like 2 inches past that, so gonna just hone it back in a little bit. Looking forward to seeing my girl Amy. It's been like, I don't know, I usually go, I'd say once every 2-3 months. It's been like 6.
Nice.
So
You've been
gotta get back in there.
neglecting. No. Anyways, it's been 24 hours. Anything new over the course of the last day or so? I don't think there's really too many headlines really popping out, on my end. Nothing extremely exciting. But what do you got?
Novo Nordisk is looking good for me. Novo Nordisk has been the worst position in my portfolio for some time now, fully winning the WOT award on my end. But good headlines broke today regarding the Wegovy obesity pill. So I guess results were good and initial sales have been good. So a little 5% pop for Novo there. I got a long, and I cannot stress enough, long way to go before those could be profitable. But it's good to see a start happening there. And on that same vein, I was reading a headline, or just a story yesterday about how they are. The market is legitimately expecting airline costs to go down as these obesity pills gain prominence, which is something. But this is like a real thing. Okay. I'm not making this up because if the average weight of Americans comes down, then airlines have to use less fuel. So There's one for you. If you guys want to make any sentiment trades based on that information, that is something that's on the radar.
Yeah, no, I'm curious to see how that would go. Like, I know one example for inflation. A lot of companies will take advantage of inflation, raise prices, and then whenever inflation cools back down a little bit, they'll keep those prices at those levels to take advantage of that a little bit. So I don't know, maybe it's going to be the same thing. Hey, we increase these rates a little bit more because of the weights, the average weight of the American. So I feel they might even try and keep them there, even if we got some data on that end. But no, that's actually very interesting and kind of a funny angle. But we'll
we'll keep.
Yeah, I don't think I'm not talking. I don't mean air travel costs for consumers. If you think that airlines are going to start saving some money and therefore start taking down their costs for consumers, no. But it will reduce the cost that airlines themselves have to spend on fuel and everything on the liability side of their balance sheet should theoretically come down a little bit as these things grow. So interesting parallel there. But I mean it makes sense. It tracks.
No, it does absolutely. And on that note, we can jump into the Tasty Trade platform. We'll touch on some of these other companies as we get into it for today. You said Novo Nordisk has been catching your attention in the portfolio for the day.
Yeah, that's NVO. Interesting.
Yeah, it's definitely a runner on the day. A gap up and a continuation as the market opened up today. Pretty solid premium and a lot of volume traded on the day. It's liquid.
Yeah, pleased with the continuation more so. This is one that loves to fake me out all the time. It will open higher, and I'm like, is today the day we're finally going to stop sucking Novo Nordisk? And it never is. Yeah. Never is. But this is just, these pharma companies, a lot of them, and particularly the companies with good exposure to weight loss, which Novo Nordisk has, have had really great years in 2025, and Novo has just been lagging behind all of them. So, trying to be contrarian there. I have very long dated contracts into 2027, so we got about a year left in the tank for this to continue to run. But I would need something like, 85 level probably to be in a good spot on these with how long they've been out of the money already.
Oh, that's nice.
What's going on, Rhett? Jackie? Good to see you guys. Greg?
What's going on, guys? Hope everybody's had a good week. We've had another week in the market out of one of the many weeks we've had in the market this week. But yeah, no, nothing as exciting on my end, I'd say over here, guys. We took a couple of trades today in the micro Nasdaq, still not getting much opportunity like we would have hoped to see in the beginning of the year. So far for Nasdaq at least, so we'll touch on that in a little bit. And then Netflix, we're down on a little bit from here. Kind of on the dance floor again. This hasn't been moving too much. Netflix hasn't been a very volatile stock. We kind of been having a lot of inside days. We've slid over the last half year, but since then things have been a little bit slower. So our strike that we sold is being tested right now, but we got 35 days left till expiration, so we got a little bit of time on that. See how that pans out. There's no news that has popped up over the last 24 hours that you've heard of with Netflix, right? I feel like there's always some random comments or headlines being thrown out there that I wasn't aware
of. No, I'm definitely always keeping my ear to the ground on the Paramount Netflix back and forth that they have going on. But no, last update we got was just earlier this week that Netflix is looking to move to an all-cash offer for Warner Brothers. No updates on that at this time or what that offer is going to look like, if they're going to stick with their original number and just make it all cash, or if they're going to continue to move up higher, because even if they switch to all cash, Paramount's would be higher now. So it'll be interesting to see how that transpires. But earnings Tuesday could definitely save you. We'll see.
Oh, that'll be exciting. A little bit of some Netflix earnings for next week. Maybe we get a little bit more volatility out of this position. Kind of been watching paint dry. So silver, that hasn't been the case. Silver has been an absolute rocket. We've been getting the pullbacks in the asset, but the pullbacks have not lasted very long. If anything, we've been putting in a new high. And the pullbacks, over the last week and a half, didn't last any longer than, maybe 24 hours. So silver continues to impress. These metals are no joke, extremely volatile. I know some of the margin requirements continue to increase on something like silver. So that's just something to keep top of mind. But we always have products like gold as well if we want to ever dabble and get a little bit of exposure to the metals market. But silver continues to impress as we close off the week here, guys.
Yeah, silver, taking a little bit of a dip today.
Yeah.
And it's crazy, this run, because even when we just get a gap down that actually holds, we're pretty much just unched on the day from where we opened at this point. But anytime there is a gap down that actually sustains for longer than 5 minutes, I'm always that's a good sign for our shorts at the very least. But am I even one single iota confident that this could be the end for silver? Absolutely not. Absolutely not. This thing has been an absolute tank, has not slowed down, and this is not the first time that we've seen, 2 days of downward, I use that term lightly, action on silver, and then it just rips right back to the upside. So, certainly could have a lot of gas left in the tank. I'm not entirely sure, but we did pick a fairly good time to get short if we were going to do it, although I'm going to continue holding those shorts. As I've expressed many times, I think whenever this runs out of steam, it'll run out of steam pretty hard.
Yeah, it'll be exciting. It'll be a little bit of a waiting game on our end, but we'll keep an eye on it. Something that will definitely be top of our mind day to day because this metal story continues to impress, continues to leave me speechless, continues to put in numbers I don't think we've ever seen before on silver. So we'll keep an eye on it. And I know...
Yeah, CoreWeave logging another good day for me as well.
Is it?
So,
CoreWeave still out there putting in numbers?
CRWV, don't forget that V. I'd like to.
My finger, tell me over the keyboard, literally hovered over the V. CRWV. There we go.
Yeah.
Putting up numbers on the board again for the day, guys. This might be the GOAT as of recent.
Finally catching a little bit of steam. I'm very, very green on this position. I have 2 short put verticals at 85 being my top strike. So feeling safer and safer as this continues to run higher. This is one I'll probably wind up taking off half before the end of the day today, just because I have to and I have that luxury. But there is still a lot of juice left to squeeze out of these contracts with 91 DTE. So don't want to fully liquidate, but I do think I'll be trimming this CoreWeave position.
Nice. It's nice to be up that much, especially with still having 91 days left till expiration. Gives you a lot of time to adjust, a lot of time to really think about what you want to do. And it's also nice to be sitting on a cushion like that with so much more time to think about what you might want to do on it. So shout out to CoreWeave. Shout out to CoreWeave.
Yeah, I call it the Gus paradox. If I go defined risk, I'll wish I didn't, and if I go undefined risk, I'll wish I was defined. It's how it always seems to go.
Is gonna be that you're gonna wish you bought more.
It's true. The only thing you're going to regret is that you didn't buy more. But other than that, I don't know. Let's talk some losers. Let's talk what's having a bad day today.
I got a couple losers on the board for the day, which we'll get into in a minute. But what's been sliding a little bit?
Yeah, I mean, Bitcoin starting to come back to earth a little bit, if I can even use that expression. It was never exactly off of earth in the first place. We were just beginning to recover.
Depends who you're asking, yeah.
Yeah, it depends who you're asking. But a little bit of a slide today, which I don't think is particularly alarming as long as we don't start to retest, 92 and then 90 after that. I think that this is just sort of a healthy breathing day going on there. And then... what else is down here? Frontier Airlines is something I got long a little bit ago. Not having the worst day in the world by any stretch of the imagination, but I do have another. This is another 91 DTE. I needed over 6. It's at 513. That's ULCC. You would never ever guess what the ticker is.
As I was over there hovering like with the FRON, looking for it, ULCC. Okay, 40 IV rank to almost 3 million shares traded on the day. Not super volatile, but a pretty cheap underlying there. It's looking like.
Yeah, if anyone in chat can tell me the rationale for Frontier Airlines ticker being ULCC, I would really appreciate it. Did it used to be called something else before I became aware of Frontier Airlines, or
yeah?
Well, what are we talking here? I have no idea why that's their ticker. It's always perplexed me. What else? What do we got? What do we got going on over here in chat? Netflix earnings next week. Yep. We have a Fed speech before close. It's true. The Fed is becoming less and less relevant. That's why metals are flying. That's also very true, Agent Burr. Good astute observation.
I mean, yeah, it's almost looking like everybody's ditching the indices for the metals. It's almost like the metals is a new playground, and the indices are out left to dry for now.
Yeah, I mean, you could pick any 1 month time frame since October for metals, pretty much, and it would outperform the broader market by a mile. I mean, it wouldn't even be close.
Right. I mean, we got platinum right here, right? This platinum doesn't get as much love, but platinum has been putting in some really impressive moves, some impressive numbers at the same time. But yeah, that's a really great point that you make, because it seems like a lot of the attention and a lot of the trade, especially the short-term trade opportunities, have been on a lot of these metals too. So. Definitely need to keep an eye on cobalt and some copper for sure.
Yeah, anyone have physical platinum out there? I'd be intrigued to know if you like. Some people got physical silver, and that's kind of one tier of being a hardo. But if you got physical platinum laying around your house, that's you're deep in the weeds with the metals and sitting pretty right now.
Oh yeah. With that being said, we can go ahead and jump over to the Trading View platform. We'll take a look at a couple of the things that we did over here on NASDAQ. But yeah, not too much fun on the day, Gus. And I gotta say, even just to start the year, not many, opportunities that we're too satisfied with. But nonetheless, we always have to manage our, trades whenever they go south against us, and we've been doing a good job doing that over the last couple weeks so far. So this morning we were looking to take a long position. We cut that about 2 points in, I think it was. This is one where we took the position, and because we didn't have enough clarity, it was one of those where. was like, I didn't even have a game plan for that one. So also just showing the reality of trading sometimes, showing the reality of impulsive decisions, and then you kind of recorrect yourself right there in the moment. So
sometimes you can't fly unless you jump off a cliff, you know?
Yeah, exactly. You know, it's a great that's a great point there, actually. But that was the first one of the day, brother. You know, starting off the day there, we got a lot of selling in the morning. And I don't know, didn't expect a lot of selling this morning on a Friday. But we'll take it. A little bit of expansion in VIX. We got to look at that as well.
Yeah, I need to look into our research studies that we've done in the past, because I'm sure that we have looked at this. But is the Friday volume situation a myth? Is this something that I've just perpetuated and make too big of a deal out of in my own head? That there's generally less volume on Fridays, and I guess I would venture to say
maybe a little less
statistically significantly less volume on Fridays. I don't know that I necessarily believe that there is.
Yeah, I don't know. I mean, just thinking about it right off the bat before looking at numbers, would there be less participation on a Friday? I mean,
Fred, thank you. ULCC, ultra low cost carrier. That's what they're going for.
Is that really
there.
what it is?
I'm willing to believe that that's what it is. That seems like something that one of these budget airlines would go for. Is that, Fred? I would some further clarity would be great. Is that just what they were going for? They've been Frontier the whole time, or were they actually called ultra low cost carrier when they started up, and now it's become a shift? I could do independent research on this after as well. But yes, appreciate that. I think this morning was influenced by a possible SCOTUS release on tariffs. So are we back to that? I knew that they had kicked the can down the road, but I figured the road would be longer. Usually when the Supreme Court
the road would be longer.
Usually when the Supreme Court kicks the can down the road, that means like a month, not like a week.
That's funny. Yeah, didn't realize that. But were there more talks about that? I'd be curious.
There was some tariff stuff happening today with the whole Greenland acquisition situation, where they're trying to create some tariff leverage there. It appears.
I gotcha. Second trade of the day on NASDAQ, we were dipping back down, or we were dipping back up into our value area high. And one thing that we were really mindful of, and another reason why we were so quick to get out of some of these trades, is we didn't really get a lot of market behavior to really prove to us that we're trading within balance yet. Because this first trade that we were going for was more of like a dip buy, kind of off the value area high. And then once we sold off into this level of value, essentially the psychology of what we were really looking for was to see if the market was indeed trading within balance, right? Especially because it hasn't showed us we were trading within balance. This stab at it was a little bit more of a guess, right? It's always a little bit more of a guesstimate when we're trading, but this one was a little bit more of a guess because of the fact that we haven't proved to trade within balance yet. So taking that short off of this value area high over here was kind of us expressing the fact that we believe that prices were getting a little bit too expensive, and then also getting proven wrong there with getting stopped out. But that was a little bit of the psychology of it, a little bit of the context, which added to the attractiveness of the opportunity. Yeah, no, it's a tricky one on the day, especially whenever the market kind of is a little bit wishy-washy with whether it's like a value area high or if it's a value area low. Whenever we start using it as a level of support and then we start using it as a level of resistance, whenever we flip-flop like that, especially within the same trading session, that's when you know things could get a little bit tricky. Because over here, it's really nice to see that the market is at least acknowledging these levels. Like if we look right over here, if we can find this tool. Like if we look over here again, we can kind of see how the market will, acknowledge the existence, right, of this level. But once again, whenever we're flip-flopping on the value area high, and it gets a little bit difficult to tell if we're trading within balance or we're trading within value or we're going to leave and go seek a new level of value. Whenever it's doing that, it's like, all right, let me pump the brakes a little bit, take my hands off the wheel and wait for a little bit more clarity. But yeah, let me zoom out a little bit to see what type of range we were trading in. Because I think if we zoom out a little bit more,
minus 12. Minus 12 is heavy.
Minus 12. Oh, right here. Oh no, that was the points. That wasn't 12 contracts.
Oh, I see. Okay.
Yeah, no. No, just looking at this from that's funny. Just looking at it from a market structure point of view, sometimes we can get stuck inside of these swing highs and swing lows. So even just zooming out a little bit more, it'll be really interesting to see if we can really get outside of these larger ranges that we can kind of see here too, just from like a structure standpoint.
Yeah, I mean, I think this is just a good synopsis of kind of the week that we've had. I mean, there really hasn't been too much action to try to get after. We had a little tiny move up in VIX. You know, we touched 1750 on VIX, and then just come right back down after the SCOTUS tariff situation gets squeezed out, and then we're pretty much right back to where we started.
Yeah.
This is not what I've come to expect in modern times. Usually we're ripping in one direction or the other.
Yeah.
It's rare to have a week like this where iron condors could have worked.
No, 100%. But it does kind of seem that maybe the market is prepping. Maybe we're setting up for something in the next maybe week or so, maybe or two. One thing that was really interesting that happened this week was the fact that, especially today, one thing that's really interesting was the fact that it was nice that we were able to trade to this value area low earlier in the week on Tuesday here, and then we got rejected, selling back off to our next level of value. Now, once we reach this level of value here, the market has never really proved to now then again trade within balance. We've kind of just been all over the place, right? Like we have this value area high here, this value area low here. We traded beneath this value area low. And before we could even reach the next level of value down here, we reclaimed this value area low and then shot back above this next level of value that we had that we were previously trading in, which typically will have a long bias whenever we break out of a level of value. If it's to the upside or if it's to the level or if it's to the downside, we'll have a bear bias. So it was nice to see that yesterday, this day, and then towards the close yesterday, we bounced right off of our value area high. But to see the market fail twice over here at this value area high without being able to reach our next level of value is just extremely interesting to see. And then is also just another testament to kind of the lack of volatility that we've been seeing in the market at the same time, which can kind of just add to and give you a little bit more, I guess, a little bit more confidence to know when I should be getting involved in the market and when I should be maybe deploying some more capital at the same time. So just a little bit more of the 2 cents in terms of what the market's kind of been giving us and what's been interesting over the last 2 days. Because it's been slow. There's definitely been a lack of volatility. And to the point that you made earlier, we have been trading in a very large range with really not much overall direction to the market, for sure.
Well, yeah, and it's not even operating like a nice channel where you can, start to get this read and play the bounces back and forth. It's really just been we've stayed within the range, but as far as how the movement comes within it, it's been fairly random. There's not many spots that are super easy to read here. Head and shoulders. I see a head and shoulders. Why didn't we break out or crash? Which is it? I think it's
it's whatever you want.
I think head and shoulders is bearish, right? I have no idea.
It's whatever.
I don't do astrology.
It is whatever we want it to be. It'll be interesting. I'm excited, though, for next week, though, especially the fact that we've been trading in a range for a while. We'll sometimes then get more of a directional move later on, but it takes a lot of patience sometimes to wait for those. So we'll manage our risk best of our abilities, sit on our hands the days that the opportunities just aren't showing itself, and then we'll capitalize on the directional opportunities whenever the market wants to give it to us. But we just got to be present and aware and in the moment to catch them whenever they do come. So I'll leave it on that note, but anything else top of mind on your end, brother, before we wrap for the day?
Yeah, I'm seeing a headline coming in right now that says the giant offshore wind project is resuming construction. So
okay, that's exciting.
That's where we're at on that. A judge has lifted the Trump suspension. That's pretty much all the information that we have at this time.
So the market's going to move now.
Coastal Virginia offshore wind will resume construction after a federal judge on Friday temporarily lifted the Trump administration's suspension of the project. It's under U.S. Dominion Energy. So there you go. Dominion probably rocketing right now. I would imagine if anybody wants to get in on that. DE. No, that's John Deere.
JD John Deere or DJ JD?
No, what?
JD.
JD is JD. DE is John Deere. Dominion Energy. Is it DOM? Is it DO? It's something like that.
Something like that. We'll find it.
Yeah, we'll figure it out. But cool. That's the breaking news as we head off here.
Awesome. Anything else top of mind for you?
No, that's what I got.
Cool. Fred, Greg, Arjun, Brandon, everybody else, thanks for taking the time to hang out with us. It is the end of the week. We'll manage our positions, and we'll be back next week. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me. You gotta look up. If it kinda like it way.
We're back. It's still Friday, January 16th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's another week here in 2026 gone by with another day of interesting news out of DC.
It seems like it's been, at least 6 months. Come on. If not a year, as far as news flow. And here we are. It's January 16th. And the plates are being juggled in ways that I don't think anybody imagined.
Kind of reminds me of the start to 2020.
It sure does.
In time, we had only
it sure does.
A little bit about a novel coronavirus making its way through Asia. It hadn't yet reached the United States. That arrived on January 28th, but I don't think there's anything going on like that right now in the background. We're more concerned with what's happening with the Federal Reserve, which has been in focus from the front and the back of this week. We started off, of course, with Fed Chair Powell being subpoenaed by the Department of Justice related to cost overruns to a building that taxpayers don't fund. And the cost overruns, as Powell pointed out to Trump on camera in July, were related to a different project. We're ending the week with some news this morning from President Trump. He was talking at a press conference and gave a little nod to one Kevin Hassett and said, I kind of like where you are right now. So what has the market done today? It said, hasta luego, Hassett. You are no longer the favored candidate to be the next Fed chair. Hassett's odds were north of 60% at one point this week. They're now sitting below 20. And so with that, the dreams of unadulterated, endless easing come June, Ilya, they seem to have dissipated somewhat with today's action.
A little bit. I think when you look across the bonds here, I think the most impactful seems to be the move in the 10-year, where you're actually making some headway through some critical levels here. That low that you had from early December, that's under fire here. Likewise at the front end, although it's a little bit more back and forth, but very interesting to see how well the 30-year is holding up. It's down. Everything is down, but it's not giving up its attempted upside break at this point from earlier in the week. It still seems to be showing a lot of intent. And when you look at the policy expectations here, I mean, obviously nobody's under any kind of an illusion about January. It's 95 hold to 5 cut. So it's not even on the menu here remotely. But what's interesting is that the whole calculus has somewhat shifted. We're going to get, according to this latest set of expectations, 1 cut in June, and that's it. Maybe we'll get one in December. The odds have narrowly shifted to a second cut in December. So the timing here has moved around considerably. We've gone to 44 basis points for this year, which is favoring 2 cuts, but with a lot less gusto than we've seen in quite a while. This is the least dovish 2026 forecast that we've had since mid-May last year.
I don't know if those forecasts, at least the market's expectations of what we're going to be seeing with respect to what the Fed may do this year, will change all that much over the next week, Ilya.
Probably not.
While we do have a more substantial set of companies reporting over the next week, this week was only about 5% of companies reporting. We're going to get up to about 20% in the coming week. the bigger week is really the week after that final week, full week of January. There is no major U.S. economic data release, at least up front the next few days. I'm looking at the calendar starting on a Sunday night here, because while we have our long weekend ahead of us, Martin Luther King Day, of course, is Monday, federal holiday. There are pieces of information coming out, particularly from China Sunday evening, that could have a meaningful influence. Their GDP report, of course, is due out. And then Monday morning, we're going to have Canadian inflation data. So that being a bit of a canary in the coal mine with respect to the U.S. trade relationship and how our economy is behaving may not be ignored by futures markets or spot FX, which will be open. So tell me, for the first half of this week, I mean, really, are we paying attention to that Chinese GDP figure on a Sunday night for the most important event to shape our expectations?
I suppose you could make the case that U.S. markets are going to be offline. And so there's going to be a bunch of pent up liquidity in response to whatever comes out between where Asia Pacific markets come alive and, let's say, their Tuesday AM, and going into sort of U.S. markets reopening, you probably get a little bit more commotion than normal on a Tuesday morning, especially around the Europe-US overlap, because Chinese GDP will come and go. This is not the world's most impactful indicator in the current narrative. Sometimes it is. This is not it. But any number of things could happen over the weekend. We might seize more tankers. Something might happen in Iran. The sort of range of possibilities for things that could spark a jumpy open on Tuesday that are not listed on this calendar and couldn't be listed on the calendar because there's just so many balls in the air. The list of possibilities is vast. All kinds of things could happen here, because as though having a lot of balls in the air on trade policy were not enough, now we have a lot of balls in the air on military engagements as well. And your sound is gone.
Oh yeah, second half of next week, I do see a BOJ rate decision. While there is a U.S. GDP report, it's the final iteration of the third quarter release. The advanced estimate for the fourth quarter, which would typically be coming out, well, next week, delayed ever so slightly because of that U.S. government shutdown. The BEA has the GDP advanced estimate, the first release now for February 20th. Yeah. So GDP, it's going to come in a little bit firmer, it looks like. The growth trackers that we've seen here in recent days that we reviewed on the show have been getting firmer, okay? 5.3% is the Atlanta Fed's update for the fourth quarter. We're not going to get a new update for that until Wednesday. The New York Fed nowcast updated this morning is now at 2.71%, up from 2.62, and their high range estimate is now at 5.05%.
Interesting that stocks haven't been able to close above their high since October against the backdrop of an economy that looks, by all accounts, quite healthy.
Is this one of those corrections in time rather than price, where the mere fact that we've held steady for 3 months, and during this time we've seen Fed rate cut odds get whittled down? It's been counterbalanced by improved margin growth, and so net while there's been no change, or at least adapting to a future where we're on stronger footing than I think many people thought we were.
I think that's certainly possible, and you and I have had this conversation. Whereas I was a lot more circumspect about being long stocks last year. I was mostly either short or flat. I bought the bounce from April, but I stayed in it for a very short amount of time. And it was really the momentum and the breakneck and the hype. Now that we've sat in a range basically since October 29th Fed meeting, where Powell came out and chastised markets for overdubbing it, if that's a word. If not, I've coined it hereby. We have a long period where things have been rebalanced, digested. If you were to actually break out now, that could be a much healthier move higher than what would have been were we breaking out in a more straight line. So this is a lot of consolidation. And if it breaks higher, I'm with it. Let's go. But it's very interesting that even with as strong as the economy has been, the markets want not just rate cuts. They want more rate cuts than the Fed wants to give them. It makes you think that the markets are not thinking about just the economic data, whereas the Fed probably is.
No, and there is a critique here about the GDP numbers, which I think is one of those worthy points of discussion. Why isn't the market doing more with this? We talk about a K-shaped recovery. In the first half of last year, and we're not going to have the full numbers for a few more weeks, but we may be able to say that 2025 growth, it's really just data centers. In the first half of the year, if you took out data center growth, US GDP would have only been 0.1%.
You know what's fascinating about that? 30% of sales for companies in that space is China. And we are actively breaking our links to China.
We're actively doing a lot of silly things when it comes to China. If we really want to keep Chinese goods out of our markets, I have no idea why and how we allowed the Canadian trade relationship to deteriorate to a point where Mark Carney is out today heralding a new world order that he welcomes by dropping the tariff rate on Chinese EVs from 100% to 0% in exchange for more trade with Canadian farm goods. You know who typically buys or typically bought those Canadian farm goods? The United States. So well done. We now have cheap Chinese cars flooding Canadian territory.
You
Wonderful
kind of
news
get this
for
sense,
U.S. companies.
You kind of get this sense that it's almost like a former partner trying to spite you. It's
one way to put it.
In part, I think more optics than intent. It's maybe more so geared, this kind of thing, to say, well, you see what you've gone and done, America? Now, won't you stop it? We got to renegotiate the USMCA this year, and cars are a huge component of the USMCA. Won't you stop messing around? Let's get this thing resolved. Maybe that has a certain resonance this year, but if you look at the trend, I was just reading about this earlier today. Global multinationals have definitely taken the hit. There's massive divestment out of China. And if you look at their foreign direct investment numbers, they've been negative for ages. And if you create those incentives, sure, that's going to happen to some extent, but only to some extent, because substitutes sometimes don't exist. And so all of this nearshoring without being adequately prepared to actually have the supply chains to do it, which no one is, because all this is happening haphazard, you're just going to end up with less profitable companies, worse earnings, more expensive things, deficits in terms of goods, in terms of companies getting smaller, poorer. And of course, all of that is a thing that stock markets face to various degree, which perhaps is why what they want is cheap money.
I know that we're waiting next week for a potential tariff ruling. So the Supreme Court added another day next week in which we could potentially see them issue an opinion about the tariffs. We've had a few false starts in that the last few days. They could say that the way that IEEPA has been used for Trump to execute his tariff plans, they don't fall within the stated law. So it exceeds, delegated authority. There is no national emergency.
Sure.
All of that would track. That's probably the consensus opinion right now. The question is what happens thereafter? Could the tariffs go back on immediately? And I think one of the reasons why, as I've learned more about this, the tariffs could go back on within a few hours. Okay.
Is that why we're delaying this? Is that why there is a delay in this decision?
Well, Hassett made a comment earlier today during this Trump whole thing where he's dressing him down, saying like, actually, I don't want you to be Fed chair. I want you right here where you are. You're doing a great job standing next to me. He said that after the tariffs were struck down, Trump could immediately put like a 10% ruling on, a 10% tariff on in a different way. And so like reading through the law here, there is a section 122 option would allow the president to impose tariffs up to 15% for as long as 150 days. But it would have to be justified using a balance of payments crisis. So what would a balance of payments crisis be under the law? Are we running out of foreign currency to pay for imports? Not the United States of America, because 95% of our imports they're invoiced in US dollars, and we do not run out of US dollars.
No.
So would that hold up in court? Probably not, but when was...
But it's got to get to court, and that may be the whole...
it could take more than 150 days. Yeah, it could take more than 150 days. So you could have this situation where the president comes out, they announce a new round of tariffs, they have 150 days to keep them on to prove a national emergency. Of course, there's no balance of payments emergency. We're not running out of currency. So it goes to the courts. The courts, as they have, allow the tariffs to remain in place until they're adjudicated all the way up to the Supreme Court. The Supreme Court says no. And then we have in 150 days time from when they're implemented, we have a new national emergency or rationale under a different statutory authority to try to put the tariffs on. So like, yeah, the Supreme Court could strike them down next week, Ilya. I don't know if it's a reason to be excited or demure.
Definitely not a reason to be excited. We talked about this before. Obviously, we're starting to get a little bit, as you've outlined, a little bit more clarity on how this would get done. But was anybody in doubt that the president was not going to take this lying down? That if his tariffs were struck down on general, I don't lose grounds, the president
famously, the guy's not a fighter.
yeah. Famously, he just takes court decisions and goes, oh well, maybe next time. Clearly, that's not what this is. It's not in the president's nature. And so what then happens is increased uncertainty because we're going to find out how we're going to do this. And uncertainty is already very elevated. There's something called the Economic Policy Uncertainty Index and its companion, the Trade Policy Uncertainty Index. They're both similar to types of animals. They track mentions in news articles and aggregate them and take a bunch of real-time kind of from the zeitgeist indicators and dump it all into an index. And we're looking at economic policy and trade policy uncertainty. And for the trade side, obviously, the spike was in April, and we've come down since. But the amount of wiggling and volatility around the trend average is unheard of. Nobody has any idea what's going on. And then you look at the economic policy uncertainty index, and it's at levels unseen since COVID, and that was the historical high going back to 1995. So we're looking at incredibly significant impact just from not knowing what's going on. Because we already see that because of trade policy uncertainty, global trade volumes fell for the first time since COVID last year, and by the most since the 2008 financial crisis, 2008-09. So it's not like this stuff isn't having an effect just by virtue of creating mud in the outlook.
No mud in the outlook. No mud in the outlook for the Russell today.
None.
Even though we may not be getting those rate cuts, the small caps continue to lead, and it's not exactly a perfect breath kind of day. RSP is down by 0.25%, so the equal weighted S&P is actually trailing the mega cap. Same thing for the equal weighted NASDAQ here, just off slightly down by 0.02 versus the NQs being up by 0.03 right now. But it's that Russell.
Yeah, we're getting close to flat on these indices. They were a little bit peppier before, but it's just not holding.
They were peppier before. The breadth isn't bad. 25 sector ETFs that we track here in Futures Power Hour. I am ticking in 17 of the 25 in the green. The names that are on the downside, things that tend to be interest rate sensitive, your ITB, your XHB of the world, your home builders, those have taken a little bit of a hit. Utilities as well, those are off, although that's more of a defensive name, as goes consumer staples, more of a defensive name. Hold on a second here, Elia. When utilities and staples are down, when healthcare is down, and the things that are up are names like XLK, SMH, XME, XLE's up, right? So the growthy stuff is up still. So, I mean, like, this is one of the difficulties of this week. You really can paint the narrative either way. But if you're a bull, the pillars of the market rally more or less, what has carried us here, they're still intact enough, and the volatility is still low enough. VIX is...
I think that's the most important thing. I think you've just hit the nail squarely on the head. All of the things that would have justified a perfectly comfortable and cozy backdrop for investors, let's say this time, not last year, but let's say 6 months ago. Let's say second half of last year, after the April kerfuffle. Let's say the second half of 2024. All of those things are basically here. Growth is about where it was in the second half of 2024 before we got into tariffs and all of this geopolitical volatility. And yet, the S&P 500 is on pace to close down by 1/4 of a percentage point this week. So at some point, you look at this and you go, okay, one way to look at this is nothing is broken. Let's just wait. Eventually, this resolves back to where it was. But the other way to think about it is, if nothing is broken, why won't this thing behave like it did before? What's wrong with it? And I think people assume that it'll go back because it's tended to, but since October, it hasn't. So what's wrong with this thing?
There's nothing wrong with it, Elliot. Everyone grows at their own pace. Okay? Everyone learns at their own speed.
Sometimes you gotta take a step back to take 2 steps forward, is all I'm saying.
It's been 3 months. And there is part of me that says, doesn't this feel a little deja vu-ish? Like, didn't we watch this exact movie at the start of last year?
We did.
Right?
We did. We were stuck in no man's land since about early December and waited and waited and waited. And then, of all things, an ugly PMI report came out. And the markets went, oh my God. And we erased all of 2024.
This action where you go from mid-December down into the start of the year and then bounce back, you go from...
It's awful similar.
It's similar. It's different. Like, obviously the dates don't line up perfectly, but you have this pullback.
History doesn't repeat itself. It rhymes, as the saying goes.
That window where we consolidated, it was about 2 months. So we're extending a little bit beyond that. I don't know. I want to stay open-minded here. I'm constructive on the market. I'm bullish on the market. I still have all my exposures. Google, that's something that I've been trading to the upside here. I still feel pretty good about it, even if
no reason not
to pull back.
No reason not to. I mean, ticker agnostic, you look at that chart and you go, that's a bullish chart.
Yeah, Broadcom is holding the 320 area. Meta has
this is an interesting
bouncing back
one.
Broadcom?
Yeah, because that's either a very ugly head and shoulders or it's a platform from which to bounce. And at this point, it's not clear which. And it's been kind of stuck here since mid-December.
I feel like we've seen that in NVIDIA before. What was it, 2023? 2020? Yeah, it was 2023.
Yeah.
Think of this action. NVIDIA had that gap open higher, and then we started treating like $40 as support.
Yeah. And then it sat and sat and sat.
Sat and sat. So gap open higher and then just sits for a few months before taking off. And then I'm thinking about Broadcom here, where it gapped open higher and is kind of sitting.
Yeah.
Similar type of price action, given how Broadcom is on the Google side of the AI trade, which is a totally different. They're not making GPUs the way that that NVIDIA is, of course. Interesting corollary. So if the market, if the market is going to continue to go up, the SPY correlation, by the way, Ilya, I bring this up every few days. Just pull this onto the screen here. The yellow line is 1998, 97 into 99, rather, I should say. So if we're continuing to follow this historical analogy, which for the most part, it feels like we kind of have over the past year, we still may have another burst higher yet before this thing faces its typical. And again, this would align with that midterm type of cycle. We rally a little bit, and then we spend basically April through September doing nothing but chopping around, frustrating the hell out of bull and bears alike.
Could be.
Not positioned for that. I hope not, because those out of the money calls aren't going to go anywhere. if that's the case. Let's talk about bonds here, though. So we had a few auctions this week. They were good. The 10s and the 30s didn't disappoint. Both stopped through. As we go into next week, we have a bond market that is now breaking down, despite that there was really nothing bad that had come out. On Wednesday, next week, the 21st, we're going to get a 20-year bond auction. So ZB will be in focus. Elliot, this thing just absolutely hates me. I'm not trying to have main character syndrome, but every time I get long, the thing sells off. And every time I get short, the thing goes higher. So back under 116. What a nightmare.
I'm going to stay long here. I think it's shown a good bit of intent. I think the move today is something we just have to start getting used to, in the sense that, and frankly should be used to. That is, the president comes out, says some stuff, gives one of the Kevins the wrong nod, and all of a sudden everybody goes, well, it's a hawkish Fed now. Well, nothing has really changed. The composition of the Fed board this time is a lot more hawkish because, of course, there's president rotations. And so this new board is going to be much more hawkish than the prior. We have crude oil prices that held up today at a very auspicious level, which tells you, as we've suspected, that we're probably going to have a knock-on effect from energy into inflation over the coming months, because this crude oil breakout is not going away. It's not a flash in the pan. It's a trend that's changing. And everybody was wrong, and everybody was of a consensus view. You look at IAEA, you look at the Department of Energy's forecasts from EIA. All of their acronyms sound the same. They all use the same three vowels. It's very easy to get lost in, but all of the energy agencies and even OPEC, they were all looking for a glut this year, next. Some of them as far out as 2030, and clearly they were not counting on the kind of thing we're seeing now, which is a strain on supplies just from geopolitical volatility. So, and that volatility being not necessarily war as such, or a supply disruption because of choke points being caught up in a firefight or something like that. So we're in a situation where rates are expected higher, but if the market wants the rate cuts as badly as they want, that just means they're going to want them later. And if they're going to want them later, they're going to want more of them. As we've discussed, that there's a kind of exchange rate where if you're not going to give me a rate cut now, you got to give me more rate cuts later because they work with a lag. So clearly, there's all kinds of things going on here to pressure the bond market. And that the 30 is holding as well as it's holding seems to suggest, yes, in fact, those rate cuts are getting pushed down curve. Even when you look at the difference between what the 10-year is doing Here we have it. It appears to be breaking out. And what the 30-year is not doing.
Well, you mentioned the rate cut odds, not since the start of the year, but we could argue since Thanksgiving.
Mm-hmm.
We have priced out one cut. We went from a year-end rate of about 3%. We're now sitting closer to 3.25%, technically 3.265%.
Yeah.
Right now, Ilya. But that is a new cycle low. We haven't seen rate cut odds for year-end 2026 this low since the start of August.
Yeah.
Interestingly enough, as those rate cut odds are falling off, we see that the 10-year yields is starting to break out. ZN is breaking down. ZF here is breaking down. Ilya, I remember doing this study years ago in a different professional setting. After the taper tantrum, which is a March 2013 episode in which Ben Bernanke in front of Congress says some things that lead the market to believe Fed policy is changing on a timeline that it wouldn't be otherwise. Because at the time, I don't think people really appreciated the fact that when you are sitting in front of Congress, you are testifying under oath. And so Fed officials have, generally speaking, have had the position that they don't say anything that they can't commit to because they are just one vote and they can't promise what the Fed will do in the future. In any event, one of the key observations following the taper tantrum episode and the Fed's QE on, QE off, rate cuts on, off, ZERP, this, that, it's the belly of the curve that typically proves most sensitive to these changes.
Hence the
perceived
medium-term
expectations.
objective of monetary policy.
So when we see ZF and ZN taking it a little bit harder on the chin than other things, ZB is off by 0.75% today, and I don't want to ignore that either here. But you're getting higher oil prices, you have stronger economic growth, and a decline in rate cut odds. You're looking at a market that's pricing in higher, potentially looking at higher growth and inflation expectations. Which one, it doesn't really matter. What does matter, though, is that notes finally breaking 112, which means correspondingly the 10-year yield is getting through 4.2%, which in and of itself is just a number. Ilya, 4.2% July, August going into September was a line in the sand. It has been resistance ever since the start of September. We are now back across the Rubicon. And so a break of a downtrend here in yields, to me, it now looks like we could be looking at a rise at the long end of the curve. It has a whole host of other implications for what could be happening in gold and silver with the US dollar, even with stocks, because of what's a long-standing, not really a trader view on the market, but an institutional investor view on the market, that we consider things like the Fed ratio. If we take the earnings yield of the market and compare it to the 10-year yield, if I can get the same return in bonds as I do in stocks for less risk, why take that additional risk? So rising yields can put pressure on equity prices, particularly if we see, those rate cut odds dissipate. If the yields are going up for good growth reasons and the market says, okay, we're getting faster margin growth and higher corporate profit margins, fine. We can deal with it. We can bear with it. But this is perhaps the thing that we should be watching the most right now. The yields could undermine and really upend my best laid plans of mice and men in so many different things.
Yeah, I mean, one interesting thing that I've been thinking about, I mean, obviously I'm already long the long end here. One thing I was thinking about was maybe looking at a kind of pair trade where you're maybe short the belly, long the long end, as a kind of an idea that basically captures the traveling of rate cuts down the maturity line. Because it does seem like there's some inflation risk here up front. Obviously, we've talked about it. Obviously, we see the markets adjust, and clearly stocks don't like it. Dollar is getting stronger. Gold patently doesn't care, so not an indicator in this environment. It's got its own thing going. But the confirmation that you're seeing from FX is a big, big confirmation that the dollar is as strong as it is here is telling, and that stocks won't go anywhere is telling. And again, in my mind, when I asked the question, what's wrong with this thing? My answer to that question is Rates. What's wrong with this thing is rates. That's why it wants rate cuts. That's why it won't rally without them. It wants easing. Otherwise, it's feeling itself heavy under its own weight.
Bonds, 3 IVR notes they have much more work to do to make the reverse iron fly work out over the next 14 days, but we're not sitting here 112, which I suppose is a blessing. Although the monkey paw may be curling for me in gold and silver here, which is what we're going to get to next, because if rates are going up, it is a reason for metals to potentially have some wind taken out of their sails. Silver prices have had a pretty steep drop today, down 3.5%, although it just brings us back to our 1 week moving average, which is where we bounced from. We technically marked the close for the futures day at 88.54 cents. We're currently back to 89.11 here. Is this a top forming? Possibly. It's always possible that a top is forming as you go into a consolidation. I myself, Ilya, what do I see when I look at the metals? Triangles. Triangles as far as the eye can see.
Triangles as far as the eye can see, yeah.
And so here we go. Here's a little small consolidation beginning to pull itself together right now. Is it a pennant? Is it a flag? Is it continuation? Is it head and shoulders? Who knows? Head and shoulders aren't valid unless you break a neckline, which is why we've never traded any of these flag patterns like head and shoulders. So 92.6 IVR, the vol here is sticking up. Vol here is a little bit lower than it has been over the past few days, but also it's higher than it was at the start of the year as the market has moved higher. So this will be an all-time high weekly close for silver. You can't be too upset about that, all things considered. Duration, of course, is your friend. And given what's in the follow account here, how deep in the money these call spreads are, for me, it's just I want to realize max profit potential. So unless this thing collapses by $20 in the next 2.5 weeks, I'm feeling, or 3 weeks, I should say, I'm feeling pretty good about stuff, Ilya. Gold, on the other hand, off by a little bit more than that. We are starting to get to a point where maybe the market is thinking about carving out that top. You and I had indicated 45.85 yesterday as a potential support level in the market in the near term. And while we've been grinding around up there, the smaller time frame you go on, the more this starts to look like a little bit of a headish and shoulders pattern. Okay, I'm obviously amplifying it for effect, but you do have the tenet there of left shoulder, higher head, right shoulder, which is lower than your left shoulder, signifying waning momentum. And we did put in a new relative low compared to where we have been for most of the week. In that event, it does queue up a potential pullback into 4,500, which, given everything that we've seen here, I would buy the dip and assume that it's an opportunity to look long and no. Obviously, still retaining the 4,600, 4,625 call spread and the 5,000, 5,100 call spread that expires 102 DTE. But the metals here today, it simply seems to me like stronger dollar, higher yields, less of a reason to hold on to cash flowless metal rocks.
Yeah. I mean, if you look at what's going on here, if that were the motivation, if what gold was saying was, hey, yields are going up, dollar is strong, what do you need with this? Doesn't pay any yield. It's not much of a fiat alternative if nobody wants a fiat alternative. And yet, look at, for 4 days, we haven't got anywhere. The environment is as kryptonite for gold under normal circumstances. The euro is breaking down and yields are breaking up, and gold can't sell off. Again, I ask again, what's wrong with this thing? I think on a day like today, the fact that we're down as little as we are, I am so happy to have my long gold exposure. This thing is the heroism of gold holding up under these circumstances just tells you it could not care less. It's on to a whole other story entirely.
Story hasn't changed. Duration's your friend here. Volatility is pulling back a little bit, and that is the noteworthy development here. High IVR, let's say we closed out last year with an IVR of 54.1. Okay, so while gold has rallied so far this year, volatility has been coming back in. Not for nothing, that has been commensurate in the past. I'm going to look to this lower panel here, Ilya, on the screen. When volatility comes in, I want you to go here. Thank you. When volatility comes in, it's typically bad news. I am just fat fingering the heck out of this right now. We're going to delete this and do a new one. Arrow. There to here. 1. Okay. 2. When we have volatility come in, we typically see gold prices go through windows where prices struggle to rally. We saw this in April, May, June, July last year, where although they didn't sell off, the declining volatility structure more or less kept prices capped. That's obviously not what happened. Volatility isn't keeping prices capped, but for shorthand and for the sake of this conversation, that's how I'm describing it. We see here too in October and November, as volatility comes back in, it's symptomatic or emblematic rather of the fact that gold doesn't have that driver, the panic buying, if you will, in the back seat, telling it what to do. And so prices slouch off and chop around for a little while. I don't know if we're there yet, but there's enough there to think about it, that if I'm looking at a long gold position, 39 days, probably not enough if I want to be long in the out of the money call side of things. If I want to do the short put spread, we can reassess on a little bit of a pullback to $4,500 an ounce. But I would have to go 69 days. I would have to go out to that 101 DTE if I'm really thinking about being long gold right now. You don't want to get caught in the crosshairs of a volatility pullback. It has not been good news if you're on the long delta side over the past 2+ years.
Yeah. Yeah. I mean, especially when there's opportunities that are available elsewhere.
Yeah. That's it. That's all there is to it. So we have gold, we have silver, 5 EMA, 1 week moving average, holding up for now. Oil here is bouncing today. More headlines that the U.S. is getting ready to slap tariffs on countries that don't get on board with us taking Greenland is certainly something new. Here's what's interesting about the crude oil price action, though. Yes, volatility has come in. Volatility was at a high IVR in the high 50s earlier this week, and we are now back to 38.8. But in this breakout that we had the past few sessions, when we pull back in because we don't bomb Iran, we find ourselves holding the trend line off the highs from June, the last time we bombed Iran, and over here in September.
Mm-hmm.
At the same time, as you know from yesterday's show, not just you, Elia, but the viewers, we were noting that there's a 50-day moving average and a 1-month moving average that are beginning to converge on that zone, where we have our swing highs from the end of December, and then where this 1 month and this 50, and that's about 58.50 or so. Today, the low is 58.81. Yesterday, it was 58.76. So there's something here that's given the market an incentive to say, we don't want to put prices lower than this level. I think this is a tremendous level to trade around in the short term. If you're going to be directional, bulls can be confined right to here. If you want to be bearish, the swing high is $2 and we'll call it 50 cents away, whereas the lows, it's $1.10 away. So it's actually better risk to reward if we're thinking that this is a dip within a broader breakout to be long than it is to be short. I have my long delta exposure. I'm short put spreads. I think this is a bullish falling wedge, so I'm playing this like it's a move that will translate into a jump up towards 70 at some point. Not to be a conspiracy theorist, but as we know, and I've checked this morning, the USS Abraham Lincoln is still transiting to the Arabian Gulf Theater. It's not like we started doing that and it was a bluff and they turned around and went back to the South China Sea. We are still in the process of building up military assets for the Middle East. That carrier strike group will arrive in 5 days. The reporting, Ilya, has been that Israel put in a call with President Trump saying you can't do the attack now.
Well, and Arab
what I'm reading is because
as well. Saudi also.
Yes, Saudi also. But here's the context. The rationale that appears to be leaking out is that these countries didn't feel like the U.S. had enough assets in the region to prevent or deter or protect from Iranian retaliation. So, I don't know. It kind of says like, don't attack now. I'm not saying don't attack. I'm just saying don't attack now.
Yeah.
Oil may be picking up on that a little bit here. The news has been good, economically speaking. Oil has a very high correlation to global GDP. It has a very high correlation to US GDP. And if US GDP is running at a 5% clip, I think it's hard pressed to justify oil sitting at $60 a barrel, especially again with news like, who is it, Harold Hamm, the famous oil explorer. Is that the word? His firm is winding down operations in the Bakken because of the price point and the economics, as it were. So you talk about supply glut. We both think that maybe it's now over amplified. We're going to get the CFTC COT data fully cut up next Friday, by the way. Finally. So we'll be able to see where we stand by historical measure in terms of the oil market. But from what I've been looking at so far, it appears that we are near historically low levels for long oil exposure. And that has been something that we have enjoyed previously as a rationale to be long, and we may be in that same mindset.
I've been adding. And as we've been talking on a correlated idea, I have taken that position short the belly of the curve, where, by the way, the risk reward is incredible. I mean, we're talking almost 8 to 1, 9 to 1 on getting long puts in the middle of the curve. Volatility is priced the basic 63 days out. So I'm preparing for this crude oil thing to continue, and for that to have knock-on effects on rates, and for that to have knock-on effects on stocks. I'm still a little bit short via verticals and with still plenty of duration on the NASDAQ and the S&P from these levels, from the highs, essentially, from October's highs. Because we still don't have resolution on the thing that appears to be keeping them in check, which is rates. And it looks like from what the bond market is doing today that the resolution is for rates to go higher, and that crude oil is perhaps a big reason in addition to the others why that is.
That's an important observation here, by the way. The futures curve for oil is still flat, but we've seen a parallel rise over the past few sessions, over the past really 2 weeks. It's no longer 57s all the way out through the end of the year. We're now looking at 58s and 59s. And while there is that backwardation still, signaling either fears over supply constraint or demand outstripping supply in the short term, I would think it's the former. I think it's fears over supply constraints between Venezuela and Iran. The fact that this is not like a $8 backwardation and it's only like $1 or $1.50, there's something else going on. People wouldn't be buying the back end of the curve in July, August, September, October, November, December if they were worried about a U.S. attack on Iran today, tomorrow, next week. They'd be buying the front month hand over fist, trading there. So there is the fact that we're seeing a little bit more levity as you go further out in time. I think that is a piece of confirmation in our favor that maybe the floor is rising for oil prices throughout this year.
Well, and consider also the spread between Brent crude and WTI. It's been increasing since July. So we had that kerfuffle, obviously, between Israel and Iran there, and it's gone up basically since late June, early July. Hasn't really come down since. It spiked to the highest level since May 24 earlier this week, obviously around will we won't we got as high here as basically $4.50, but and it's down to about $4.15 now. But back in July, we were talking about like $1.50. So this is a different situation. The market perceives that there is some sort of a supply shock situation here. And whether the U.S. intervenes, I mean, as I've been arguing for the past few days, whether it intervenes or not is secondary. Iran is toppling for organic reasons. Now, did action by mainly Israel help in the sense that it was very successful in bombing the military capacity of Iran, hitting their ballistic missiles and their air force, and obviously with in conjunction with the U.S. hitting the nuclear program, taking out all of their regional proxies one after the other. In the case of Hamas, very loudly. In the case of Hezbollah, very deftly. So the situation in Iran, it is certainly not independent of geopolitical influence, but it's happening organically, and the people are doing it themselves. So whether we intervene or we don't, a major part of especially the incognito oil supply market, where Russia and Venezuela and Iran feed China on the cheap, that part of the market is meaningfully disrupted by all of this. And if that's what happens, not only does China have to find other supplies, that's just part of it. They have to find other supplies at market rates. Russia doesn't charge market rates. Neither does Iran, because beggars can't be choosers.
If China has to pay market rates, it changes the economics of their.
It changes the whole thing.
It does.
This is not about whether we decide that we've found a way to somehow intervene in Iran. I don't think, by the way, that Saudi or Israel would stop us from intervening in Iran because they want Iran out of their sphere of influence and out of their way. This is the main adversary for both. If they're cautioning, that's just a realization that nobody actually has any idea who would run Iran. Nobody has any idea what would happen. Let's say you killed the Ayatollah tomorrow. And
it could become a failed state. Who takes over?
Who's going to run
opposition groups? The opposition groups. This is not advocating for keeping, the Ayatollah in power.
No, certainly not.
You might have more time to respond to my direct messages. He would, however, there's the opposition groups in Iran are mostly jailed. And the opposition that is free, it's controlled opposition, it's scattered. There's a reason why they've been able to hold on to power since 1979.
And the ethnic subgroups don't necessarily agree. No. The Azeris and the Azeri minority, the Arab minority, the Balochi minority, they don't necessarily all see eye to eye.
All right, we're going to get to the Encarta lesson later. We're going to finish up with FX here because we do need to make way for Dr. Jim. And Encarta, that's a throwback. I love that game when I was a kid. 116.27 here in the euro for the futures market. The euro's holding near these 5-week lows. We've had better US dollar, US data over the past week supporting the dollar. We've seen those Fed cut odds come in. The Eurozone inflation data showed that price growth is at target levels, and the ECB is probably not going to change its rate outlook in the near term. So there is a policy divergence that's growing right now where, relatively speaking, the dollar is looking like it's going to have higher rates than it did earlier this year, whereas the euro's gone flat. So the dollar has that nice fundamental pretense of a rebound. The DXY is sustaining its move back above its 50-day. We had that beautiful retest here at the start of the week, and we've been moving up since then, now to, again, our highest level since the start of December. So if it's the euro, if it's the pound, it appears the dollar is getting some gusto. And then we start to put together these puzzle pieces, Ilya, and you talk about maybe a January, that post-Santa Claus rally. It never happened. We're on the naughty list. January is a 0.1% loss for the S&P 500 in those instances. And you have your higher yields, and now gold and silver come off, and the dollar's bouncing back, and all those things kind of work together. In a macro sense, it lends to a lot of chop, not an S&P that's going down 5 or 10%, but it lends to chop and a failure to break 7K. Going into next week, I'm still leaning short deltas in the pound, in the euro. The only place I'm not is the yen, because this thing seems broken to me. And given what we've heard out of Japan, 160 seems like a line in the sand for them. So I'm happy to waste a little bit of money buying some out of the money long yen protection, if you will, because again, if the BOJ or Ministry of Finance intervene, what will that do to bond positions, equity positions, precious metals positions, et cetera? But I do see from the producers, we have to go, which is good news and bad news. Bad news because I know we have more to talk about, but good news because Dr. Jim's coming up next, and you and I are back for a last call today.
Yes,
The
sir.
calendar for Monday, again, Chinese focus on Sunday night. U.S. markets may not be open Monday, but Chinese GDP is out. And that
Yes.
has had the tendency when there are thin markets to move things. If it's
Yes.
related to the Australian dollar, to oil, to the commodities, copper prices, for
If
example.
all of this is a China disruption oil story, that's going to be an important number given the context.
We see here Canadian inflation is due out Monday morning as well. So if you're trading 6C, the Canadian dollar futures or dollar CAD spot rates, keep that in mind. Beyond that, Ilya, you and I are done for the next hour and 2 minutes, 30 seconds. We'll see everyone for last call. Until then, good luck trading. Up next, though, Dr. J with From Theory to Practice. He's up next on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
And this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is only because of you guys that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. But today, we are going to shoot from strength and we are going to kick it off with a little educational piece. So Josh, go ahead and get us into the slides here today. So what I want to talk about, this is a question that I get very, very regularly. In fact, Hugo even emailed me today asking me this very question. When I roll a position, what should I do with my profit targets? Because things have changed, right? Now I've got more premium, I've brought in some credits, what have you. What should I do with my profit targets? So I thought, let's take, I don't know, 2, 3, maybe 24 minutes, and let's talk this out and understand what we're up against, because rolling and adjusting and management, this is something we do all the time, and this is a regular part of the tasty mechanics. Many of you guys and gals out there are doing this on a very regular basis, so I thought this would be a worthwhile way to invest some of our precious time here together today. So Josh, go ahead and bring us into the information. So once you roll a position, right, we are typically rolling for credit. So I'm going to assume that you've rolled for some type of premium collection, some type of credit. Yes, there are times when you could roll for a debit, but that's not typically going to be the status quo. That's not going to be the default setting. So let's just assume that you are rolling for some type of credit. All of a sudden now, you've got more to work with. all of a sudden now, instead of having $1, you've got $1.30. Instead of having $2, now you've got $3 or what have you. How should you adjust your profit targets moving forward? Well, I think there are 3 options at your disposal, and I'm going to be very, very frank with you all, very Frankie Walsh with you all here today. My least favorite and my most favorite of the 3. Okay, so number 1, you could now target 50% of the total credits collected. Right? Because you're kind of thinking, okay, when I sell a vertical, when I do an iron condor, even if I do a short put, whatever, I'm typically targeting around 50% of max profit. Now, of course, there are alternatives. There are other things you can consider in terms of overperforming where you thought you would be like 3 or 4 days in, you take it off early, whatever. Like that is certainly a viable way to, attack these strategies as well. But if we just go with our baseline default setting of 50% of max profit, I think that helps us kind of understand the different options that are available to us at our disposal. So number 1, I could go for 50% of my total credits collected. That includes like the entry credits and whatever I've picked up from the first roll, the first and second rolls, the first, second, and third rolls, and so on and so forth. Okay, just to make sure we're all on the same page. This is the most offensive tactic that you could apply. This is the most offensive approach that you could indeed deploy on this position because you are going for it, man. Like you are 100% going for it on that position. I'm going to say this is kind of the least common approach, and it certainly is my least favorite approach of the 3. And we'll talk about why that is the case here in just a couple of minutes, but just understand, this is an offensive tactic. And of course, my overachievers that are watching the show, you've already looked at the green box, and you know where we're going when all the dust settles here today. But the middle option, what if I just go for 50% over the original credit? So what if I just kind of stick with what I wanted to do from trade entry from the very beginning? And now I just have more credits to work with. I have more premium to kind of buffer against moves and improve break-even points and what have you. This is kind of a hybrid option that kind of has, some offensive elements and some defensive elements to it. And I think this is a good mixture between the two. I certainly like this approach more than the first approach, simply because the first approach is a little too Shooter McGavin for my liking when it comes to a position that you are rolling, you are defending, and things like that. So if you want to go for 50% of the original target, I think that is certainly a viable pathway forward through the forest. But lastly, and my most favorite option of the bunch, what if now I ratchet down my target to something in the neighborhood of a scratch? So maybe a small to modest win, maybe a small to modest loss, or something around a scratch. This is going to be the most defensive target of the bunch. And I would say this is the most common. And I would also say this is going to be the most appropriate for most times when you are rolling a position and you're trying to figure out how should I adjust my profit targets. This is certainly my favorite approach when it comes to I've adjusted a position, I've rolled it, now I've got to figure out what to do with all these extra credits. In my opinion, you ratchet everything down. In my opinion, you bring everything down to essentially its lowest common denominator. Like I'm not going for a big win anymore. I'm not even going for 50% of max profit anymore. Usually, I would much prefer to just kind of tone everything down to something around a scratch. And here is the reason why. And this is what's in the green box. Remember, when we roll a position, right, that is a defensive maneuver. Like nobody's rolling a position and they're happy about that roll. Like that's very, very seldom. Now, maybe from time to time, you're rolling at 21 days to go. You've got a little bit of a profit. You're kind of neutral about it. You're kind of like, okay, I'm more or less indifferent towards this roll. But nobody's usually super happy about rolling a position. You would much prefer to have already taken off that position. Like you would much prefer to have already, booked that winner, of course. So if I find myself in a position where I have to roll this trade forward to the next cycle or what have you, that's not necessarily, an offensive situation to be in. Like I'm not necessarily looking to push the ball down the field in that type of scenario. If I'm rolling a position, I'm trying to defend. If I'm rolling a position, I'm trying to plug some leaks. I'm trying to figure out what went wrong and kind of, remedy the ailment of the position. So given that spirit, right? Given that intent of what it is I'm trying to accomplish and what's going on with the position to begin with, that needs to mirror and kind of map into, what you do with your profit targets. And so that's why going for something that's like 50% of the total credit, that's kind of a mismatch right? That's kind of squaring a circle in my opinion. You have this defensive situation you're in. You've rolled, which is a defensive maneuver, and now you're going to apply an offensive tactic on top of that. Doesn't usually make sense. The hybrid option can make some sense at various times. Like maybe I rolled at 21 days to go, and it wasn't necessarily a bad spot to be in, but I just wanted to roll to maybe reduce gamma risk or extend duration or just improve break evens, what have you. But it never got super dire, the situation. We're not talking about Oracle. We're not talking about, some of the doozies I've had in the last 8 to 12 months that you guys have been around for, of course. But if I'm in a situation where it is a losing trade, I'm in a situation where I am in kind of full, defense mode, this is where I'm going to ratchet everything down to something around a scratch and use your judgment. Like, use your experience to determine, okay, do I think it's appropriate to maybe still go for a small winner, or do I think maybe scratch modest loser is going to be my best outcome when it comes to this specific position? So when it comes to my profit targets on a rolling or a rolled position, those are a few options to think about. All right, so we made it. I can't believe it. Josh, bring us into the market, man. We're done. We did it. We did the educational deal, and so now we put the sweatpants on, we put the hoodie on, and we are 100% back. And I see you guys, man, in the chat. Man, I appreciate you guys. Look at you guys pumping that algo. I'm like here, but I'm not here. I'm here, but I'm like on company behavior, right? Like I still wore the hoodie, of course, but I'm here, and I'm in like professorial mode, right? Professorial mode? Yeah, that works, and it's already out there, so we'll go with it. But now, man, we're back. We're 100% back, kind of like our SLV position, and so I'm super excited to talk about that with you guys here for the next couple of minutes. But I see you guys, man. Grumpy Mike's in the house. Sam L's in the house. Man, Stephen Bivens in the house. Ash Finn in the house. Jared Kramer is here. Man, E-Media is even in the house. Chris Gordon showed up. Man, this is some good stuff. Wolf is here. Man, Weiss is here. Man, I appreciate you guys so much. So very, very much. And I'm going to get to as many of you guys as I can. Or Daniel, Brian Dowdy. Man, I appreciate you guys so much. Let's talk about a couple things going on in the portfolio. And then maybe we'll place a new trade. And then we'll kind of see where you guys are at heading into this 3-day weekend, of course, because we have Martin Luther King Day there on Monday. Let me know if you're doing anything fun and exciting for this 3-day weekend. We are doing nothing fun nor exciting for this 3-day weekend, so I need to live vicariously through y'all. So let me know. I would love to know. The algorithm would love to know. Like, put it out there for all to see, and I would appreciate you guys so much. All right, so let's go ahead. I want to talk about SLV. So we've already talked about MCL. We've already talked about GDX. We've already talked about, GLD. We just put this trade on the other day. I mean, this was a short call spread that so far we've been able to kind of, zig and zag between raindrops. And it appears that we are cheating death at this very moment in time. So that's good from a GLD standpoint. And then Starbucks is cooling off a little bit, which makes a little bit of sense. But SLV, man, this thing was up to 84, right? This thing was like 84 and some change. Just yesterday, I think. Let me bring up a chart of SLV. Is that a daily chart? It looks like a daily chart. Yeah, so SLV, yeah, this thing was up to what is that? 80, 85, 84? Yeah, that's crazy. That's some wild stuff, man. That thing was all the way up to almost 85, it looks like. And so now it's cooled off back down to 80, which is very, very welcomed for this straddle that we have on in SLV. Now, again, as we talked about earlier this week, I don't really think I'm going to go inverted on this strategy. I may change my mind. It's possible that I'll change my mind. But for now, I'm just going to let the wind kind of, blow me forward here. I'm just going to kind of see where this thing takes me, because I don't mind being bearish to the metals, which I know the famous last words, Jim, it's going to 100. Jim, it's gapping up on Sunday night to 100. Like MLK Day or not, doesn't make a difference. This thing is gapping up to 114. Like I know, like I got it. And the internet's undefeated. But I'm going to take my chances. Like, I'm going to go ahead and see if we can't get a little more downside movement in SLV, and maybe we find an off ramp. Like, and this is a great example, by the way, of what I just talked about to kick off the show today. Like, when you adjust a position, I mean, if I bring up my chains here for SLV, like if we crack open the man in the box on SLV with these Allison chains, you can see that we did this trade back on, where is SLV? So it's going to be this one. All right, so we did this trade back on December 9th. We sold a strangle for 206, and we have since rolled it 2 times. So we rolled from, Let me think here. We did January to February. Oh, yeah. So this was the roll out in time. So we rolled from January, which you see right there, to February, which you see right there. Like we picked up $2 for that. And then on January 12th, so about a week ago, or actually, no, this was Monday of this week, just kind of coming back from vacation, when, I think SLV was probably even higher than it is now on Monday, decided to go ahead and roll that put up since there wasn't anything left in that put and straddle the trade-off. So that is what gives us the current short straddle that we have on. And of course, we're hemorrhaging cash, just bleeding red all over the place. But hey, this is what you sign up for, right? Like when you sell undefined risk and you sell it in something like SLV, you sell it in something where it's like, man, this thing is a mover and a shaker. Like this is what you sign up for. But this is also another very, very, very good illustration of something I say on a fairly regular basis. Remember, when you sell undefined risk on a lower basis stock, which SLV it really isn't anymore because it's in the 80s, but it was just in the 50s and the 60s, right? This is a great example. And this is something I say to everybody out there that is considering making the jump from defined risk to undefined risk. Like you're thinking about splashing around in some naked, waters and kind of mixing in some undefined risk, which I think is a great path to follow through the forest. Of course, do it when you're ready and as you're comfortable. Don't rush the process. But I think most traders, that's the pathway that they're wanting to go down. Okay. Well, one of the things you can do as you traverse down that pathway is choose stocks, indexes, whatever, that have a lower basis for your undefined risk strategy. So, 50 to 60 bucks or less. And the reason why that can be very helpful is because exactly what's happened with SLV. This thing went from 60 to 80 in 2 weeks, 4 weeks, like something super crazy. That is obviously that's a 9 standard deviation move. And it only goes up to 6. This is a 9 standard deviation move, right? And look, we're only down $1,200. Now, don't get me wrong. $1,200 is $1,200, but still, processing it within the context of, a $30,000 portfolio here, even if it was a $20,000 portfolio or a $15,000 portfolio, that's a significant drop. Don't get me wrong, but it's not something that you can't recover from. It's not going to be something that's going to put you out of business. And, that's what you want to be mindful of at all times, of course. But when you're first learning undefined risk, man, you've got lots of skills to develop. You've got lots of experience you need to gain. You got to put in a bunch of reps. You don't want to be slanging puts in Tesla. You don't want to be selling calls in Microsoft, right? I would start kind of small with these lower basis instruments. And, chances are you're not going to run into a 9 standard deviation move. This is the first one in the history of standard deviations. They thought the scale only went to 6. It did not. Silver, 9 standard deviation move. And so there you go. With SLV, it's just an interesting little illustration of something that I bring up on a fairly regular basis. And so right now we're going to sit tight. We're just going to see if we can't get a little bit more movement lower. And then, as I was talking about to kick off the show today, kind of got swept away there on a little bit of a tangent. And so that's how it's a Friday show, or even a Monday, Tuesday, Wednesday, Thursday show for that matter. I'll probably, if we can get out of this thing for a $2, $3 loss, I will probably take it. If for some reason next week, all of a sudden, I don't know, all the bears wake up and, SLV is 68, 69, I'm probably just going to take this thing off and just take my lumps and then just move on. Cause we've got earnings coming on down the chutes. All the heavy hitters are coming out, right? I think if I bring up, let me sort by earnings. Yeah. So next week, you got Netflix is next week. Yeah. Netflix is 120. So that's going to be, what is that, Tuesday? Yeah, because obviously we're out on Wednesday. We're off on Wednesday because of MLK Day. And so, Netflix is the only one next week. Wow, it's the lone survivor. So look at that, man. The last man standing for next week. Interesting. Is Netflix usually by itself like that? I know you typically get kind of the big tech cluster, right? Volatility clusters, big tech earnings clusters too. And so you've got Meta, Microsoft, Tesla, Apple, boom, there you go. And then you've got obviously Google, Amazon, boom, there you go. There's a lot of clustering. Snapchat, obviously, man, they're still doing it. They're still doing it. Look at that. Hanging on by a thread. By a thread of a thread. But man, they're out there. They're making things happen. You got to tip your cap. And this might be the final chance you get. So I would tip your cap now to Snapchat. And that's some really, really impressive stuff. And so, so that's all coming on down the chutes. Got Uncle Jay, got all this stuff. But yeah, okay. So what I'm going to do, I just wanted to kind of talk about SLV a little bit because it was actually a great illustration of what we talked about here today, and also something I talk about on a regular basis in terms of undefined risk and wanting to transition into undefined risk. What are some strategies and what are some practical things, practical tactics that you can deploy when it comes to that? choosing lower basis stocks. Go to the Tasty default watch list, whatever. Go to the Bats watch list, whatever. Might even get a Dr. Jim watch list on here at some point in the future. I wouldn't necessarily hold my breath. I've been pushing for Charm and Vama on the platform for at least 7 years, and I don't see them. So I would not necessarily be waiting with bated breath for a Dr. Jim's watch list. But you never know. Markets move and things change. But whatever watch list you might be looking at, just sort by earnings, sort by stock price, sort by IVR. You can sort by whatever you want to sort by. But if I'm looking for a lower basis stock, then sorting by stock price is probably going to be the most helpful in that regard. So, all right, what do we want to do? All right, what I want to do today, let's get a little, because you can't do anything in the individual stocks, right? For all the reasons I just talked about. It's like I don't really want to do something now when these stocks have earnings coming up in the next couple of weeks. I'd rather wait for the earnings day and just kind of let the volatility get bid up heading into the earnings day. And then at that point in time, I can decide what I want to do. I can sell volatility. I can do a directional play, a vertical spread. I can do expecting move butterflies, of course. It really depends how many stacks of cash do I want to set ablaze. Sometimes it's one, sometimes it's several. So it depends on kind of where I'm at on that given day. So GDX, if I go to the trade page here though, I'm kind of thinking, man, let's go GDX. Let's go 35 days to go. Let's just keep this really, really simple because GDX, the IV rank is 71, right? This is a $100 stock, so it's obviously, a much higher basis than even like an SLV. And so this is something that, you're going to need a little bit more capital and likely, a good amount of, skill and experience to be able to, trade this position correctly. So be mindful of that. But still, this is where the volatility is. So you have it, the volatility is there. It's not an individual stock, so I'm not worried about earnings. Although with the metals these days, it feels like every day is kind of a binary event. And so you could certainly make that case as well. But I think right here, why don't we just go in with the tried and the true? Like, let's go in here tried and true with my favorite strategy, the short put. Right? The short put. Now, usually when I say it's my favorite strategy, I'm usually referring to equities. I'm usually referring to, stock indexes or individual stocks, just because you have that positive drift that is at your back if you need it over time. It may not necessarily materialize in a 45-day time horizon, but still you kind of have this natural impetus of the market to go higher that's working in your favor. You don't necessarily have that with the metals. Now, of course, I understand all the shifties out there is like, man, we've had that in the metals for 37 years. It's like, well, you kind of haven't. You've said that you should have it for 37 years, and you've had it for about the last 7 weeks. And so by all means, take your victory laps, but you don't quite have the positive drift on the metals that you do in the equity markets. But still, it doesn't change the overall effectiveness of just short premium strategies kind of writ large, right? Short puts, short calls, short strangles, ratio spreads, jade lizards, like short straddles. There's so many different ones that you could do. And so I think for us here, I'm just going to keep it really simple, keep it kind of buttoned up here for a Friday, which is a bit unusual. What if we just sell a 120 put? Like, what if I just go in here and sell this 120 put? I'm going to be able to sell it for about $4. And you can see the probability is looking pretty good if I don't say so myself. Probability 70%, P50 81%. My theta is super strong, $9 a day. Obviously, the delta is going to map to whatever the delta is on the option chain. So I'm going to be long about 31 delta of GDXJ. My maximum profit is going to be my credit collected, which is going to be right here. My maximum loss is $11,000. And of course, to be very clear, you would need GDXJ to print 0 in order to realize that maximum loss. Not a super likely outcome, in my opinion, but you may process it differently, and I respect that. Buying power effect, $1,800. So that's about 6% of the account. A little less than 6% of the account. So that's good. That's good. Everything, it checks all the boxes. It checks all the boxes for all the things I'm looking for as a high probability trader, high volatility trader, and wanting to keep my position sizing in check. Typically like to live between 3 and 7% on undefined risk positions. And so it looks good. Everything about this trade looks really, really good. So let's go. Let's put this guy on. A short put in GDXJ. And boom, there you go. Got improved to 395. So there you go. I think I actually went in on the bid price there and got some improvement, boss. So not super surprised by that. But there you go. So there's our trade today. And then, next week is when it's all going to start. Next week, when we come back online on Tuesday after the MLK Day holiday, we've got Netflix. We're met with Netflix, staring us right back in the face on Tuesday afternoon there. So that's going to be fun. You're not going to want to miss that. And so, all right, let me go to you guys, though. Let me see where you guys are at. And I just appreciate you guys so much. And don't forget, guys, if you have nothing else to think of right now, And if you can't think of anything better to do, you can drop something in that chat simply for the love of the algo. And so I appreciate you guys, man. I appreciate you guys so much. All right, let's see. Where are we at? Well, I see Mount Go Rail in the middle. All surprise and delight, Mount Go Rail in the middle. Here's one for the algo, my man. I appreciate you, Dr. Jim. I appreciate you appreciating me, my friend. Thank you. Keep the B-level humor coming. Need a good laugh today, man. I appreciate you. And it's certainly, but it's not B. It's B minus. We are very comfortable in our B minus lane. And so B minus, sometimes you have a bit of negative drift down to C plus, but we're pretty comfy cozy between that C plus to B minus range. And so hopefully we gave you a little bit of that here today. But thank you there, Mount Go Rail. I appreciate you very, very much, my friend. And so let me see. Can I surprise and delight somebody else in the middle? Let me see. Oh, man, Trader Nate. Dr. Jim, will the real Slim Trady please send? I mean, you're taking me back. Man, you're taking me back to my heathen days. Man, you're taking me back to the days before I saw the light, man. Like, you're taking me back to, man, that's got to be, I was what, 19, 17, 18, 19? Yeah, man, Trader Nate, taking me back. Man, I appreciate you, my friend. And so, thank you so much. All right, let's go ahead. Let's go to oh, I got one more. Well, this is near the beginning, but man, this is some good stuff, man. Look at Brian Dowdy. Hello, Dr. J. I moved 250,000 to Tasty today. Couldn't resist that big deal. That big deal. Yes, that's a huge deal. The big deal. I mean, there's all kinds of cash bonuses and like commission-free trading. I mean, that's some really, really awesome stuff. Portfolio and Tasty is looking quite bare, though. I plan on doing earnings trades to fill up the portfolio next week. Hey, well, then you stay with me, my friend. Like we've been. So thank you so much for the support. Like that's absolutely amazing. Not only that, but the support of the show, man. The support of the show. I mean, you are part of the inner circle of the core position. Like there's, half a dozen of you guys, a dozen of you guys, whatever. I mean, you guys are like on the inner circle, the insides of the inner circle of the core position, and you are certainly in that group. And so thank you very much, my friend. But yeah, I got you, man. Like, I would not let you down. You know that I will never let you down. You know that when earnings come around, I'm going to give you the most favorable opportunities that you've ever seen. Right, like I'm going to come to the show. I'm going to have all kinds of conviction and all kinds of confidence and just filled to the brim with all kinds of hubris. And what do? You take the other side of all that and make yourself a little bit of money. Right, like you think a UST bill is safe, man. You ain't seen nothing yet. Like this earnings season, it is going to be a sight to be seen. And so I got you covered there, Brian Dowdy. I appreciate you, my friend. But let's see. Orgdenu's in the house. What's going on there, Orgdenu? We're all the way back to the beginning now. Hello, Dr. Jim. Thank you for your time. It's always amazing to hear your lessons. Man, I appreciate you so much. Hopefully the profit targets after rolling was helpful. Like I said, we get that question often, and Hugo just emailed me that here today. And I was like, man, that's a great idea for the educational content today, because this is something we do all the time. Like we're constantly rolling and we're constantly adjusting. We need to figure out, like, should I adjust my profit targets? Like what changes should I make, alongside, those profit targets? And so those are a couple of things to think about there. But thank you there, Daniel. I appreciate you so much, my friend. The Preston, Dr. Jim, thoughts on Netflix? Only one day until earnings. Is it popping or dropping? You're the best. We appreciate you. And man, I appreciate you. Appreciate me. I don't know yet. I have to think about it over the weekend. I have to think about it. I have to tap into, the internals, right? We got to see what the internals think about this. We got to see what the intern thinks about it, right? I think I'm the only one on the Tasty Network with an intern. Like, if you're brand new to the show, welcome aboard. I'm so glad that you're here. I'm excited that you're here. Whether you stick with my show or the other shows, whatever, like, man, if you want to actively engage with your portfolio, you are in the right spot. But I think I am the only one with an intern here on the network. I have an intern, I have a trading assistant. It's the same person. It is my 5-year-old, soon to be 6-year-old daughter, little Amelia May. She does a bang up job with the analysis that she puts forth on the various trades that I might do. And so thank you, my friend. I don't know. I have to talk to her. We'll probably split a juice box and just see where she's at. Like, I got to figure out like where she's at when it comes to Netflix, bullish, bearish. Maybe we play it neutral. I don't know. Maybe she wants to sell premium on both sides. She's pretty crafty, man. So we got to wait and see what she wants to do. I'll let you guys know on Tuesday. So Sam L's in also. What's going on there, Sam L? Appreciate you, my friend. Friday vibes, Doc. Thanks for the nostalgia. Took me straight back to the Muscle Tech era when Jay Cutler was sponsored. Yes, I remember that yesterday with the NO Explosion stuff. Man, that's it. Man, Muscle Tech, you know what I'm saying? Like, that was some good stuff. Some good stuff. And I know it didn't do a lick for me physiologically, but mentally, I mean, I was on point. You were on point, and that's all that matters, man. Because at the end of the day, really, does it matter Placebo effect, actual effect, doesn't matter, not at all. Doesn't matter at all. So take all my money and give me the pumps with a Z. And so Brian Dowdy, yes, I appreciate you again, my friend. Thank you so much. Dan Ducarn, awesome sauce. What's going on there, Dan Ducarn? I appreciate you. Samuel, no YouTube, no Insta, no TikTok, just Muscle and Fitness, Flex Magazine, and Pure Gains. Different times, same dad bod dreams. That's right. That's 100% right. And yeah, we didn't have any of that stuff back then, man. All we had was the new Flex Magazine. Like in the 90s, that was it. Right. And you see these dudes on the cover, like, I gained 75 pounds of muscle in 6 weeks, all natural. And I'm like, man, there ain't nothing natural about that. But we all loved it. We all 100% loved it. And man, yes, you're taking me back, my friend. Grumpy Mike in the house. What's up there, Grumpy Mike? I appreciate you being here. Very much, my friend. Greg Lutton here. What's going on there, Greg Lutton? Appreciate you. Samuel Doc, I need your TA expertise. Oh, I'm ready, man. On some Rocket Lab or ASTS rockets, plus space, plus green candles. What's the official name? Baby moon mission or early stage liftoff before the fade dock strategy. Yeah, I don't know. And you guys kind of left me hanging, pun intended, on that hanging man the other day. I still don't know if it's bullish or bearish. I mean, I can help you out on some Rocket Lab real quick. I remember Rocket Lab. We traded some Rocket Lab, right? Yeah, look at that. I mean, look at that. Look at that chart. Guys, this one is easy. Like a lot of times, I'm sure technical traders look at charts and they're not really sure. They've got to look at different time frames and they got to bring up, different levels and fibs and fair value gaps and whatever they're looking at, right? But this one is easy. I don't know that I've seen a more bearish chart, right? Like, what are we trying to do? Like, are we trying to buy high and sell higher? I don't think so, right? We're trying to buy low and sell high, right? And so when you look at that, it's never been higher. Man, it's a perfect time to sell. Perfect time to sell. So Rocket Lab at 98, I'll see you at 125. And so, so scramble everything. Hey, Dr. Jim, great to see you. I appreciate you appreciating us, man. I appreciate you appreciating me, appreciating you. Like, there's levels to this, man. Like, and I appreciate all of them. Let's hop on that Dole long, since they are the largest blueberry producer in the U.S. Dole. Is that actually the ticker symbol? Because they're the actual company that makes blueberries, right? Dole yeah, I'm not convinced that that's actually what we're looking at, the thing we should be looking at. Yeah, Dole is like one of the big blueberry producers, if I'm not mistaken. Now Autumn, I mean, she makes me buy the organic stuff. Like, I got to go in there. I mean, I'm not getting them from the grocery store. I'm in the fields. Like, I'm at the bush. Like, I'm grabbing those things off the vine, and she's like, listen, these better not be touched by human hands before they touch yours. And I'm like, I got it. I'm going to do the best I can. And so yeah, maybe we should get on, I mean, some blueberry production out there. I can't imagine it would be a negative thing. But Wolf, what's going on there, Wolf? Nothing better than a Friday with Dr. Jim. Have a great long weekend, my friend, man. You too, my friend. I hope you have a really great long weekend as well. And get lots of rest, have lots of fun, get work done. I mean, just, see where the wind blows you yourself, my friend. And so thank you so much there, Wolf. I appreciate you. Grumpy Mike, I thought Dr. Jim was on vacation still. Nope, we've been here all week. I mean, obviously Wednesday I had to get the hair removed from my eye. But other than that, we've been here all week. And so thank you, Grumpy Mike. Dan Ducarn, Dr. Jim, Oracle. Oracle? Nah, we're not doing Oracle again, are we? 191, look at that. Now again, man, look at that. That is something. That is something. That is like the ellipsis. Not ellipsis. No, the ellipse. Ellipsis. Ellipsis is like that. This is the ellipse pattern, right? Which I don't know what it means, much like every other pattern that's out there. But yeah, I think I'm just gonna pass on Oracle just from just making a personal statement. Oracle already took way too much of my money last year. But let's see, Dr. Samuel, dear Doc, if this reached you, the algo says checkmate. Yes. Although I got my chess rating back over 800 just last night. I was very excited about that. And so now I'm like 830 or 840, and I'm like, I don't think I have any business being up here because I'm getting destroyed at these levels. And obviously everybody cheats that beats me, but at least that's what I tell myself. And so scramble everything. Time for a Freaky Friday with Dr. Jim's YouTube Power Hour Live. No, man, it's the power 3/4 of an hour. It's the Dr. Jim Power 3/4 of an hour, and thank you guys for being here. And it's almost over. We have 11 minutes left. Like, that's so crazy. It's so fast. You guys have no idea. No idea whatsoever. And so let's see. Weiss in the house. Happy Friday, Dr. Jim. What would be your guidelines managing leaps calls? Yes, this is a very good question. And so, like with Starbucks, for example, we kind of have one of those. This was our dollar cost averaging substitute, right? This was our thing that, we used as a way to kind of build more of a long position when the stock was down. And I kind of wanted to, hey, don't tell the internet, but I kind of wanted to buy a loser. Like, don't tell the internet, but we were averaging down a little bit, which of course is a great strategy, but don't let the internet know. Like, don't you dare let the internet know that this is what we're doing. But anyway, so we did that. And now it's kind of like, what are we going to do? Well, because this is kind of intended to be, a long share focus along with the other long shares that we had, we're kind of a little bit in no man's land, right? We're kind of a little bit in kind of like, I'm not exactly sure what I want to do. But if you just have like a standard leap where you're taking a shot, directionally, then when it comes to what to do, down the road, you kind of have to decide, what type of, it's similar to a covered call in that regard. You kind of have to figure out like, okay, is this a trade or is this an investment? Because, most of the time when we get in at 45, it's already been decided for us. It's a trade. Like I'm in at 45, I'm out around 21, and that's kind of what I'm looking for. That's kind of the boundaries and the checkpoints that I have for the position. If I'm doing a leap, by definition, it has 180 days. It's got 365 days, whatever. This is a much longer term deal. So now you need to decide, is this something that I'm looking to, kind of get in and out, or is this something I'm looking to kind of hang on to for a while? Most of the time, I would say that people would actually choose the latter of those two. That's why they did a leap, right? Maybe they're thinking, I want to hold this thing for not just 45 days, maybe a few months, maybe 6 months, maybe the full year, if it's like a 365 day guy or whatever. In that scenario, I would treat it very similar to, if you have long shares of something and you want to be active around the edges. I would be looking to sell calls when the stock goes up and then take them off when the stock goes down. And if the stock just goes down and you never get an opportunity to sell any calls, I would just hold the leap. I would just hold the directional bias because that's kind of what you've signed up for from the beginning. And so that's how I would view leaps, very similar to a covered call. And so hopefully that gives you, a little something to think about. Margin Walker's in the house. What's going on there, Margin Walker? Samuel, if Doc sees this comment, it officially means the algo won again. Oh, the algo always wins. It's not about winning or winning again. It's about, it's about winning consistently and continuously. And so Ash Finn is in the house. Dr. Jim, let's go, man. Let's go, Ash Finn. I appreciate you, my friend. Thank you so much for all the support. I mean, for a long, long time now. And so thank you so much. I really appreciate you. And please give your best to your beautiful wife for me because I know that keeping the wives happy is critically important. I know that it is mission critical. I feel it myself. I know you feel it out there. I know the other husbands that might be watching the show are also feeling the same thing that we are talking about right now. And so please give your best to my wife for me. So scramble everything. Oh yes, the algo castled into 4D and simultaneously put you in checkmate. Yeah, I actually did. I didn't do this. I want to castle into a checkmate. I've seen guys do it. Like I've watched these cats on YouTube, like castling into a checkmate. I'm like, man, that would be sweet. Like that is like one of my life chess goals, to castle into a checkmate. I think the only way you can do it, I guess it would depend, but you could castle on the long side maybe into checkmate because of how far it brings the rook out. But I've seen a couple guys do it on YouTube, and I'm like, yeah, that's one of my goals for sure. And so, but let's see. Chris Gordon's in the house. What's going on there, Chris Gordon? I appreciate you. Hey, Dr. J, I've been brushing up on my bond education. Is it true that convexity gives a bonus to the upside and a cushion to the downside? Can we take advantage of this as options traders? Yes. So it depends on where interest rates are. Man, I haven't thought about bond convexity in a while, but I've done a couple segments on this. And so my response to your answer right now in the moment is going to be rusty. But if you Google, like from theory to practice, bond convexity, or you Google like the skinny on options, abstract applications, bond convexity. I've done a couple segments on this, but the segments I did recently, well, not that recently, but the segments I did on these, this was back in like the lower interest rate environment. And so the convexity framework was not the same as it is now, because depending on where you are in the interest rate world, it's going to change the dynamics of the convexity. And so typically as like premium sellers, we understand the convexity relationship because we're selling convexity. Like we're essentially selling convexity to the marketplace. That's why we like to manage undefined risk positions at or before 21 days to go. Because to some degree, we can quell that convexity by getting out of the position, prior to 21 days to go. And so that's why we like to manage early, because of the convexity with the directional risk that comes on board with the increased gamma, near an options expiration. But as I'm thinking about like a graph in my mind of like bond prices and bond interest rates and that relationship and that convex nature of that relationship, it's going to matter. If I remember correctly, it's going to matter a lot where interest rates are currently. And the fact that they're not on the lower bound and they're not really on the upper bound anymore, we're kind of right, maybe around some neutral rate. I'm not so sure that the convexity relationship is going to be as asymmetric as you might be pointing out. I think it might be a bit more balanced than it was maybe previously. But again, I might be a bit rusty with that answer there on the spot. But I would pop into the Google machine. I mean, if you still Google things like it's 2017, obviously pop into your AI agent of choice and let him or her or it find it for you. And so there you go there, Chris Gordon. Hopefully that gives you a little something to think about. At least it points you in the direction of some better resources. E-Media, Dr. Jim, awesome intro. What are we trying to do here, man? I do not know. E-Media, love the Google algo. I love the Google algo as well. So I hope the robots remember that when they take over in 2029. But yeah, we just wanted to do a little, keep you guys guessing, just keep you guys, just kind of shock the muscle a little bit, kind of like a Friday. It's like doing back on Friday. Right? Like we've talked about this so many times, but you can't do arms on Tuesday. You can't do delts on Monday. You also can't do back on Friday. Like these are unwritten rules that are very clearly laid out in the bro science code. You can't do these things. And so today we kind of got in there and did a few sets of lat pull downs. Like today we just did a couple, one arm rows. Like nothing super crazy, but it certainly shocked the muscle. And so Sam L, Dr. TA expert, yes, 5 minutes of technical analysis followed by 40 minutes of stories. Truly the signature special of the show. I think that encapsulates my efforts on technical analysis very, very well. Like I'll give you 2 to 3 minutes, maybe 4, of an earnest effort. And then I'm just going to spend 38 minutes just off the reservation on some random tangents that may have some tertiary values along the way, but it's not necessarily likely. And so, there's Trader Nate again. Thank you there, my friend. Scramble everything. I think I am mostly in the more common camp here. And I think that's fine. That was kind of that hybrid option, right? I think that's totally fine. Like I'm typically either the defensive mode or the hybrid option. I very rarely go Shooter McGavin, where I'm going 50% total credits. Like, let's throw the kitchen sink at it. Like, let's go for broke here and just try to get all we can get out of this position. That doesn't really make a lot of sense to me when you've rolled a position and you're in defensive mode. And so let's see. Stephen Bivens, a role should provide more flexibility from a P&L standpoint. I think that it does. I think it absolutely does. And so because you are bringing in more credits and you do have more to work with, you are extending the duration of the trade. It doesn't change the current P&L standing of the position like in that moment. Like you're not able to like roll and then like take that credit and like do away with any losses, because if that was the case, we would just keep rolling. Like we would never take a loss. And if I was ever in a losing position, I would just roll it and then wipe away the loss. So it's not that simple, of course. I know that's not what you're saying, but I know a lot of new traders, they're kind of confused as to how, the credits, like kind of how you reconcile them with your P&L, whether it's the current P&L or the P&L you're going for or whatever. And so, yes, I do think that that's essentially what rolling does. And that was sort of sort of clear in the discussion we had to kick off the show today, from the standpoint of there's multiple options for what you can do now. It's not as simple as I'm just going to, go for 50% of max profit and essentially do nothing if it doesn't work. Now, all of a sudden I have to decide, like, do I go for more than the original target? Do I stick with the original target? Do I pare it down? So you have that flexibility that's kind of baked in there. And so Stephen Bivens, you're 100% right. 100% right. And so let's see though. Who's next? Let me scroll down a little bit. Grumpy Mike, what if it's January 16th and I've already rolled to June? That's a power move, man. That's a power move. Oh, you know what? By the way, yeah, today's January 16th. I think I mentioned this a couple weeks ago, but if I'm not mistaken, so this is crazy. So if I'm not mistaken, it was 10 years ago today. 10 years ago today that I started on Tasty. That's crazy, man. Like, that is so crazy to think about, that it's been 10 years to the day. Like, wow, man. The delta on me making it more than a year was like 10. Like, there were pools in the studio. I mean, there were all kinds of all kinds of bets and wagers. And it's like, yeah, I might load up on some of those puts myself. And so, but yeah, 10 years, man. I can't believe it. 10 years to the day. I'm pretty sure I started on January 16th, 2016. Which is some crazy stuff. All right, Josh, give me one more second here. Man, I see you guys. I can't get to all you guys. Griffin Jones, man. I just appreciate you guys so much. Theta Traders here. BDH, old Two-Face. Man, Rex Kramer's in the house, man. Tell Zoe. Oh, I saw that after the show. Tell Zoe I said hello. And so hello there, Zoe. I hope that you listen to your dad. That's the most important thing that you should do. And so Ranch is in the house, man. Too much Dave even in the house. I appreciate you guys. I got to run, though. I got to get you guys over to Tim. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. It would be my pleasure to help you in any way that I possibly can. Or we can connect on Twitter. I'm at JSchultzF3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Tuesday.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Hello, happy Friday, everybody. Tim Knight here, and it's kind of a ho-hum day out there. Not much happening. As I glance over, the NQ is up 0.05%. Woo! There's just nothing happening. Next week, earnings season starts to bubble up. It's always the same. Kind of the first meaningful week of earnings is the banks boring, and the second meaningful week of earnings is like kind of get some cool stuff in there, like Netflix, Intuitive Surgical, Clack, and then the week following, some things get really saucy. And just when things are exciting, then it goes away again. So we will start to see some interesting earnings next week. I don't think there's any particularly interesting economic reports. This was a big week with the CPI, the PPI. Forgot anything else, but there were some market moving data out there. But today, kind of a dud. But all the same, I still have pulled together some charts that I think are above the dud, and let's thumb through them and kind of catch up before we take on this long weekend. Here's the spider, and it's kind of the same deal with respect to some damage being done to the trend line, but nothing definitive. We first slipped under the ascending trend line on Wednesday, and we poked through it a little bit today. So hopefully the damage will count for something. We'll start to see next week. But if there's a silver lining for the bears out there, it's that there was no follow through. This should have been a week of tremendous follow through. Soaring spiders, soaring cubes didn't happen. Small caps, it's happening, but the spiders, no. They're stalled out. We're basically trading where we were trading back on January 7th. So we've had some days here with just net nothing. The cubes are down 100th of a %. Here again, we did some damage on Wednesday. We've traded some below the trend line today. And, we are starting to see here and there some breakdowns. Some of them substantial, but nothing across the board. My own trading style is very top down and honed in ultimately on individual stocks, many of which no one's really ever heard of very much, not very heavily traded. But it's spread thinly across a bunch of different positions. So I don't necessarily need things to be plunging across the board, but it definitely helps. It's not happening quite yet. As you can see, we're unchanged or down a penny or so. It's just really just dead. SMH kind of did it to me again, although not as dreadfully as yesterday. We did open higher today. I got stopped out today, and I got right back in it again. So I'm tilting at this windmill repeatedly. Semiconductors are extremely strong. The AI boom / bubble is still very much with us, and so we're at a lifetime high today. SMH up 1.25%, and the really dastardly demon is Micron, MU. Which I've finally thrown my hands up and said, forget about it. I should just stick to the weaker critters like ON, ARM, and so forth. But Micron, again, lifetime high, nearly a 7% gain. Even though it's off the day's highs, it's just a beast. We're not going to we've been kind of obsessed over precious metals lately. I'll just kind of just touch on one chart today, which is silver, which has the very unusual red going on. The silver futures are down 3.55%. Yesterday was the peak so far, and the last time we saw any real selling with silver was back just after Christmas. This isn't really a major reversal in precious metals, but gold's down, silver's down, palladium's down to varying degrees. Gold's down about 0.2%, silver about 3.5%, palladium about 2.5%, not quite. So it's getting a little fuzzy and raspy up there. Maybe if get one more day of selling, people start to freak out a bit, and you'll see some more continuous selling. I have no metals positions at all, except for some XME June puts that I got yesterday, which will be helped if precious falls to some degree. As far as Bitcoin goes, it's down a little bit. We've basically, the big day for Bitcoin was Tuesday, and then it followed through with Wednesday, more buying, and yesterday and today have pretty much undone the strength from Wednesday. So grinding around 95,000. And as I've said, repeated, I think the 6-figure level, more specifically around 98,000, should be very important resistance for Bitcoin and therefore crypto in general. Now, wanted to hit upon a few favorites on the short side. Let's just thumb through them. ALB. This has been one I've been impatiently waiting for. Finally, it's starting to break down. We had a nice drop yesterday, but today we gapped down about $10.50, over 6%. And even though it takes some time to load sometimes, I'll just kind of go for the, if this takes too long, I'll just forget about it. But I'd like to back up to the all data on this as it, I'm going to get epilepsy by the time this loads. There we go. So there is what had been the top, and this has been frustrating because this was a pretty nice top, and it is well above it now. So it's pretty clear that when I originally drew this, you know what, that's not even a line. Let's get rid of him. It's an arc of all things. It was drawn way too low. This is getting psychotic. Okay, goodbye, boink. Okay, let's just do this. So we'll just mark today's high like so. So here's the distribution top, like so, all that. And if we zoom in, let's go back to the 1 year on a daily basis. We peaked up there this week, and we started to slip yesterday, and we're really slipping today. This critter has gone up hundreds of percent since Liberation Day. I think it's got plenty of downside potential, so it's heartening to see this start to break down after all this waiting. Axon, AXON, got back into this week. It's pretty much unchanged now, but I really do like the shape and the form of this particular top, something along those lines. You can see tremendous amount of trading at those levels. And the size of these positions varies, like something like this, which is thinly traded, big bid-ask spreads, prone to surprises, tends to be a small position, where something like, say, PGR, which is my favorite, is like 3 times as big. So they're all in the same zip code in terms of size, but I do alter the sizes based upon just how volatile they are, how thinly traded they are. So that's Axon. BBWI, this is Bath and Body Works, down about 0.5%. We well exceeded our gap here, so we can just get rid of that. But this has, let's again, I just like to use the rectangle because it's a real fast way of just shaking out what I'm trying to get across. So massive amount of trading there. Again, a huge distribution top. I'll just call it a top, even though it wasn't the ultimate high. We had a big plunge, a big recovery, and my view is that resistance would be very potent at those levels. Palantir gave me a scare today. It rallied quite strongly. My stop was actually set just above this bar here, right there. And I think we matched it to the penny, or got just about a penny below. It just missed getting stopped out, thank goodness, though, because it flipped lower. Palantir's down over $6 now, about 3.5%. And it's got some work to do, just as NVIDIA does, in order to complete any kind of big top, but at least it's moving in the right direction. I also continue to see the charts that show Palantir has just a eye-poppingly giant price-sales ratio. I mean, it makes everything else look like a bargain compared to PLTR's fundamentals. BRKR, Bruker, is down again, about 2.5%. It's been a good week for this one. Yeah, very good week right there. Monday, Tuesday, Wednesday, Thursday, Friday. Nice descent on Bruker. And the newer one I talked about just a few days ago, Supergroup, SGHC. And this one, unlike the others, hasn't been around that long. And it had been doing very well. And it looks like it peaked ultimately around October. And since then, it's been forming this very nice reversal pattern, like so. So nothing dramatic yet, but a good-looking long-term pattern. A couple of gig items here. DoorDash, again falling, 4 1/3, which is over 2%. And I've got June puts on this one. I got them a couple of weeks back, so these are doing all right. And the other gigish one is Uber, UBER, which is up a tiny bit right now. But this, again, as with most of these, is more of a long-term play, which is one of the reasons that these are like June puts, or alternately just simple short positions, which I would prefer to hang on to for a long while. So that's Uber. And one last of these short ones here. Actually, you know what? I think that is, in fact, it for that list. So let me change topics for a sec. I saw a graph today showing Wikipedia's use and Wikipedia's growth. And it was, one of the biggest websites on the planet. But over the past almost 2 years, the growth has turned into loss. Now, it's still popular, but month to month, on a year-to-year basis, like comparing December 2025 to December 2024 and so forth. I think for 20 months in a row, it's been a negative number. And it's because of AI, I think, principally. Because if you think about how searches go these days, you've got your Geminis, your Copilots, Grok, ChatGPT, integrated AI in the search. It kind of makes sense that a lot of people are getting satisfactory results by just typing whatever they're interested in. And it's more than like 5 years ago when it was just a bunch of links that you could go to get your result. Now it sort of tells you the answer. And so Wikipedia, it would seem to me, it isn't as needed as it used to be. And so that got me to thinking, and so I asked an AI engine, obviously, what are some symbols of stocks that will be prone to getting harmed by AI? What are some companies that AI will not be beneficial to, but actually harmful to? And came up with these. So let's just thumb through them in no particular order. And I don't have positions in any of these, I don't think, but I just wanted to bang through them real quick in the time we've got left. The first one is Workday. And interestingly, I think when I last checked, all these were down today, just by happenstance. Maybe the market in general recognizes that these guys are in trouble because of AI. And many cases, not just down today, but have been down for months, even with a very, very, very strong bull market going. So for your consideration, there's Workday. This is Team, TEAM. You can see just dreadful drops on these. And as I said, a lot of these have kind of the same DNA in terms of what they do, their functions. ServiceNow, NOW. This used to be just death for any bear who dared to cross its path. And these days, you're looking at drops of 50, 60, 70% on these items. Got a lesser known one here called NICE, NICE, which is also down today, about 2.5%. And it's also been in a lot of these have been like not just multi-month, but sometimes multi-year descents in value. Then Monday, MNDY, which is also down across the board. I didn't just ask for stocks that were down today. These are just like, what stocks will AI harm? And looks like the news is out considering how much they've dropped already. So that's MNDY. Another one we've all pretty much heard of, Intuit, INTU. If you did not know what the market in general was doing, and if you just looked at these, you would assume we were in this massive bear market right now. And these are not obscure stocks either. So it's very interesting how these are shaking out. A couple more in that realm. Salesforce, CRM, huge drop there just this week alone. And finally, Adobe, ADBE, which has been getting pounded mercilessly for a long, long time, having lost way more than half its value. Looks like about 60% of its value, which is pretty astonishing considering what a giant it was. We got a few seconds left. I will just super quickly just bang through the kind of in contrast here. This is the small cap equity futures, lifetime highs, very strong, trend line completely intact. Here's the S&P 500, a little bit of a break. Wednesday, Thursday, Friday, all some activity under the trend line, so looking pretty questionable. And then finally, and the weakest, I think, is the NQ itself, which has also spent 3 days trading above and below that trend line and is nowhere near its own lifetime highs. So that is it from me. Enjoy your 3-day weekend. I'll be back on Tuesday, and I always appreciate you coming by. Hope some of this is helpful to you. Bye-bye now.
Got big goals for 2026? Get the big deal. Earn a 4% cash match on all qualifying deposits, up to $10,000 total. Plus, unlock 30 days of commission-free trading. Trade with confidence using active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. Earn a 4% cash match when you open and fund a new Tasty Trade account today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we're back. We're here for the last call. It's the last 30 minutes of the trading day, last 30 minutes of the trading week. You're watching Tasty Live. I'm Chris Vecchio. He's Ilya Spivak. Ilya, this has been a quiet market today. No one's home. S&P 500 just crossed 1 million contracts traded for the entire session a few moments ago. Volumes have been exceedingly light today. They've been light all week. They've been light all year, quite frankly. We haven't seen much volume in the wake of either the news about Nicolas Maduro being captured by the U.S. or Fed Chair Powell being potentially sued, or whatever we heard today about Kevin Hassett perhaps no longer being Trump's front runner to be the next Fed chair. Either way, stocks are meandering. S&P 500 down a touch right now, 0.02%. NASDAQ unchanged. The Dow off by nearly 0.2%. The Russell still up by 0.1%. So net from where you and I last stood about an hour and a half ago, stocks are marginally weaker. We look to the bond market here, and we do see that bonds are remaining soft on the day following, well, there wasn't much news today except for the Kevin Hassett commentary this morning. Rate cut odds for 2026 continue to decline, and now only 1 cut being formally priced in for this year. Ooh, that's a change. We see that the lack of cuts and the rise in yields spilling over to the currency markets, to the commodity markets, where gold, where silver facing a little bit of weakness and struggling here in the second half of the session. Your US dollar is trading higher and getting ready to close at a 2026 high 2 weeks into the year, with the euro and the pound leading the way to the downside. So the story of the day, of course, perhaps is the 10-year yield finally breaking back above 4.2% in a meaningful way. We haven't seen that since last summer, really since last September, as it were. Ilya, what does the market reaction for you today, at least before we head over into the single equity names and the sector performance, what does the bond market reaction on the back of this Hassett news tell you today about the path forward for something like the US dollar?
Well, there's a couple things here, right? So the markets seem to be coming around to the idea that the outlook is not going to be as dovish as they'd hoped. The Fed's been telling them this for months. They're apparently reacting to the Hassett news as a trigger, but this shouldn't be a surprise. It ought never to surprise us just how silly markets can be sometimes. I guess this reaction was the straw that broke the camel's back. But in my mind, the larger issue was oil. We have an inflationary story here that the markets didn't have on their bingo cards. We were talking earlier in Futures Power Hour about the idea that everybody went into this year. You name the statistical agency, EIA, IEA, OPEC, name your acronym. All of them watch oil markets, and all of them said, well, demand is flatlining. There's going to be a glut. Production will outstrip demand. Prices will come down. The EIA had a target that said WTI futures would come in below $50 a barrel this year. And clearly that's not what's going on here. We've had a breakout from the downtrend since the peaks in the middle of the year. And today that breakout pointedly holds, even as we appear to be in no hurry to strike Iran, endorsing this idea that it's not about whether we strike Iran or not. It's about Iran toppling either with us or without us. And about all of those things with the pressure that we're putting on Russia's shadow tanker fleet, with the fall of Venezuela. What that does is it pressures those under the radar supplies that China relies on the cheap, and that if they have to go to market to other suppliers in the, let's not call it the black market, in the gray market, and leave those behind and go in the open, the price of oil actually starts to look a lot more expensive. And so that's inflationary. And inflation means fewer rate cuts. And fewer rate cuts means higher yields. But of course, the markets still want their rate cuts. And so we talked about how they don't so much want them for economic reasons. They want them for a safety blanket because the world out there is shaky and uncertain. So what you're seeing today is a sort of move along the yield curve where cuts are coming out of the belly and even fairly deep into the belly. Obviously, the 10-year is significantly higher here, the yield. The note itself down to levels we hadn't seen since August, second half of August. I suppose you can make the case that the 2-year is breaking down as well, but it's actually holding relatively close to its mid-December low. So that looks more range-like. But the 10-year is something to behold. Meanwhile, the 30-year is not doing that. And so there's perhaps a sort of shift where the rate cuts are moving further out in time. And so what I did today, I got long a TLT call vertical earlier in the week as it looked like this was attempting to bottom. Today, I also got into an IEF put vertical. So selling the belly of the curve, long the long end. The risk reward on this IEF, 63 days out, same duration as my TLT, is astronomically attractive. I mean, you're talking risking $40 to make 400.
Gotta love those 10 to ones.
Almost.
I mean, the curve yields look like they won higher here. And so perhaps the most important development of this week is the fact that we do have 10-year yields breaking out alongside oil prices looking a little bit stickier, like there's a floor under them. Growth has also been really good. And that is a good reason why the Fed may not cut rates, not just this month, but over the next few months. 5.3% on Atlanta Fed, 2.7% on the New York Fed, with the New York Fed's top range estimate at 5.05% right now. Unemployment rate is sitting at 4.4. Inflation is steady in the mid twos. Listen, I know it's expiration today as well. I figured that would give us a little bit more. So perhaps there's some things getting unstuck. But by and large, Ilya, the top line indexes here are just churning after all of the day's events, after all this information. I'm looking across at what was a pretty good week for earnings. I know that we just had really the banks in focus this weekend. Next week we can talk about it in a second. But thus far, according to FactSet, about 7% of S&P 500 companies have actually reported results. 79% of those companies that have reported a positive EPS surprise, and 67% have reported a positive revenue surprise. This puts us in a place where we could be looking at margin growth again in the high single digits. We're kind of right in line with how companies have been performing in recent quarters, which if you've been looking at how margins have been expanding, you can't really be upset about anything there. So they're talking about, given the average improvement in the earnings growth rate during the earnings quarter, the S&P 500 will likely report earnings growth of at least 14% for the fourth quarter, which would mark the fifth straight quarter of double-digit growth. I raised the question to you earlier today, and maybe this is where we should end the week on. If we have this type of earnings growth and we have all these fears, these events occurring in the wall of worry building up, but volatility is staying relatively low, the VIX is coming in, vol futures are not sustaining any sort of meaningful bounce. What do the bears have going for them in the short term?
I think at this point, you have to look at this and say, there is something that's wrong with this market, that with as strong as the economy is, as advantageous as the policy appears to be, it cannot make a higher high since late October. Something is the matter. And maybe it's something that goes away, and then we can say, you know what? We've just looked at a 2.5 month consolidation in price to some extent, but mainly in time. We've had a sell-off. We reset that sell-off. We're back to our starting line. Let's go. Or whatever is keeping a lid on this thing gets worse and finally cracks it. But whatever it is, it's unresolved. And the debate continues. We have had a really great set of third quarter GDP numbers. Very impressive growth figures out of the higher frequency stuff, especially the ISM report. The big, beautiful bill is going to give us a good amount of fiscal stimulus, and it's going to give us 2 years worth of tax cuts in a year, the way it's structured, because there's an element of it that's retroactive. You are looking at a Fed which has been saying that it's going to cut at least once. The markets want twice, but at least once is surely on the board and is priced in. Moreover, let's say the Fed doesn't cut at all this year. You've got 75 basis points of rate cuts immediately at our back and 100 basis points in rate cuts from the end of 20 to 24, which should be starting to filter into the economy right about now, because the lag is about 12 to 18 months. So we've got a ton of fiscal and monetary support. We've got a strong economy, and stocks can't rally.
Well, not.
I think that's the
S&P
biggest.
and the Nasdaq right now. The Russell's certainly rallying.
I mean, the S&P I think is the most important in the sense because it subsumes the average, in a sense, where Russell is stuck and Nasdaq is outperforming. You can say, okay, tech is leading. We know this story. La-di-da. Now there seems to be rotation. Russell is outperforming. Nasdaq is stuck. The S&P as an average catch-all is stuck.
The rotation's slowing a little bit today. The breadth has gotten worse as the session has gone on. We typically track 25 sector ETFs here. Last call, futures power hour, overtime. 10 of the 25 are in the green. And we've started to see some of the growth names slip a little bit back as well, like telecoms. But SMH here, for the fourth day in a row, it's going to be a red U.S. session where we have sellers over the course of the 9:30 a.m. Eastern to 4 p.m. Eastern block. 3 of those 4 days will have produced all-time close highs in SMH. Just taking a look at the breakdown here of the semis right now, obviously NVIDIA drawing a lot of attention today. It's, again, not significant options volume, not significant trading volume, as it were, down by, actually up by 0.3%. But again, another one of these days where we gap open higher and trade lower during the U.S. session. We have TSM, which is the second largest component. That, again, Gap open higher, trading a little bit softer during the day, still up by 0.22%. Your Broadcom of the world, that's up, just up, trading higher throughout the session, 2.52%, and a Micron here. So Micron and these memory names have obviously been getting a lot more attention as we've seen that there's perhaps more of a bottleneck in memory than in the GPUs themselves. I know that we've had a lot of churn here, but to a certain extent, it does feel somewhat reassuring that it's not just NVIDIA carrying this market to the upside. It's not a Microsoft carrying this market to the upside, or even an Apple. There has been improved breadth over the course of 2026 so far, and it's difficult to ignore that.
Yeah, I mean, I think you look at all of this and you go, okay, what are the reasons economically? What are the reasons fundamentally on the corporate sort of finance side of things why things should be soggy now? And that evidence isn't there. And so then you go, okay, but the price is always right, or at the very least, the price is our North Star. If we started with the news and went to the price, we could trade ourselves into the poorhouse. Because anybody can paint whatever narrative you like. You give me a set of variables, I can give you 5 stories pointed in completely opposite directions. You could do the same. This is not hard. This is why you look at the price action. This is why the price action decides what is ultimately the thing that things are going to dance to the tune of, as it were. And so it has to be eye-catching that there is a very big disconnect. And there's been a big disconnect really since the fourth quarter of last year between what the news is about those things we think are driving markets, sort of classically, the business cycle, earnings, etc., and what's actually going on in the price action. And that's not just stocks. That's gold. That's bonds. That's oil to some extent now. There is a very clear sort of deference to geopolitical and generally to policy uncertainty that's starting to create dynamics around these markets that have very little to do with sort of economic fundamentals or financial fundamentals when you're looking at companies, for that matter.
Well, yeah, if the semiconductors were the top performing group today, we are looking at the home builders, ITB, being the worst performing group. They've had a pretty good run recently. In fact, the big gains at the end of last week, when we hear that President Trump is going to be directing his representatives to purchase $200 billion worth of mortgage-backed securities vis-a-vis Fannie Mae and Freddie Mac, which is allowable under their statutes. But is that something that's really going to help? They have to be sterilized purchases. Okay. Either way, we do see that spreads across the credit space are coming in. Corporate bond spreads are now at their lowest since 2007, which again, not something that happens if things are going poorly. I know everyone's going to say the last time they were this low was before a crisis, but that's not the point. Today, DR Horton, your largest component of ITB, that's off by 3.5%. Pulte Group, that's off by 2.18%. Lennar, just going through the big names here, that's down, at a 3.1% itself. NVR off by 1.42. Do you find yourself looking at any of the individual names in something like the semis or the home builders where the individual equities do have reasonable IVRs? I'm not going to dismiss that, like a name like DHI, it's a 47 IVR going over to like a, back to the semis at TSM to 15. Do I really want to do something with a 15 IVR at all-time highs? Not so attractive.
No. I mean, when you look at this, I think that there's some individual names that maybe there's something in. But I think when you sort of look at the backdrop that we're looking at here, the fact that things are not responding to the type of fundamental guideposts. And again, this isn't just stocks. This is gold also. This is crude oil also. This is bonds also. This is to some extent the dollar. Although the dollar has been a little bit more coherent recently. So, well, rate cut expectations are going away. Dollar is getting stronger. That makes sense.
Sure.
So that works the way that the textbook would tell you. And so when you...
First time in a long time.
It's been a minute. Been a minute. One might say the dollar has been signaling what's going to happen all along. You and I think, are more well-versed than some in just how smart the FX market is, having stared at it for 15 years almost exclusively. And the dollar faithfully bottomed in July and hasn't made a new low since. It's oscillated here and there, but the dollar has been signaling that something is not right with this whole rates story for a while. And at least it is seeming to behave a little bit more normal now. So you look at all of this and you say, all right, how confident am I that XYZ individual name is going to be responsive to its industry, to its trajectory, from an earnings perspective, to how it does in a given quarter? Or how responsive is it going to be to nebulous policy fuzz? Like, will we or won't we try to kill the Ayatollah? So I think the whole thing here is much more macro, and trying to pick winners and losers here is fraught.
Trying to pick winners and losers is very difficult. It's not necessarily a stock picker's market, as they say.
No.
Ilya, we have been going on here for almost 25 minutes now, and that's a pretty big deal. Is it? It's not as big of a deal as the big deal, I suppose. That's right. It is a big deal. From now through March 31st, 4% cash match, minimum deposit of $1,000, up to $10,000. You're not going to find an offer like that many places else. In fact, go check them out. Go check out our competitors. See what Tasty Trade's competitors are doing. And then you'll see that we have the best deal, dare I say. Go to tastytrade.com/big deal for more information. Again, 4% cash match up to $10,000 now through March 31st.
If I didn't have an account, I'd do it. But I already have an account. I'm not eligible.
Yeah, and we're not eligible. And refer a friend doesn't apply to us. We just get a nice pat on the back. And you know what? That's good enough for me.
Yeah.
Hey, Ilya, we go back to the broader markets here going into this close. There's not much volume pickup. There's not much trading activity pickup in the final.
No.
About 5.5 minutes of the day here. Markets have been.
And the S&P ends up down on the week, essentially. I mean, very down small, but small. But
if at the start of this week, given what we heard with the Powell news,
yeah,
do you think it's a sign of market resiliency that the S&P is going to be just a few points lower than where we began?
If the market had sold off on the Powell news and then come back, I would say yes, but it didn't. There was no reaction to the Powell news in the market. Not like, if you consider the gravity, if the Powell news is real, the markets, I mean, I would not be surprised to see them down 20% this week. The entire world, all of the commercial order globally rests on there being a coherent Fed. Because 80% plus of global monetary transactions are settled in dollars. So an incoherent Fed is a nightmare no matter who you are, where you are, with the possible exceptions of Russia, Iran, North Korea. Not even China would go unscathed. So the situation looking as tepid as it has, volatility is down, markets are off, but they're not off by a lot. They didn't really bug out when the news hit. It suggests they're not taking this nonsense seriously. And maybe traders will rue the day. But so far, they're looking at this and going, come on. This is going to be like the James Comey indictment. A judge is going to take one look at this and go, get out of my court. This is nonsense.
It also means that Powell could be sticking around for longer, which I think markets would love because he's guided us repeatedly to all-time highs.
I think he's a tremendous source of confidence. I think you're absolutely right. I think the markets look at this and go, in an unkind world, the man at the till of the Fed is somebody we can trust. Long may that endure.
3 minutes to the close, Ilya. The crypto names have come back in the past 2 days. There was some legislation that was spiked on Capitol Hill this week related to stable coins. Coinbase withdrew support for it, and that caused the Senate to ultimately refrain from bringing it to the floor. They're still trying to work through some of those kinks, so who knows if this thing is ultimately dead. But also the Bitcoin move higher at the start of this week coincides with the Powell news and then ultimately what's happening with Iran. And the past 2 days, yesterday was the first day where the war trade came off. Bonds lower, oil lower, gold lower, stocks had rebounded, volatility is generally down. Bitcoin was down. Bitcoin's down again near
Holding
near
the breakout,
95K. Oh, yeah, so that's what I want to get to. The highest swing point that we have during this breakout window, you could argue is going to be here on January 5th at 95,686. Maybe you want to be a little bit generous and say it's this low 94,303. Either way, there's a little bit of a band in here that you could work around. Markets overshoot and undershoot all the time. So I'm not going to give a precise figure. But if I look into this band, we're still holding there and we're bouncing from our 1 week moving average. So which way
I'm long.
Are we going here? I know you're long, but what would it take for you to flip? I mean, is this a good place
Let's
to
get back in the range?
People haven't gotten long. Would you, if you were looking at this fresh today, would you take a long off this level?
Yes. Yeah.
50-day moving average here in IBIT. Today, after treating it as resistance, and now you have your 1 week above your 50-day, which that...
Well, we did the same thing in October, and it failed.
64 up here. I'm looking at IBIT, and I'm thinking myself, because I had a spread 65, 60, and how close it was to working out. But that same kind of trade, in my view, probably still flies here, because if we're looking at, we'll go to what, 55, 60, risking one to make two. If this is a breakout indeed, it's something that I would want to expose. Tasty Live. Hope you have a nice weekend.